It's like it's the old thing. Like you hand somebody something that works. You give them this tool and you say, "Oh, you've been looking for this tool to fix your motorcycle or whatever. Here, take this tool and you can fix your motorcycle." Like, I don't like to use monkey wrenches or whatever.
It doesn't
you know
look
what I
like
mean?
it'll work, right?
Yeah, that doesn't look like that'll work, but it will work. We know it'll work.
Yeah.
But I don't know. I don't want to hurt. I don't want to skin my knuckles, trying to tighten that up. So it's like, you got to think about what is your real goal here, right? The other thing I would say, kind of a way to trick yourself, would be you trade that low win rate strategy with a super low risk per trade. And you do that for, let's say you commit to that for 6 months. Okay. You say, I'm going to trade this system, but I'm only going to trade it at, $5 a trade or whatever. Okay. And at the end of that 6 months, you look at how much money you made in this little tiny account, right? And then you can, okay, now what if I was trading $500 per trade instead of $5? Would I be happy with where my account? You know what I mean? So I started with a $500 account and I traded $5 per trade, and this is where I am after this. Now, what would I say if I started with a $50,000 account or a $5,000 account? And you know what I mean? Where would that be? Where would I be with that? Would I be okay with that? Do you think I could do? And look at the drawdown and all that. Now, obviously, past does not dictate future performance. You might have a 17% drawdown over that 6 months. In the future, you have a 34% drawdown. You never know. But the question is, you've gone through it, you've executed it, you've been able to pull out of the the drawdowns that are inevitable with the strategies with the low win rate like that. So what do you think about, do you wish that you would have traded it for $500 a trade instead of $5 a trade? Okay, maybe it's time to kind of wrap this up and move to the next level. Maybe only $50 a trade, right? So you can kind of like ease yourself into that by taking trades that don't hurt so much. So that's just a good thing in general, right? For any system, but especially for one where you're just like, I don't know if I can do this with such a low win rate. So, yeah.
Yeah, no, I think that goes for a lot of things in life, right? Like we need to see it in action and see it working first before we can like subscribe to it. I think, I've obviously had that a lot. So I think, if you do, like you said, then you'll see the success and then you can just scale it up if you want to.
Yeah. And it's so much easier to follow your rules when you have such small trades.
Yeah.
Like it almost like it takes the focus off the money, doesn't it? Like it almost like, and it's not demo, it's not Forex Tester, it's real money. But when you're losing $5 a trade, it's so easy to like wait for it to hit the 2R target and make $10, right? And that's different. If you're trading 500, 5,000, it's a lot different because you start thinking, well, I've got $575 that I can bag right now. Do I really need to wait for the 1,000? That 575 could really come in handy this weekend, or you know what I mean? That's sort of like you start doing these mental games when you're trading really high, and it's all relative, but when you're trading for higher stakes. Whereas when you're trading for lower stakes, it almost makes no sense to do anything but follow the rules. So you get into good habits. Yeah.
Because really cool. You're already spending that money in your mind, right? With the bigger number.
Yeah, exactly. Yeah.
Cool.
Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. And then after I'm in the trade, then I prefer to journal at that time because it's a little more relaxed. I've looked at all the charts already, and I can just take my time with the journal.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I have a question here. I know some people like checklists. So what's like a trading psychology checklist you could give people before they start trading?
Yeah, well, one thing that I would say is you want everything to be a routine. If you want to keep good records, which is a good idea of your trades, what I like to do is I don't like to look at the charts first thing in the morning. I like to have a routine before I get to look at the charts, right? And so I don't usually make trading decisions until after 9 a.m., which is evening time in New York, and really late over in London, late evening. So I like to go through a certain routine. So what I will do is, like, if you're going to use a journal and keep data points on your trades, then you're going to use the same journal, right? In fact, I even go to the thing of like, when I buy a new trading journal, I'll actually put all my trades in that journal. And then when it gets to the end, I'll go and buy another one. And I keep them in my bookshelf. What I like to do is like have it, it's almost like an annual journal. You know what I mean? Where it has the trades in it. And like each journal is different. It's hard to explain it, but like you can get these journals that have different covers. You know what I mean? So it's not just they're all the same. So it's almost like when I see that book that has that printed, I should go get one really. But when I see that thing, it's like, that's my trigger. So like when you have a habit, you always have the trigger and then you go through the ritual of the habit, right? So with trading, what I want to do is I want to get into that habit of, as soon as I see the journal, I know that's part of my habit, right? Now I need to record. And there's something about writing something down that's different. I know a lot of people that like to take trading journals with typing it. You know, they'll use it in a spreadsheet or whatever. But when you write it down, it's, you know, it activates a different part of your brain. It's actually really good if you're trying to remember things to write it down. So what I'll do is I'll write down, what is the system, what is the pair, you know, what's the market, what's the time frame, where's my entry going to be? Is it right now market, or is it like at a different level or whatever? Where's my stop going to be? Where are the targets? And then I also like to put like a score on how well I got in, right? And also how well I got out. And I also like to give it kind of like almost like an intuition score, like how well do I feel that this is going to go, right? So what I will always do before I sit down, like I hate sitting down and making trading decisions first thing in the morning. I don't want to be, you know, I don't want to start like, I don't want to be that guy who's addicted to the charts. You know what I mean? So I want to go through other things, go through other, like, you know, hang out with my kids, give them breakfast, you know, stuff like that, and not really just like jump right to the computer, you know. I used to be like that. So my checklist is, first I need to be in a good mental state before I go to the charts. And another thing is using like binaural beats or meditation before you actually analyze the charts can be useful. There are other things that you can use that are along those lines. It really depends. Some people might find it a little bit arduous to have like the journal going through the whole, you know, 20-minute, 30-minute thing before you can actually look at the charts, and they'll skip that, right? So sometimes that can be useful if you slice that in when you're already in the trade. So you're trying to relax and stick to your rules, you know, using like I have a Forex hypnosis track that is kind of like about sticking to your rules and stuff like that. So you could use that also when you're making trading decisions or when you're in the trade. But so what I like to do is have a good mindset, be awake, not groggy, not late at night, not early in the morning. So I like to be that. I like to have my journal with me so that I'm writing it down. And it's kind of like, it almost is a confirmation that I'm taking a really good trade by writing it out. Sometimes you'll catch yourself writing it out and going, wait, hang on, is this really, I don't know what this is. You know what I mean? If you can't put a system on it, then you're just like using gut, right? So you just have a feeling like the retracement's over and I'm going to get in now or whatever. So my checklist would be have the right mindset, have your trading journal. Also, I like the idea of walking away after putting it in the platform. So if I put my orders in the platform, and whether or not they're triggered at market or they're waiting for a market to hit them, I don't like watching that. I find that really stressful. And maybe you limit yourself to the number of times you can check your charts too. That might be another thing. If you're impulsive and you have impulsive tendencies, you might say, I can only look at my charts, you know, in the morning and then, you know, once in the evening, and that's it. I can't, you know, always be on my phone and stuff like that. If that's, you know, if that's part of if you're trading higher time frames, that can work like 12-hour or above. The other thing is you have to learn at the end of it. And what I mean by that is not about like trying to fix what went wrong, you know, system-wise, but more about you and you, the trader, and what did you do? How did you react? So, for example, I'll give you an example. So I'm in a trade right now where I took 4 trades on one day, and all 4 of them that got triggered. 3 of them were at market. 1 of them I was waiting for a bit of a retracement. So 3 of them have been stopped out now, right? But 1 of them did not get stopped out and is actually just rocketed in my favor and is really close to the first target. Okay. And hopefully the trailing exit, if it keeps going, the trailing exit that trailing position will pay for a lot of the other 3 losses, right? We'll see. We'll see. We don't know, but we'll see. But what's interesting about that one is that one was looking really bad, just like all the other ones were. In fact, it looked like one of, like it was going to get stopped out. But I said, look, I'm just going to stick to my rules. It's either I could get out right now and save myself 20 pips or whatever, or I could just let it ride, see what's going to happen. And then I've learned over time to be more of the let it ride trader. And so when I look back and I write in my journal, when this trade is all over, I don't know what's going to happen to it, right? It's probably going to hit the first target though. At least that. When I look back at my journal, I will give myself a very good score, provided that I follow with the trailing exit and all the rules, for the way that I manage that trade and the way that I exit that trade. Because I didn't exit when it looked like it was going to, pop me out and come down low enough to pop me out. Everything about the chart said this is a loser trade. But today I wake up, I look at it. Actually, I only looked at it 20 minutes ago. I didn't even, see it until then. Boom, it just took off. So that's what I would say is that, for your trading, I like the idea, for your checklist, as you say, I like the idea of having a routine of looking at you and trying to be introspective. And how are you relating with your strategy? How do you interact with your trading strategy? And I also have to guard against being in a bad mental state. So a lot of people, like when you work at home, it can get really old. I mean, trading can get really boring, and it can get really, you know what I mean? So you have to guard against that. And so I have to make sure that I'm not super tired, that it's not super late when I'm making these these decisions, or too early in the morning or whatever. So it's really important that I have a clear mind, and that could be just as simple as doing some stretches or going for a walk or whatever before you actually sit down and look at the charts. I know it's kind of a long-winded thing, but that's my checklist, and I'm curious to hear what yours is.
Yeah, cool. I think I agree. The routine is really important. Like when we used to play soccer, they would have the same routine before every game, right? And I never realized the importance of that until later. And I guess those rugby guys or whatever, they do the haka or whatever that is, right? And it just gets you in the mood. Yeah, it's a similar thing, like get in a good mental state. So either a meditation or using like the Inner Balance app or one of those recordings, whatever I feel is the best that day. Yeah, when I get into trade, I make sure I have the journal open. And then I'm actually better at journaling after I enter the trade. So I just be sure that I get the screenshots in the beginning and then write down a few notes about why I took the trade and, what I expect out of it. And then the system. Yeah, the system's a big one. That's why I kind of prefer more of a computerized system, because then you have a system that you have to fill out in that little field, right? And then that helps you double check, okay, I'm actually using a system, or am I just, taking random impulsive trades? And then after I'm in the trade, then I prefer to journal at that time, because it's a little more relaxed. I've looked at all the charts already, and I can just take my time with the journal. Yeah, and maybe like once a week or once every 2 weeks, I go back in there and take a look at the journal. I do the similar thing as you do, like I give it a score from 1 to 4. So I believe in 1 to 4 because you can't have like an average, just an okay trade. It was either overall good or overall bad. So I just do 1 to 4 to keep it simple. Yeah, then that's about it. Just maybe monthly review the results and the statistics, but that's about it. Keep it simple.
Yeah, that's interesting, the scaling thing that you're talking about, because that's like a really big survey design and stuff in psychology. There's the debate about that. You know what I mean?
Yeah.
No, I understand why you're doing it. It makes perfect sense. Like they found that using a 1 to 100 scale or using a 1 to 10 scale, you get the same, like there's no added advantage when you're dealing with humans. When you're asking humans to decide on a 1 to 10 or a 1 to 100, there's no. And what you were saying is like there's no middle, so it's like a forced choice to either you're basically forcing yourself to say it's either mostly good or mostly bad, right? By giving it a 2 or a 3. Yeah, that's really interesting. And the theory, like the theory behind that would be like overall, like let's say you have thousands of trades in your journal. Okay, you get to that point, you have thousands of trades in your journal. If there's a true average, then you'll have like an equal number of 2s and an equal number of 3s, right? That the average is in between that. You know what I mean? 2.5, right? So that a 2.5 is actually the middle of a 1 to 4 scale, right? Yeah, it is. Yeah. Yes. Yeah. It's weird. It's weird when you don't have 0. You know what I mean? Yeah. Do you find it hard to choose sometimes if it's a 2 or a 3?
No, it's pretty easy. I think it's a lot harder to choose between like like on a 10 scale or like a 20 scale, right? I think that gradation is like really harder to define, as opposed to, okay, that, I really messed up. I kind of messed up. I did pretty well. It was a perfect trade, right? That's what it comes down to.
Yeah. I think of it like A, B, C, D, and F, like in the old, like in the American grading system. I think of it as that. Like I kind of think of the trades as that, like a 4 or 5, and then a 3 is like C, and then a 2, and then a D and an F. But like if you're really trying to force yourself to learn new habits or to improve in a certain area, I could see where you would want to have to make that choice, whether it's on the good side or the bad side. It makes sense. I mean, they had studies where they would ask someone to write a line. So they would have a line on your piece of paper, like, this is like total good, this is like total bad. And you were just supposed to put a slash, like with your pencil, like, and then they would measure it. They would measure it in like, centimeters from the beginning to the end, like that. And that's how they would do it. And it's like, all that stuff is just, with humans, that's just ridiculous. Like we're not, you know what I mean? Like we're so imprecise in that way. Most of us anyway. Yeah. And that's actually a really good point for traders to think about, I guess, is like when you were measuring your trades in your journal, we also, with our systems, we kind of measure the market, right? And measure the movements and all that. There's a lot of measuring things to think about in trading, not only measuring your performance, but measuring the way that your system sort of measures where the market's headed and that sort of stuff.
I think there's a tendency to like say, I have like 4 entry, criteria, and did I follow 3 out of 4, and then try and create a score out of that? And I think it gets way too technical. So I think that the simpler you can make it, the better. And I think it really depends on your personality too. If you prefer the bigger, scale, whatever, use that. But for me, I'm more of a, minimalist. So I use the 4, whatever.
4, yeah. I used to have a spreadsheet, like you're saying, where we had 13 or 15. I can't remember. It was 13 or 15 different characteristics had to be achieved.
Yeah, I did that
we would
too.
say, before I would take a trade. And then like, but it had to be like 10 out of 13 or whatever, or 9 out of 15 or something like that. But what I found was that actually some of those characters, and it gets to your point of minimalism, right? What I found, I didn't realize this till much later. Some of those characteristics, like in my checklist to take a trade, some of those characteristics would clump together, so they would all be like off, like they wouldn't be triggered, right? And so basically what was happening was, by throwing away most of the 3/4 of the checklist and just using a few, I had a much better strategy. You know what I mean? Like in other words, you cut the fat away of the 15 different on the checklist, right? And those like 3 or 4, whatever it was, I can't remember. I think it was like 3 of them that would actually were the best indicators of whether or not I should take a trade. So the other stuff was all fluff, or like, it was kind of like people use, they use like the stochastic and the MACD for confirmation, or you know what I mean? Like it was kind of like that. Like it was like, well, that's just, there's overlap, there's shared, they say in statistics, it's shared variance, where they're both accounting for the same thing. So it was ridiculous. So measuring is really an important topic for traders, I guess, in many different aspects. It's fascinating, actually.
Yeah, it is. There's a real tendency to get really specific and technical about it. But I think if you take a bigger, more holistic view of it, I think it becomes a lot more useful.
Definitely. Yep.
All right. Thanks, Walter. All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
That it's not always going to be there. It's just not always going to be there. It's always transient. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what are your thoughts on cultivating a growth mindset? What kind of things can you do so that you are willing to take in, new information and try to do things differently and see things from a different point of view?
It depends on how you learn or see the world, but you can often use like examples from the world. So for example, this morning with one of my kids. So when you say growth mindset, I immediately think resilience. I immediately think when challenges creep up, as they always do in life and certainly in trading, what are you going to do about it? Okay. So one way to look at things is to see the world is constantly changing, which it is. The world is always changing. We have this, like, we can romanticize what it was like back when we were kids, or when we lived in a certain place, or when, this person was around who's not around anymore, or whatever. But if we think about life as always being changed, as a person in this world, we have to learn how to deal with that. You can look at things, and that could be an example of that. So like I was telling my kid today, we were talking about making a sandcastle at the beach, and how, like, if you come back later, the sandcastle might not be there. Like if you make it right on the verge of if you build a sandcastle and the tide's coming in, the tide's going to come in, it's going to, mess it up, weather it down. Probably, you wouldn't even know within a day, you wouldn't even know that there was a sandcastle there, right? But sometimes you make the sandcastle and then the tide's going out, so it actually stays a bit longer, right? So that's how I look at challenges and things that come up in your life. It's like, that's kind of like that sandcastle. It seems like it's really strong, and the waves that come up, they can't even get over the wall, and it's so, it's so powerful in that. But then you come back later, and over time you see it's completely gone. So, and that's how it is with our trading challenges. Something feels like it's so difficult to get through, and there's no way you'll get to the other side. But yeah, if you think of the fact that the world's always changing, and that you just have to deal with that change, it's a much more easier approach to see your ability to be resilient when you know that it's not always going to be there. It's just not always going to be there. It's always transient. Everything that you're dealing with right now is transient. Whether even life, whether you believe it or not, it's transient. It's going to be gone soon. Sometimes it takes a little bit longer. Sometimes it happens fairly quickly. So I think just seeing that there's a lot of change, and thinking about the fact that you have something that's bothering you in your trading or whatever, and then knowing that it's not going to be there. And so it's up to you to decide, what do I do with this? Is this an opportunity for me to get better? Because it is, of course, right? When we get into the victim mindset, we see the challenge and we think, oh, that's it. It's over. It's never going to get better. This is just going to get worse. I can see it snowballing, blah, 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 blah. But instead, if you look at it as, okay, this is a challenge. What is this going to enable me to learn? What is the new skill or the new approach or the new way of thinking that I can gather that it becomes part of me because of this? If you're trying to help someone through it, I think sometimes that's a good way to look at it, is that change is constant. The only thing that's constant is change. And so, there's really no reason for you to throw your arms up and think that all is lost, because it's just where you're at right now. That's all it is.
Yeah, no, totally. And I would add to that, I think one useful thing to do is to commit to, if you think you are kind of stuck in something, maybe commit to taking on or challenging one of your beliefs, maybe once a day, once a week, once a month, whatever makes sense for you. And just try to see the other side of that belief. And if you can, at least consider the other point of view, I think it goes a long way to helping you see other points of view in other parts of your life. And if you have a big problem, it might be hard to see the other side of that immediately, or change that immediately. But if you start to use like small examples, something like, oh, I shouldn't eat oatmeal at breakfast or something, and why not challenge that idea? Maybe eat oatmeal. Maybe it does give you more energy, or maybe not. But at least you try to explore that idea. So I think that's another useful exercise to help you kind of overcome some of these ideas that have been really deeply ingrained in your psychology.
Yeah, absolutely. Yeah, that makes perfect sense. Like, you can use that approach to challenge the limiting ideas that creep up. Like, catastrophizing is a big one for traders. Like, oh no, I've lost for 3 weeks now. I'm never going to make it. It's never going to work, blah, 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 blah. So you can challenge that. Say, well, hang on. Am I doing the same thing that I did in my back testing? Yes. Okay. What did my back testing show? Did it show any drawdowns that were similar to this? Oh, yeah, absolutely. Okay. Yes. So is this really any different from what I would really expect? I'm getting a drawdown that's the same as I had in my back testing. I'm doing everything exactly like I did in my back testing. It's not that the market's changed, most likely. It's not that I've changed, most likely. It's just that I am in the midst of a pretty bad drawdown, but that was kind of to be expected. So, like challenging those thinking patterns that lead to the feeling of desperation and almost like, it's just not worth it anymore, giving up. Challenging those thoughts can be really useful.
Yeah, and I think
just like challenging our habits, I guess.
Yeah. And I think when you go back to your journal, sometimes you realize, oh, I was only maybe like 1 or 2 mistakes away from a profitable month, and that can give you a lot of hope. Also, it's just like, you're not that bad.
Absolutely, that's a really good point. Actually, that's a really good point. Yeah, I heard an interview with the other day with the Tom Brady, the quarterback, right, the really well-known quarterback in the National Football League, and he was saying almost exactly what you said, but he said it in his world. He was saying that when his team plays at a really loud stadium, like the one in Seattle or whatever, it makes it really hard for them to audible out of their play into a different play and stuff like that, because people can't hear, and it's hard it's just really difficult as an offense to snap the ball and everything and everyone be on the same page when you can't hear because the crowd is so loud, right? And what he said was that might mess up 6 or 7 plays a game. If the crowd noise screws up 6 to 7 plays a game, that's 10% of your plays. You have maybe 60 plays in a game. So that's like about 10% of the offensive plays that you have in a game are actually screwed up. That's a lot to overcome. And it's kind of exactly what you're saying. Let's say you have 20 trades in a month and 2 of them you didn't do so well at for whatever reason. You didn't execute very well. But looking back on that, just having done those, if you had done those the right way as you should have, like, instead of getting out early, you held on for the whole trailing exit to get you out and all that, it would have been a completely different month, right? It's sort of the same thing. Just that little time, like sometimes it's hard for us to see that it's just right there. It's just so close. It's just that little bit, like just a few things, if they fall in the right place, if you approach them as you should, it completely changes everything. So
yeah, that's what I respect about Brady so much too. I think is that he always looks at those little things, right? And I think that's why he's so good.
Yeah.
Aren't they undefeated this season?
Yeah. I think they have one loss.
One loss, something like that, right?
Yeah.
And I mean, he got kicked out of the Patriots basically, and now he's like killing it with Tampa Bay. So little things matter too.
Yeah, exactly. That's exactly right. Yep.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I don't know if I fully trust it. Like, do they really have that much silver on hand? You know what I mean?
I don't know about that.
In some ways, yeah. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, each market has its own psychology, and we talked about cryptos before, but what do you think about like precious metals, the gold and silver markets? What kind of psychology do you see in those markets, if you see any?
Manipulation? No, I don't know.
Pretty much.
Pretty much, yeah. I mean, there's some weirdness, obviously, there. So I don't know. I think some of these things may change in the future, but it's interesting because a lot of people, in like things like gold, or silver, a lot of people talk about what the demand is. So for gold, for example, there's like the wedding season in India, and people always get gold for their wedding gifts. So like, when everyone gets married, the price of gold goes up, because everyone's getting married in September or whatever. So like people talk about these fundamentals or they talk about how silver is used in industry, and that the demand for silver in industry has been going up and is expected to go up even more over the next 10 years. And that it's kind of squeezing the amount of silver that'll be available, just for investors or whatever, So like there's a lot of fundamentals involved in that. And with the way that they set the closing price for gold and all that, like there's a lot of weirdness, I guess. What I find fascinating is that there are places like there are cryptos where you can buy like the coin, and that coin can be, exchanged for actual silver. So that, that's kind of interesting to me. I don't know if I fully trust it. Like, do they really have that much silver on hand? You know what I mean?
I don't know about that.
In some ways, yeah, it's kind of like the bank, you know, the bank has your money, but they've loaned it out 10 times. So, you know, I'm like, are you really going to get your money? If everyone goes in and wants their money back up at the same time, there's a problem there. But yeah, so yeah, I mean, part of me is kind of wondering if they're just banking on people not cashing it in or whatever. And there's certain limits, I think. On some of those coins, you have to have a certain amount before you can cash it in for, you know, an ounce of silver or 10 ounces of silver, whatever it is. I just find it interesting that, like, in the metals markets, there's a lot of strings attached, you know, because there's different types of silver too that can be used in this, but not in that. And so, yeah. And like, I'll give you an example. So I had a friend, he was with De Beers, the diamond company, right? And he said, like, that is a manipulated market.
That's
right?
the hugest, biggest manipulation.
Yeah. Oh yeah, he was a currency trader for De Beers, and he said that every year they would send out, let's say you were like Tiffany's or whatever in Europe, okay, like you were the head of, you know, you were the Tiffany's Europe guy, okay, so De Beers would go, you know, to Tiffany's and say, okay, this is what we've got. Do you want it? You know what I mean? They would say, okay, we've got, you know, this amount of, I don't even know how, like, I don't think it would be in the tons. I don't know how, but we have this many diamonds and, you know, this is the price. And do you want them? Right. And so if you didn't say yes to them, then obviously in future years, they're going to give you like the scraps or whatever. You know what I mean? Like, according to him, okay, this is all, you know, secondhand. According to him, he was like, you were forced to basically acquiesce to their, like, they would basically give you your annual order. They would say, this is what we have for Europe, this is what we have for you guys, we have this many, this is the price, blah blah blah, do you want it? You know what I mean? Like, it's just, you know, so it's just crazy. Yeah But anyway, I think of the metals as, you know, the metals is maybe not that bad, but there's a lot of weirdness going on for sure. Yeah,
for sure. I mean, like, if you look at any of the fundamentals in the metals, it never adds up. Like, there should be more demand. You know, dollar's not doing so well, there should be more demand, and it never happens in the market. So the long-term view of that, in my opinion, not advice, but is just to, you know, stack some up and have it on the side somewhere, and you know, buy when it hits the support levels, and that's the best you can do. Otherwise, every time somebody says, oh, it's going to go up, it's going to go up, and it never does. It just goes sideways, or it even goes down. So yeah, it is tough to
exactly
play.
Yeah, that's exactly right. Yeah, you know, it's fascinating. Like in the metals, it's like people forget, because like we're at the point now in our generations, like that we're at a point now where a lot of people that are alive today, they never knew money that was actually backed by something, by metals. Like you know, in the old days, you used to like be able to take your money in to the bank, and you give them the money, and then they give you the silver, right? Like that's how it worked, right? Like that, because the money was worth, kind of like these cryptos are like reinventing, like redoing this. It's the same idea. You have this many coins that's worth so many ounces in silver. You want to cash them in, you can. That's how it used to be. Like, money was actually backed by something, and it's weird. It's kind of like what I said about before the GFC. You know, there was a whole generation of people that never had lived through any sort of economic turmoil, and then the GFC happened. Right? Yeah. Like, it was at that point where it was like that generation. It was only after 2008 that they actually knew anything that was terrible. Like, there was a bad economic, like, it was always just straight up. I mean, think about it. If you're born in the 80s and then you have the dot-com boom in the 90s, and then it's just like a straight line. The stock market was pretty much on a tear in the 80s, except for the crash in 87, right? So if you're born in 87, you could have been like 20 years old essentially before you saw any kind of a real, you know, market impact. It's just kind of interesting. And the same thing with this, you know, we're talking about metals. You could be alive today and never have known money that was worth anything, like it was actually backed by anything. Yeah. And we're at that stage now, which is fascinating to me.
Yeah, it is. Do you think the manipulation is mostly because of the paper markets?
Or I don't know. The paper markets? Yeah, I think so. I think like people who know more about it than I do, that's what they say, right? They say that there's like a bifurcated market. There's like the real metals market, like if you want to buy metals, and then there's the paper market where it's like, you know, you're quote buying gold or whatever. So yeah, I think so. And people will say that the paper markets are manipulated so that the powers can actually go and buy the actual metal cheap, right?
Mm-hmm.
That sort of thing. And they say the same thing about cryptos. I mean, there's always been the market manipulation boogeyman. Like, we're always talking about that in the markets, right? It's like, but I mean, then you have these things that come up, like the LIBOR scandal and all this stuff. Like, these things come up and people are like, well, hang on, maybe there is something weird going on, right? Or all these politicians who have these amazing portfolios. Like, why would they want to remain politicians when they're so good at picking stocks, right? All that sort of stuff. Yeah,
that's a conclusion I came to also. I think the paper market probably has something to do with it. I don't know if it's the entire story, but I think going forward, like stuff like Bitcoin that is going to have futures and options and ETFs or whatever, I think is going to be kind of fall in that basket too. Like, it might be somewhat manipulated.
Yeah, that's right.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
But then I think it only works on the strong trend.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, we've talked about the Elliott wave principle a couple of times in the podcast, but I thought we could go into it a little bit more in depth and talk about the psychology behind that. And do you think that Elliott wave works? It doesn't work, works some of the time. What do you think?
The problem with Elliott wave is the same problem I have with like Freudian psychology. It's difficult to disprove. You know what I mean? Like Freudian psychology, has these concepts like id and ego and whatever. And science so far hasn't really determined a way to test those. You know what I mean? These concepts. Yeah. Although people could argue the same with support and resistance. They could say the same with Elliott waves, which is, you see these waves going. And for the people that don't know, Robert Prechter's book is probably the best one on it. The idea is that the markets tend to move in the direction that they're going. They tend to move in waves where they go up one and then down one and then up two and then down one and then up three, which is the big wave, the longest wave usually, and then down. And then the fifth wave, it goes kind of almost like parabolic sometimes. It doesn't last as long as wave three, but it, obviously makes the high. And then it does an A, B, C correction before it might then do another one. And so people like start another first wave, right? And so people will apply this to lots of things. You can obviously apply it to bear markets too, which would be something that like commodities or cryptos or even forex traders would trade. But typically it's seen as a bullish pattern. They look at it for bullish patterns like in indices and stuff. The problem is if I look at a chart and I say, look, I see we're in the fifth wave, Hugh, don't you see that? And then you look at it and you go, no, I think we're still in the third. You know what I mean? It's a difficult thing. It's like support resistance in that sense, where you might see it and I may not. I might not see it the same way. So, but that's a separate question to what you were saying, which is this an example of how we as humans interact with markets? And that I would say is probably true. I mean, the best thing I've seen on that is if you just search the term like stages of a bubble or something like that, and you can think of each wave in the Elliott wave as like the stages of a bubble cycle, where there's like euphoria and, people are drawing a straight line to the moon and then it collapses. And then there's capitulation at the bottom of that correction. And then the new wave can start. So only once there's capitulation, which is basically a fancy word for saying everyone's given up, that the new wave can start. And so, yeah, I do believe that those emotions, and, Prechter even went further. I do believe those emotions are you can see those emotions on charts, right? You can see those emotions in the markets. But Prechter even applied it to his life. Like he said, I as a person am going to go through these waves as a trading personality where I'll get really popular and then it'll fall off and then it'll go, you know what I mean?
Yeah.
And I think maybe he's in his fifth wave now. I don't know. You know what I mean? Like maybe people are, because it's funny you mentioned that because somebody was talking about that yesterday. About Elliott wave, and it's funny. I haven't heard it mentioned in a long time. I mean, we've mentioned a few times. So my thoughts are that yes, you can sort of graph those emotions, but Elliott wave in itself, I think, can be useful. It's really a microcosm of the markets where everyone's going to see it a slightly different way. So even if we're all Elliott wave theorists and we all participate in the same market, we're still going to have differences in what we decide to do in terms of buys and sells and when it's oversold or it's a good time to get in or whatever. So it's interesting, but I wouldn't use it for anything other than like a long-term cycle. Let's say I'm retired and I have a lot of my money in shares. I might look at Elliott wave for a way to maybe lighten up if I'm worried that there's going to be a general market correction, you know? Mm-hmm. That could be useful, I suppose. But as an everyday tool, I don't know if I would necessarily depend on it. That's just me. What do you think?
I've personally only seen Elliott wave work on a strong trend. So I think in the beginning, when everybody first learns Elliott wave, at least for me, I had the tendency to try to explain every single move in terms of Elliott wave. But then I think it only works on the strong trends. And if you look at like, what's his name, Bill Williams' work, right? He said that Elliott wave works not 90-something% of the time if it's in a strong trend after his breakout signal, right? So I think that that's one way that it can be useful. And I think that it kind of shows not only what you're talking about, but I think the overall mentality of the population. So for example, you're gonna have your early adopters, right? So that's like your wave one. And then those guys are gonna jump in early. They have some sort of early indicator. They have some sort of hunch or whatever it is, right? They're gonna jump in early. And then they're gonna take some profits, or there's gonna be a pullback. And then your general population gets in, right? That's the, was that 1, 2, 3, wave 3, right? And then you got your late adopters, people who are always late to the party. They're always jumping in at the wrong moment. And then that's your wave 5. And then it blows off or whatever, right? So I think that's another way to look at it. Yeah, I've never really found it to be that useful in anything but a trend or strong trend. So the trick is to like figure out if that's a strong trend or not also, right? But I think that that seems to be the only way it's really useful. And like you said, maybe it helps with lightening up your position or taking profits in the case of crypto, and instead of just using that to trade on an everyday basis.
Exactly. Yeah, I would say like if you're in cryptos, you could argue like it depends on how you look at the chart, like the time frame of the chart and stuff and the scale. Like you could argue that, for example, Bitcoin, which is the crypto that most people talk about, you could argue that it's either just had its third wave or it's just had its fifth wave. You know what I mean? That's to me is the problem with Elliott wave.
Yeah.
Like if you go back and look at Bitcoin when it ramped up to 1,000, is that like wave one, or you know what I mean? Or is wave one the one where it went up to like 19,000? Do you know what I'm saying? Like where it really depends on the chart, the scale, and all that. But that's what Elliott wave theorists will say is the strength of Elliott wave is that it's fractal in nature. You can use it on the 1 hour, you can use it on the weekly. That's kind of one of the things that they'll say. But I guess I'd probably say it's just completed wave 3 and it's in the correction now as we record this in December of 2021, mid-December 2021 as we're recording this. I would say that it has completed wave 3, it's correcting, and then it'll ramp up for another like really strong wave 5, almost parabolic, and then it'll have kind of a major correction, and that's just my male intuition. I don't really know, you know what I mean?
Yeah,
like,
that's the problem, right? It's so subjective.
Yeah.
Like kind of like Fibonacci.
Exactly.
Where do you draw the high and the low? And
exactly right. Yeah,
whatever works for you, I guess.
Yep.
Right.
Exactly. Yeah.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
You have to be really on your game in terms of execution. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I have a question here from a trader, and he was having issues with taking losing trades. So his issue was that he really didn't like losing, and he had been through some, life experiences recently that were difficult for him to withstand, like financial losses related to the trading world, but not really his it wasn't related to his trading, right? So it was related to his investments. So he's having troubles losing. He came up with this strategy that was really good. It was interesting though. It's funny. Funny side note is that he learned the strategy from a guru, but he and all of the students that were learning it from this guru all figured out that the strategy had a losing expectancy. So they got together and they kind of flipped it around. So no, they took elements of it, but they flipped it around and they made it into a winning strategy. So they used elements, but they actually just changed it so that they didn't take as many trades. Not a complete 180, but almost like a 180 on the strategy, right? Anyway, so they were trading it and it was working quite well. But he had an issue because it had a low win rate. I think it was a 38% win rate, if I remember right. But it had a really good reward to risk ratio, risk to reward ratio. It was like 4-to-1 or something. I can't remember exactly, but it was around that, So, so he's like, he was having issues. He's like, I know it makes money, but it doesn't trade that often. The trades come and go very. So I'm going to switch to a lower time frame, and it's like a 1-to-1, right? And it has like an 80% win rate, but it's actually less. It wasn't actually 1-to-1. It was a little bit 1 to 1.3. So he's risking 1,300 to make 1,000 basically, right? But it had a really high win rate. And so he was asking me, what do you think I should do? Well, I think what's happening is a lot of you've had these issues around your life, around finances, and so you really dislike that feeling of losing money because you've gone through a lot lately in terms of losing money and stuff, which is not really his fault at all. It's just bad decisions, like bad partners and stuff. So I said I would probably do both. You know what I mean? Like I would probably trade that higher time frame one that doesn't trade that often, but has a really good. Because that might save your butt if you're trading the lower reward risk ratio strategy one that's a scalping one. And he likes the idea, and everyone does, right? Of sitting down, trading for 2 or 3 hours in the morning, and then being done for your day, being flat, not having any open positions. And that's kind of the draw of that. The issue I said with that is that you have to be really on your game in terms of execution to make that work. You have to have a really good broker or brokers that you're dealing with for those tight, really quick in and out profits, right? Like on the 1 minute chart or whatever. Your broker choice is really important. You have to be super on your game in terms of your psychology and, setting that time. Like I'm only going to trade 2 hours or 2.5 hours or 3 hours, whatever it is. And just walking away no matter what, maybe even giving yourself a certain number of bullets. Like you say, I've got 3 bullets today. I can take 3 trades. The first one's a winner. I can take a second. If the second one's a loser, I can still take a third. All right. But if I have first one's a loser and the second one's a loser, I can't take the third, things like that. You have to have these rules in place so that you don't overtrade and stuff like that. So anyway, that was my idea. I don't think he necessarily liked that idea of trading both of them because he really wanted to move just to the one. But it's just, for me, this idea of getting away from losing can often lead to even more difficult trading situation because when you're trading those lower time frames, you're open to broker issues. Let's just call it that. You're open to more larger losses, really. Like if the market really moves unexpectedly while you're in a 1 minute trade, you can lose your account and then some. So there's no guaranteed stops that I'm aware of anymore in Forex. There used to be, but there are no now that I'm aware of. So there's a lot of reasons why you would want to split up your money, I think, and at least do like personally, that's what I would do. What are your thoughts?
Yeah, I mean, I think it's either you just got to figure out what's the best thing for you, and is it a case of you're trying to find the grass is always greener on the other side, or is it really because you don't like to lose that much? And I think like you said, I think the situation played a lot into it. So maybe he should take that into consideration, maybe take a little break or something, and then see if that's really the case. But I think that you'd have to figure out what's really the best for you instead of asking somebody else. Kind of just do, like you said, do all 3 or do both and then see what happens. And then you have the 3 scenarios you could go, right? You could go both, you could go one way, you could go the other way. And I think it's just a matter of trying to figure that out and see what works the best for you.
Yeah, and sometimes I think as traders, we like normal people, we react to the last thing that happened.
Yeah.
You know how you react to the last trade or whatever, the last month, the last week. And it's easy to do that. It's easy to react and say, I'm going to go against my last, I hated trading the 4-hour charts. I hated checking the charts every 4 hours. I hated going to sleep knowing that I had risk on, all those sorts of things. So I'm going to move to the 1-minute charts and trade that, and then I'll be done. There's that sort of thing too, where you kind of react to what happened in the past.
Yeah, but then once you get into that 1-minute chart, you're like, oh, this sucks because I have to watch it all the time, and then these losses compound quickly, and so
yeah, exactly. Like I know a couple that does the 1-minute stuff on the euro every morning, and they take, I've mentioned before, I think they take breaks, so they take the summers off in Europe. They're in Europe, and they just sail around and stuff. In the summers, they don't trade at all, like June, July, and then also what's kind of cool is they have their own offices in their house. So they both they trade similar system, really. It's almost the same thing in different rooms. And then after the London Open, they come and meet and they kind of talk about like, did you get this trade? Did you get that one? You know what I mean? Because they're trading the same, they're just trading the euro on the 1 minute. And so it's interesting because it's almost like they have like an accountability partner, inbuilt in like the husband-wife team. It's kind of cool that way that they every day can have someone that say, well, hang on, we said that we were only going to take 5 trades. Why did you take 6? That sort of thing. So, the reason I mention this is I think for the guy that I'm talking about, that element is really important if you're trading lower time frames. And if anyone's trading lower time frames, you kind of need that accountability to someone, even if it's a non-trader. You need someone to look over what you're doing to make sure that they understand the parameters, the rules, what you should be doing, and that you're actually doing that, because it can be tough for you to be, your own coach. So, yeah,
no, totally. I think a lot of those guys who used to be bank traders can attest to that, right? They had a supervisor, and now they don't have the supervisor at home, and then
that's it. Yeah, exactly. Yeah.
All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
The goal they set isn't concrete enough or something, like it doesn't motivate them enough.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, how important do you think the big why is? Your big why of trading, why you want to do it? Do you think it's necessary, or do you think it's kind of optional?
Like why you want to trade? Yeah. For me, I think it's more like you just kind of know. Anyone was the first time you took a trade, or the first time you saw people trading, and you just knew you wanted to be a part of that, I have a friend in England, and he was kind of like that, like he ended up getting a job where he saw the traders in the trading room, and he saw what they're doing. He's like, I want to be a part of that. You know what I mean? So sometimes it's like maybe the first time you see someone do a sport or whatever. Like I remember the first time when I was a kid, I saw some kids surfing, and they're like my age, but they were having fun, and it just looked like something I really wanted to do. So sometimes I think you're just kind of drawn to it. Like, it's just like, you want to do it. Like, it just makes sense. But I think maybe what you're talking about is a little bit more of like building on a foundation of, could be wrong, but like building on a foundation of sort of like, who's that guy that wrote the book, The 7 Highly Effective Habits or whatever, the guy in Utah, Stephen Covey. Yeah. Like, he has that company, Franklin Covey, right? Where you get these planners, and maybe people have done the course. I've done the course. You get these Franklin Covey planners. It's just a planner, right? It's just like a diary. And I'm sure they're all electronic now. So I did this back in the 90s, right? So this is a while ago. Like, you take the course, and they tell you how to use the planners, right, to be efficient and have your life. But they start with like the foundation. Okay, this is who I am. This is why I'm doing what I'm doing. This is what I'm trying to do. And I understand that. Like, that is a real thing. Like, if you look at team sports, the teams that don't have the leadership, like the coaches, the managers, or whoever's the boss in that situation, if they don't have like a real consistent, almost like theme or reason what we're trying to do here as a team, if they don't have that, you can tell those teams right away, because they suck. You know what I mean? They don't win. The ones that win, there's a leader somewhere in there, whether it's the coach or the manager, whoever, I think in baseball, they have a manager, right? And I don't want to get this wrong, but yeah, whereas in a lot of sports, it's the head coach, and he or she defines what the culture is. This is why we do what we do. This is how we look at, this is what it means to be on our team. This is what it means to do what we do, sort of thing. And so that can be a very powerful thing. So for traders, you might just say, look, I'm just trying to build up my trading account so that my family can live comfortably and I can retire and take care of my kids and my grandkids. Or it could be, I'm doing this because I want to have more freedom in my life. I want to get away from the job that I have to have right now. Like that job that I have right now, I want to get out of that. I need something more. I know that, in my life, I'm meant to do more than just, sit at this desk and look at Excel spreadsheets all day or whatever, whatever your job, or like make salads at, the local salad restaurant, or, you know what I mean? Like, or sushi or whatever it is. So that can be a thing too, where it's like a motivating factor, but I do think that sometimes people are you just know. It's like that first time when you meet someone and okay, that's going to be my wife, or, you know what I mean? That's going to be my job. You just know that's what I want to do. So it could be as sort of simple as that, or as sort of, what's the word I'm looking for? Like it's a wild instinct. You know what I mean? Like you just associate with it, or you can build it out very deliberately. Like what I think you're saying, is that what you're saying? Like you're kind of like building out your goals and sort of like, this is where I want to be. And this is who I am. This is why I do this. This is why I'm spending time doing this. Is that what you mean? I don't.
Yeah, I was thinking of it more in that sense. But yeah, this is an interesting point. From what you've seen, if you could put a percentage on it, like what percentage are those people who say, oh, this is what I was meant to do? And what are the percentage who say, like, this is just an ends to a mean, or a means to an end that I'm trying to do?
Yeah, it's really interesting. I used to overestimate the percentage of traders that like felt like this is what I was born to do. I think it's actually quite small. And I'll tell you why I say that, because when we had our London conference, there was a speaker and he was amazing. He's a really cool guy. He was a bank trader. And I thought that people would be really wanted to know, you know what I mean, what it was like and the you know what I mean, to be behind the trenches as a bank forex trader and stuff. And you know what? It wasn't as into it. I mean, there were a few people that were super into it and really wanted to know what it was like. But a lot of people, I could tell, they were just traders just as a means to an end, That's when it really drove home for me, actually, was at our conference when we did that. And I'm not knocking him at all. He's a great guy. He did an awesome talk. It was really interesting to hear about the LIBOR scandal and all that stuff. But it was interesting to me to see the reactions and like the feedback we got from people. You know what I mean? Is they thought it was a really good talk, but they never wanted to be a bank trader. You know what I mean? That's what they said. They said it was really cool, and I loved hearing about it, but that's not me. You know what I mean? And so you could tell that their motivation was really freedom, wasn't it? It wasn't that it was the motivation to be a trader, right? Because if you think about it, almost like the pinnacle of being a trader would be either a trader at a bank or like a hedge fund, I guess. I guess it would be hedge fund. Like a massive hedge fund where you're like the star trader. That would be like the pinnacle, I guess, But for a lot of traders, that's not what they want. They just want a means to an end. It's like freedom. It means more time. It means more opportunities, in life. So that was an eye opener for me. Yeah.
Interesting. Yeah. Most of the people I come across are more about the freedom, but it also seems like the goal they set isn't concrete enough or something. Like it doesn't motivate them enough. I don't know. It's kind of tough to put your finger on. So I was wondering if you saw anything like that.
Yeah, I think you're right. I think you're absolutely right. I think it's kind of, and that's why they give up so easily. So what you're saying is like, they're kind of like, well, let's see, what can I do? I could do trading. Let's see if that works, or I could like flip some houses, or, I could do like an internet business where I sell stuff on Amazon. You know what I mean? It's like they have these different options, things to do, or I could do options. I could trade options. I could trade crypto. Like, they have these different ideas about what they can do. Trading is just kind of one of the ones that they're going to try along the way. So it's definitely not that they feel like they're built to be a trader or born to be a trader. It's just like, okay, this is something I'm going to try and see how it goes. So they're not exactly married to the idea that has to work. And the traders that say like in their head, I got to make this work, those are the ones that generally make it work. The ones that say, I'm going to try this for a while, and if I can't get it to go in the next year or so, I'll just do real estate or something like that. So that I think you're absolutely right. I think there's a lot of that going on where it's just they're not really focused on the goal of succeeding as a trader. They just want something kind of easy or quick. They don't want to trade time for money. So they've got to do something that's not trading time for money, essentially. Yeah.
Totally.
Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
And the guys at the seminar were saying that the girl that they learned it from, like she was driving Ferraris and stuff. Okay. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I thought we could talk about your experience with grid trading and using EAs to get rid of your emotions, so-called emotions around trading.
Yeah.
What's your experience with that, and how did it work out for you?
Yeah. So the way I found out about it was actually the one and only trading seminar I ever went to. Mm-hmm. And they were talking about it, that was one of the strategies that they discussed. They talked, the two traders that were kind of in charge of it during the time. And it was funny because, I was at the phase where I thought that my strategy that I had, it was actually making money. When I went to that seminar, I was actually making money. And I thought that the strategy that I had that I was using was the one they were going to talk about. I don't know. In my head, I had it like, you know what I mean? Like this was the strategy. And so I thought, and it blew my mind because they talked about things totally different, like grid trading. So for those that don't know, what happens with grid trading, you layer these orders on, and you can do it directional or non-directional, where, in other words, you could have stacks of buy trades and stacks of sell trades. And the big thing is when it goes kind of like a grid. So when it goes from one level and cashes you in, it goes up, and then it gets to the next level where it cashes you out, but it also gets you into another trade, right? So you can have these distances really wide, like 50, 25, 100 pips apart or more, or you can have them really tight, which is like kind of what we were taught at the seminar. And that's what I did. So I traded. So they were trading it on the pound yen. So when you figure that, when you want to do grid trading, and the guys at the seminar were saying that the girl that they learned it from, like she was driving Ferraris and stuff. Okay. So let's just set that up as a context. So I was, like I said, I was making money with my strategy, and it was really exciting. And so I was like one of the only persons at the event that actually were making money, because you have lunch and stuff and you talk and chat and stuff. But I still wanted to try grid trading because it was so interesting. So I did it on the pound yen, and it's really funny because it's like one of those things where we were kind of banking on the pound yen going up. And at the time it was going up, right? But then it totally crashed. And it was like 2 months after the seminar, right? It totally tanked off, which means in grid trading, you're going to have a couple of trades that you just took at the top that you're holding when it's underwater. And the whole thing about grid trading is, what do you do with those trades, right? Like that's kind of the defining. Yeah. So to make a long story short, I eventually stopped trading the pound yen. Then I got into the Aussie yen, because you kind of want a pair that you have a reason to suspect. Well, at least in my thinking, I wanted to have a pair. We had a reason to suspect it was only going to be going in one direction. And that's what they were doing with the pound yen. They were basically just buying it. And with my Aussie yen trade, like a year later or whatever it was from that seminar, I was doing the same thing. I was just buying it. But my trading buddies and I had figured out that instead of having stop losses, or instead of getting out of our trades, we would just have a few options running. So that would be a put option, right? Yeah. So we had put options so that if we did get stuck with a few of those trades, and we were trading 3 pip grids. So every 3 pips we had, every 3 pips we had the stacked orders, right? It was crazy. I think we had like 4 or 5 options, something like that, or maybe it was only 3 or 4. But we were basically anticipating that we get spiked, and we'd have like maybe a couple of trades. Oh, and our grids weren't such that we would get in at 3 pips and we get out at 3 pips. I think it was, we would get in at 3 pips and we get out at 6 or something like that. So there's a little bit of an overlap. See, there was even more risky than a normal grid, right? So anyway, and it was working for about 3 weeks. And then by the fourth week, into the fourth week, it was actually less than a month. What happened was my broker, who I totally adored and believed in at the time, started slipping us. So instead of making, where it was 6 pips on the grid trades, like from 3, you get in 3 pips here, and then you get out, the second, 2 more grid touches later. We weren't getting 6 pips on our winners. We were getting like 4 or something like that. And what ended up happening is it just ruined the profitability of it. Basically, they were slipping us on entry. So that's kind of how they did it. The broker did it. But it was fortunate because this is, again, the hilarious, like Forex is crazy, man. What happened was I stopped trading the grid because I'm like, guys, this isn't working. Because I was like the main man that was running the operation, and the other guys were just, I don't know, like the money behind it. And so I was like, dude, this is not working. Our profitability's gone way down because we're getting slipped on entries. And I'm worried that if it spikes and then falls, we're going to get caught with a lot of trades. Like it might slip us on exits too. And, our options might not cover it and this and that. You're always going to take a loss. Even like the way we calculated it, we were going to take a loss even if we did have to execute the options, right? But anyway, so the point is, I decided to pull the plug on it because of the slippage. And guess what happened? You're never going to believe. The broker that I had the options from, it was one of those brokers. It was a different broker from where the trades were. So it was two different accounts. He took off, like he was one of those brokers where like the broker folded, the brokerage folded, and the head dude took off with the money. So we got out of that broker before that happened. And we actually had significant money in the account, like client money and stuff like that or whatever. It wasn't my money. But the point is, we were really lucky, super lucky. So long story short, I think that grids can work. Your choice of broker is really important. It's probably going to be best that I've seen people talk about using like wide grids, like 25 pip grids and stuff. I almost think that would work better. But you could do really well with a directionless market, like say the Euro Swiss or something, or the Aussie Kiwi. If it's kind of just stuck going up and down, you could just have a directionless grid, and grids love that stuff. They eat that stuff up when it goes up and down and up and down. I mean, it just cashes in all day long. So I think it's definitely a potentially viable strategy, but that's my experience, and I'm really lucky that I got out of it alive, because like I said, we could have had big problems with that. Just losing the one account on the options side, that would have been a big hit. So that's my. What about you? Have you done it before?
Yeah, I've been experimenting with it, but just to go back real quick. So just to clarify, you're saying that you were trading Forex in the retail market, right? And then you were trading options in the futures market. Is that right?
No, they were Forex spot options or whatever. Yeah.
Oh, okay,
so,
okay, cool.
Yeah, I would name the name of the company, but I've kind of slagged them, and they don't exist anymore.
Yeah.
And we could have done both with that broker. Like we could have done spot and we could have had options there, but they were just. Oh, I know, because we wanted the EA, so we needed a MetaTrader. We needed a broker with MetaTrader. Yeah, that's right. Yeah. So I think that's why we did it, but it also just kind of felt safer to me to have like them separate, Yeah. Kind of like when you run the carry trade, the free money trade, where you have like 2 accounts and stuff. I don't know. It just kind of felt like that. Like you were trying to balance it out, like make sure that, you had these options going. So think about it, as price goes up, and it was going up on the Aussie yen for us, your options are an expense, right? Because you have to keep getting these options as it stair steps up. So, that eats in your profits. And we had slippage and we had these options eating into our profits. It just wasn't, you know what I mean? Like it wasn't viable. Yeah, so that's kind of how it ended up for me.
So you're buying puts with like a way out of the money.
Yeah, exactly. So you're kind of like just a few. I think I calculated that we'd have like 4 at most. We'd be hung with 4 open positions. You know what I mean? And it's funny, that I wasn't comfortable actually taking the losses. Hindsight, if you had some really good rules around it, might be a better option. I don't know, to just take the losses. But I do think they are viable for sure. Potentially, it's just the whole thing is, what do you do with those few big losers that you're going to have? Because you are going to have them. Like, how long do you let them fester before you dump them, and all that stuff? That's, to me, is the meat of grid trading, is the rules around that.
You ever think about getting back into it, like you said, with the wider grid spread?
It's funny that you said it. Yeah, I have like this year or the last 6 months, I have kind of dabbled with it, but again. Yeah, I mean, it'd be something for a small account or something, maybe, to try and, I don't know. I mean, I'm not totally there, but I've been thinking about it. I've been thinking about it and looking at some tests and stuff, but I'm not like 80% there, but it is in the back of my head. So it's funny that you bring it up. Yeah. Are you going to do it?
Yeah, I actually have a good idea for like a EA. I haven't been able to program it up and test it out yet, but
right.
Okay. I think I got something. So I'll send you some ideas if you want, and we can
totally
each
cool.
ideas. But I haven't really actually done anything with it because I was like, that's kind of like you said, you're gonna get hung with a few big losers, right?
Yeah.
So I'm like, okay, how do you get around that? But so it's interesting to hear what you had to say about that, and how when you're trading that, when you're using that, how was your psychology? How did you feel in terms of like,
Yeah, well, you feel like a hero, like when things are going well, right? You're invincible, and they're small. Like I should have mentioned, these were super small positions, so they weren't even like a standard, 0.5% or anything like that. Like it's just they just keep adding up. Like if you're as old as me and you ever played like Super Mario Brothers, where you jump up and you catch those coins, that's what it kind of feels like.
Okay,
you're like jumping out, ching 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 ching. That's what it was like, Yeah. So my psychology was interesting because I was thinking about this as you're asking me questions. When you're in the drawdowns, you in a sense you kind of feel like, oh, it's definitely going to come back, right? Mm-hmm. And remember, you're trading a pair where you make money on the swap. So when you're hung up on those 3 trades or whatever, and then it falls 50, 60, 70, 80, 100, 200 pips, you're still kind of making a little bit of swap to kind of, make a dent in your loss. Mm-hmm. It's not a huge dent, but it does feel psychologically kind of good. And you also feel like, it's going to come back. It's going to come back. I know it's going to come back. So, you get into this stage where you don't want to take the loss, because you feel like it's going to get back up there.
Yeah.
So that's why I thought the options were the smarter choice than kind of going by my emotions. That was just, if you have some solid rules around there, I think you'll be fine, but you got to have something to deal with that. And to me, I don't think we ever had a point where we used the options. It was just an expense for us, I think. It might have been one time where we actually decided to pull the plug. I can't remember now. And that's the other thing is, so let's say you have a loss. Let's say you have like a $100,000 account and you're making these little, 25, 50 pip trades like that. Each one is just a little cha-ching, cha-ching, really small, right? So, okay. So what happened if you have these options? So you would have, let's say you had 3 positions and you had to hold them through like a 200 pip drawdown, right? Mm-hmm. All right. So now you've got some pretty big losers. Instead of those turning into $25 winners or whatever, they're each of those is like a, I don't know, $700-800 loser, right? Something like that, right? Mm-hmm. Yeah. So it'd be about an $800 loser. Okay. Let's say if I'm saying 25 pips on the winners. So now, but remember, you're paying for these options. You've paid for all these options. So the options don't exactly cover the loss, right? Mm-hmm. There's a gap there, and there's the gap that you've been paying for these options all the way up the ladder. So it kind of felt like I do think we did at least one now that I think about it. It kind of felt like the option wasn't doing much for me. You start thinking, should I even use these options? You know what I mean?
Yeah.
Which again is a dangerous thought because I think the key is the solid rules around what to do when you're in those, you get hung up. It's crazy, man. Like you're always like, but if you have the 25 or 50 pip grid, you might only have one, right? Yeah. In theory, you might only have one trade that you have to deal with. The advantage of those is that you have the one trade if you get stuck, but your winners, you have fewer trades because you have a wider grid, but your winners are bigger because they're wider, they're apart. So I could see someone getting excited about grid trading with a higher, and then slippage wouldn't hurt you as bad if you have like 25 or 50 pip grid. So yeah, I mean, now that I think about it, I still want to look at it. It's such an interesting, it's so different to all, normal.
Yeah. In the back of my head too, I'm like, this should work. Something about this should work. You know what I mean? Like, I don't know.
Yeah, totally. Like it almost is, like I said, it's almost best to find like a directionless pair. Like I could see where people would use a filter. Like they go, okay, this pair is not going anywhere. So I activate the grid. Like I could see people doing that. Mm-hmm. And then it finally breaks out into a trend, and then they just get there and they just dump that last trade. Mm-hmm. Right? I could see people doing that and being pretty happy. or even using seasonality. So they go, oh, well, it's June, July, so it's unlikely that, the EURUSD is actually going to go anywhere. So we're going to activate the grid. It's usually pretty, I could see that making sense to a lot of people. Yeah.
And I guess on the option side too, you could do a little bit of stuff like maybe some sort of credit or a break-even spread where you would cover like most of your downside or whatever.
Yeah, that's what we did. We tried to cover most of it, but if you try and cover, the problem is if you try and cover more or all of it, it just means your option expense goes up as you're, assuming you're trading a direction. Right? Yes, exactly.
Yeah, and
that's assuming you're trading a direction like a grid where you kind of have a bias. Like we were only buying, we weren't selling. We had no sells, So, but that we had good reason. There was a big wide gap between the Aussie interest rate and the yen interest rate. So we were collecting swap on our trades and really on our losers. Like when there was a pullback, that's the only time you'd ever get swapped, because otherwise you just get cashed out almost immediately.
Yeah.
So yeah. So it was really interesting. Yeah.
Okay. Cool. Yeah. I just wanted to kind of see what you did with that, but
yeah,
appreciate you sharing.
Yeah. Thanks.
All right. Thanks. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. The only time that I've been overconfident was before I took my first trade.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, how often do you see the overconfidence bias in trading, and how do you get over that?
For me, when I look at this, the traders that have confidence are the ones that have a lot of experience with their strategy. So they may be trading for a long time, and that it gets tempting. So two things: people who have a lot of experience in their system, a lot of time trading, testing, and they really want to ramp it up. Or the other side of it is when you have people who are like on a win streak, right? And so then they want to ramp it up. They want to bump up so they've had a really good month, and they decide, you know what? I'm only making on these trades, I'm only making 4.5% with 2% risk. I should really ramp it up and go 5%. Look how much more I would have made, Like to me, that's where it usually creeps up, because it's so rare. Like it's so rare to be overconfident. Most traders are typically, that's the big issue, is confidence. And that can be sorted out by, doing your homework, making sure that your strategies work for you, getting your data, looking at that, applying that to your analytical mind and saying, look, I have all these data that say this works, and then getting all this experience and all these feelings of winning, even if it isn't just Forex Tester Simulator or something like that. The other thing is, if you trade a lower win rate strategy, you never have confidence, because you just know the next trade is going to be a loser. The people that I can think of that are like high win rate, very experienced sort of scalpers, and they by nature get sucked into, really high risk, because can you blame them? If you have an 86% win rate, why wouldn't wouldn't you just ramp it up? So I had, like, my first trading mentor, he was like that. He was hardcore 3-minute chart, just boom, 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 boom. He would trade the New York Open. He would trade in like, an hour and a half, 2 hours, right? So he'd get up really early California time to trade the New York Open, and he would be like, oh, there it is. There's my wife's car, or I remember one time I was sitting with him, he goes, okay, I just paid for a new kitchen, like he's just like that. Like he's just like super confident. Just, I know. But then also he would beat himself up. He'd go, oh, I sold the pound at the high of the day, I sold the pound at the high of the day, and I only made 15 pips. Look, I would be up 75, 85 pips right now if I held on to that trade. I'm like, but dude, that's not your system. You're a scalper. So you can't beat yourself up with that, But yeah, he was one of the most confident traders I remember trading with. Yeah. What about you? What do you think? Have you ever been at a point where you feel super duper confident with your trading? Because I have a hard time getting there, to be honest. Like, I feel like I'm at the point where I want to let the numbers play out, but not necessarily that, like, I'm like, yes, I'm a hero, I'm going to win this one. Like, I just never know. I always just assume it's going to be a loser, calculated as such. But I do feel like, I guess, like the casino, Like, I don't know if this player is going to take a lot of money from me, but I do feel like overall I'm going to win. I guess I kind of feel like the casino. So kind of like the casino's worried about someone tricking them or, stealing some money from them or something. I kind of feel like that, I guess, more than like a super confident. I don't know. It's just, maybe that's just my nature.
Yeah, no, I mean, I think to be a long-term trader, I think you do have to have like awareness that something could go wrong like all of a sudden. So you have to be vigilant about like, keeping up with your journaling and looking at your trades and making sure that you're doing the right things, right? So I think, yeah, that is really hard. And the only time that I've been overconfident was before I took my first trade. It's like, oh, this looks easy. Let's do this, right? Yeah. And I think that's a group of people that I've seen before, like really intelligent, really educated, and they think that trading is like something that they'll pick up in a weekend or whatever. And that's even if they're along in the process a little bit, I think they can still be really overconfident. That's like one of the few groups that I've seen. But otherwise, yeah, I agree with you. I think it's really hard to be just confident in your trading, right?
Yeah, it is. I mean, I really do. When I put the entry orders in, I really do think, well, this is a loser. Like I just calculated as such. I assume it. And then once I put the order in, then I just really hope. Like, I'll give you an example. So yesterday I had a breakout trade on the yen, and there's 3 profit targets. And it could be a buy or a sell, right? In the morning, which is the Asian Open, right? And so I saw during the day, like late in the afternoon, around before dinner, I saw that it was going to be a winner. Well, I saw that it hit target 1 and target 2, but I didn't know if it was going to hit target 3, right? And so I did kind of have that in the back of my mind, because they're kind of rare to hit all 3 targets. You mostly just hit 1 or 2. Like if you can hit mostly 1 and 2 target, you're fine. It's a profitable strategy. But I was just thinking, like during the day, I was thinking, yes, because it had been like a week since I had another winner like that. So like the winners make 100 pips, and then if all of them lose, you lose 75 pips. So that's basically the strategy, right? Based on the targets. So you just need to have more of them kind of hit that second target, if it does break out. So yeah, I was pretty, like, I was kind of high-fiving myself yesterday when I was walking around, because I knew that I had hit the first 2 targets,
Yeah.
But yeah, I mean, just little things like that, because you'll find a lot of traders out there who are super experienced, who are really confident. And I feel like there's a danger that, there's a line that you can cross, because that it just comes down to risk. Your psychology is so pumped up that you just feel like you can really push the risk, pedal to the metal with the risk. And I feel like that's something that people should be guarded against. But that's just me,
Yeah.
I feel like you're better off, like the end result of that being a little bit, worried and a little less confident. The behaviors that come out of that, I think, are more profitable than the behaviors that come out of someone who's like, I'm the best, sort of thing, Yeah.
Totally. All right, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
It's not a shortcut. It's not a, get rich quick, or it's a job like anything else. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I was messaging a student, and he was saying, like, I really like this strategy. I know it's going to work, but why do I have to spend all this time backtesting it in a simulator? Like, why is that important? And what I was trying to explain is that's the key. Like, the only way that you can lean back. So the thing that's going to give you fuel when you're in the midst of your worst drawdown of the year or the decade, whatever, the thing that's going to allow you to get yourself out of that, pull out of that hole, is all of those accumulated experiences during your simulator, during your back testing. That's it. That is the confidence. That is the well of confidence that you build during that time, so that you can use it later when you're actually trading live and you're actually in a terrible losing streak. So I was trying to explain that to him, and it made sense in that way. Like, it's kind of like drugs, right? So drugs, you take these drugs and it gives you like all of this future happiness right now, right? Yeah. So then what happens later is you have these you have the issues, like could be a brain chemical imbalance or something. You know what I mean?
Yeah.
It's like you're just kind of like,
right.
Yeah, it comes back down. So you took your happiness. So you could have just been this happy your whole life, right? Instead, you said, okay, I'm going to take drugs. So now I'm going to get really happy now, right? But now, 20, 10, 15 years later, I lose that happiness that I would have had today because I used it back when I was 22, right? So that's the kind of, and it's kind of the same with trading. You get all of that experience in the simulator. I like Forex Tester. I know there are other ones out there. Our friend Denis, he created a really cool one too. So there's lots of them out there. But the idea is that I get all this confidence now in my strategy so that I can spend it later when I am in a drawdown. That's kind of the way I look at it. It's like the opposite of drugs. So I don't know. It's weird, I know, but hopefully that makes sense to people.
Yeah, no, that totally blows my mind. Like in every other endeavor, you're always going to have to practice, right? Like you can't become a Premier League soccer player without going through the, starting in first grade or whatever, playing and then going into the academy and all this stuff, right? Just taking a system and trading it is like trying to play in the Premier League when you haven't even done all that stuff, right? So yeah, it's just like getting the repetitions in, getting better, and it's a foundation of your training. Yeah, so that's the way I see it.
That's a perfect example. Yeah, that's exactly it. So it's not a shortcut. It's not a, get rich quick, or it's a job like anything else. And doing your apprenticeship, building your confidence, it all happens then. Yeah. So it's a good way to look at it, I think. Yeah.
Yeah, totally. All right. Cool. Thanks, Walter.
See
ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Scalping is really good because it gives you quick feedback, but it's also really bad because it gives you quick feedback. You know what I mean? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I've noticed some pretty common backtesting mistakes, especially from a psychological standpoint. So I want to get your input on that. And there's a list that I came up with here, and maybe you can add or disagree with whatever. But I think that when it comes to backtesting, some common mistakes that I've done and I've seen other people do are they have a preset bias to prove or disprove the system. They don't want to be wrong, so they try to only take profitable trades. They're not testing enough in terms of years or number of trades. They're testing too few times to be sure that the results are correct. They could have a bad testing session or be in a bad mood or whatever. They're quitting when the results aren't great. They change the system in the middle of a test. That's a common one. They don't follow the system. They don't do enough analysis after testing, and they don't have a good reporting system. They think that live results will be exactly the same as back testing. They don't consider risk management and what to do about correlation in the portfolio. Only test on one pair, stock or commodity or whatever, and then assume that that will work in other markets. They don't pay attention to missing trades. They enter and exit trades optimally and not honestly. So they try to follow the system, but then they don't kind of factor in, what would I have actually taken it there, or would I have taken it somewhere else? They only follow other people's rules and they don't experiment for themselves. They throw out a system because it doesn't make X% a month. They try to optimize or over-optimize by adding more indicators or conditions. They try to be an automated trader when they should actually be a manual trader, and vice versa. And finally, not understanding the rules of a system that they are testing. They learned it from somebody else and maybe they didn't get the complete instructions, or they're not following the instructions. So I know that was a long list, but what do you think? And is there anything you want to add or disagree with?
Yeah, no, that's a good list. I would say, so I'm working with a couple of coaching clients now and who are going through this process right now. And one of the things I've noticed is, I'm not sure if it was on your list. Your list was long, but they were, I think you kind of touched on what will happen is they'll do the test and then they'll be like, oh, well, I did this 5-year test and I only got, 47 trades or whatever. And so my thing is all right, but what happens if you add another 20 pairs or 20 markets? Yeah. So they kind of get discouraged, or they'll switch midstream, So like, let's say you're trading a strategy and you have one exit strategy, and then halfway through the test, you're like, oh, I should try this instead. And they do a lot of what you're talking about, like where they say the results aren't good enough after 30 trades, so they scrap it. Remember, I mean, the system is important and no one's going to deny that, right? But you can massage your equity curve in different directions by the way that you manage your risk. I feel like that is a lost art in trading, where people simply assume that their strategy has to get them to a certain point. When really, I think it's the opposite. I think your strategy just needs to get you to the starting line, and then from there, risk can get you where you really want to go. Like if you really understand the amplification that risk management's rules can do. So yeah, I think that's a great list. I would just say the most common ones I see are one of the ones you cover. Like they basically scrap it too soon, or they assume that the end result is going to be what they have there on the test, when in fact the end result can be something drastically different if you change the way that you manage risk, right? And then obviously everybody focuses on the entries, so everyone thinks like that's where they get a lot of their tweaking and stuff, and the multiple tests are based on the entries, when in fact you first verify that your entry works, and then once you verify you have a good entry, you would really spend a lot more time on the management of the trade once it's initiated, so the exits, right? And then in the end finally you can use the your risk to get the look of the equity curve that you want. So I think that's a great list. It's easy to be impatient when you're using a simulator and doing your back testing, because you know what I mean? Like you can, in some ways it's too bad that there isn't like an in between a demo account and a simulator. In other words, like with a demo account, it's exactly as real time, because you have to wait the amount of real time that you would in a normal trading account to see what the results are. And then in a simulator, you can literally blitz through years in like an hour, and take years worth of trade. So it's too bad there isn't like an in between where you can you could make that. In other words, you could tell yourself, okay, every day I am just going to back test, 3 months or something like that worth of data, and then tomorrow I'll back test another 3 months to kind of keep it fresh and make sure you're following the rules. Because I feel like I get sloppy. I don't know about you, Hugh, but I get sloppy when I'm back testing. So I need to take breaks and stuff like that. So I can't just push through and do 3 hours of back testing, because I know my last 30 trades are going to be completely different to my first 30 trades, and they're not going to be nearly as good or as representative of probably what I would do in quote real trading. So I think that's a great list. I just feel like it almost like feeds impatience when you trade in the simulator, because it's so easy to get this feedback really quickly. It's like scalping. Scalping is really good because it gives you quick feedback, but it's also really bad because it gives you quick feedback. You know what I mean? Like, oh, well, I'll get the next one, and sort of thing. So I don't know. I feel like it certainly is invaluable. And all the best traders I know, they all have that one thing in common. They use some sort of simulator, obviously, but it's like any tool. You just have to manage it carefully, I guess.
Yeah. A couple of questions that people might have about what you talked about. So first, you mentioned if the entry is good. So how would you kind of define if the entry is good? And second, have you ever seen a case where the current system had a terrible win rate and it was losing money, but you switched up the risk management and it started making money?
Yeah. So, well, that was more the exit. So I don't know if that counts. So I consider, like, for example, if you use a trailing exit, that's a different way of managing risk, because you're allowing unlimited profit to come your way. Whereas if you use a 0.5 R target, as in I'm risking 100 pips to make 50 pips, you are cutting off your profits at half of your risk, and you will never allow the market, and neither will your broker if you do that. Your broker will never allow you to gap over that, right, and get cashed out at a better price than the 50 pips, for example. So I mean, in that sense, yes, I've seen systems that didn't look very good end up looking really good because we allowed more profit into the signals, right? So we allow those entry signals to give us more profit. I've seen break-even strategies go very profitable by simply changing the risk, right? So that's good. And then what was the other thing you said? You said the entries.
Yeah.
So the best way to do that is what I call the juice test. And what you do is, this is what I use. This is what people that I know use, my students. I say, look, and this is what we've been doing with the coaching clients. We go, okay, you've got this strategy that you really like, but things aren't as good on your test as you want. So my question for you is, do you know that the entry is good? And well, I don't know. Well, do the juice test. So what you do is you run through your back test and you mark down, or it's easier to mark it down like on a spreadsheet, or you go, where after 5 candles, where am I in profit? Like mark that. After 8 candles, where am I in profit after 12 candles, for example? You could use 3, 5, and 8. You could use 5, 10, and 15, whatever. You need to have it just a spread. And what you want to see here is basically, does my entry signal give me a hint at what is likely to happen in the future? In other words, do my 3, 5, and 8 candle exits make money, right? And also what you'll see is you'll get a hint about where your exit should be. Because if you find that with every, like, let's use the example I said, so 5, 8, and 12. Right? So 5 candles after, 8 candles after. If you find that the 12 candle exit is the one that makes the most profit, then you need to work out, backwards engineer where your exit should be. That means, like, if on average it's a 3R exit or a 2.8 exit or something like that, that's probably where you should have some targets if you're going to use targets, right? You should have them in that range. And also, you should probably run another juice test, because if your 12 candle exits best, how do you know that that the 16 candle exit or the 20 candle exit isn't better? You don't know. So just, find that. It's kind of like you want to find the point of diminishing returns. Now, you also might run the juice test and find that it's an absolute crapshoot, that all the candle exits are not really making money at all. Then okay, my signal's crap, right? Like you're just trying to, like, it's like a mechanic or a doctor. You're just trying to, like, pull the pieces apart of your strategy and go, okay, is it this? Is it my entry? Is it my exit? Is it my risk? Is it me? What's going on here? Because that's basically what it comes down to. It's your entry, it's your exit, it's your risk, or it's you. Like, that's it.
Yeah.
I mean, there's nothing else really. And obviously, in this podcast, we talk a lot about the you. Like, how do you tweak in your interaction with your strategy? So yeah. So that's what I would encourage anyone listening to this to do, is if you're concerned and you don't know if your entry is any good, try and run a juice test and see where it falls out.
Yeah, that's a really good one. I do it a little bit like quick and dirtier. I just do like a 1R, and I kind of can get an idea of how the system will work from there. But yeah, your method is much more detailed, so that's a good way to go.
Yeah, it makes sense. Yeah. 1R makes sense too, to see. I mean, it's kind of like the same thing. Like, I'm saying, let's look at a 1R, a 2R, a 5R.
Yeah.
You know what I mean? Like, it's kind of the same, but it's just a simple brute force way of saying, my signal is telling me that the market's likely to go somewhere. Is that true? And you don't even have to be right 50% or more of the time. You just have to be right enough on the winners, right? That's what trading is. You just have to be right enough. And so that's why having some sort of, timed exit like that, you can work. And some people like it. Some people will do that juice test and they'll go, oh, I'm going to use a 6 candle exit, right? Like they like it enough. They're like, this is fine. I'll just do that. And for some people, that's perfect. So that's another cool kind of side effect. Yeah.
Yeah. It introduces that element of time, and you can kind of like also say, oh yeah, I should bail by the 3rd candle if it's not working out or whatever too. Right.
Yeah. Yeah. I learned that. The guy who taught me that timed exit idea, he lived in a mansion in San Diego. he knew what he was doing.
Yeah.
He was a stock trader and he had his hands in lots of things. But I learned that from him, and it was a real eye opener for me to think, oh, okay, you know what I mean? That's something I should be looking at. Yeah. He was looking for someone to work for him, and I guess I kind of lied about my typing speed, because he wanted someone to like take notes for him or something, or like there was another girl at his house with big stacks of papers and books and stuff. Anyway, I was like, wow, this guy is wild. And he like was really into piano and everything. And so he started asking me questions, did you play piano when you're young and stuff? I'm like, no. I'm like, why is he asking me these questions? It's because I put on my application that I guess I overestimated my typing speed. But we ended up having a really good chat about trading, because he asked, what motivates you and stuff. And then, and I told him, trading and stuff. And he said, we were talking about exits, and I was like really into exits at the time. And he said, I have the perfect exit. And then I go, what? Well, do share. And then he was talking about, timed exits like that. So it's stuck with me ever since, basically, since I learned from that dude. Yeah.
Ah, cool. That's a great tip.
Yeah.
Right.
Yeah.
Thanks, Walter.
See ya.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Oh, yeah. I'm thinking about buying a motorcycle. I was like, a motorcycle? That's so dangerous. Why would you ride a motorcycle? What?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Hugh, so I have a question from a trader here, and this trader is saying, I like to trade the trend extension. So when the market goes and then it kind of pulls back, and then he wants to get back in on the pullback in the direction of the trend. But he's found that he's been getting stopped out a little bit more often than he would like. And he said he's learned from other traders this idea of using, different momentum type indicators to decide when the pullback is sort of ending. The idea is that you're going to miss out on a lot of entries because you're only going to take the best ones where the momentum is kind of dying in the pullback and then get into the trade. And he said this will, in theory, increase my win rate, and you're only taking high probability trades. What do you think about that? So that's his question. So I would say that, from my point of view, basically what he's doing is he's refining his beliefs, right? So he's come to the conclusion that it makes sense to trade the trend. If you're going to trade the trend, you might as well get in on a discount. And if you're going to trade the discounts, you might as well make sure that the discount is sort of turning into, it's kind of losing steam. And so I'm going to do that. And I say, yeah. But it sounds like in the back of his head, he's thinking, it looks like if I do this, I'm not going to have a lot of trades. Right. And so he wants the blessing, like, okay, my son, you can trade fewer trades, right? Yeah. I mean, it kind of sounds like that, And look, I don't want to tell anyone what to believe about the markets, but I could definitely understand why someone would want to trade this way. I like to trade this way as well. And I would say that, sure, go for it. Like, there's nothing really wrong with that idea. The idea that you're going to miss out on some trades, if win rate is really important to you and you find that being picky allows you to have a higher win rate, then my thing is, go for it. Why wouldn't you do that, right? So that makes perfect sense to me. You probably in the end will end up trading several markets, so you'll probably want to make sure you back test all of those markets that you're going to trade. But other than that, it's perfectly viable. And there's a long list of very profitable traders who trade in essentially the same way as has been described here. So there's really nothing I would say that's wrong with that. It's just a little bit of doubt in this trader's mind, I guess. So what's your take on this, Hugh?
Yeah, no, totally. I think it's mostly about permission. And then, like you said, testing, just test all the things. And a third thing I would add is maybe perfection, going for a little bit too perfect of an entry or whatever. Yeah, just play around with different ideas and then see if they work out, in a way that is acceptable to you, either from the win rate or from a return standpoint. So, I think you had it spot on for sure.
Yeah, that's a good point about the perfection, because depending on how you trade, essentially going to come down to, there's one of two kind of camps that a lot of traders fall into. It's the camp of fear of pulling the trigger, which is kind of what this trader is in, right? Like, I want everything to be perfect sort of thing. Or there's the over trader, the trader who like revenge
super
trades,
aggressive,
and So it's basically like the hyper aggressive scalper or person who just wants to take a bunch of trades and make sure that I'm up on the day sort of thing, versus over trading, and versus this trader who kind of wants everything to be perfect, like you say. So I mean, in a lot of cases, depending on your personality and the way that your system operates, you're going to end up with that issue. I mean, that's pretty common for most traders to either have a fear of taking a trade or taking way too many trades, like one or the other, right? Yeah. And the fear of taking a trade is usually when you really want the win rate to be higher. And that could just be that you're trading a low win rate strategy, like a 25% win rate strategy or something like that. It could be as simple as that, or it could just be that you're like you say, like a perfectionist, you just want to be right a lot. And the other one where you overtrade is just, it's almost like a gambling mentality, right? Where you just that's how martingale comes about, right? So martingale strategies come from that, from the sort of the over trading thing. Like, I don't want to ever end up a loser. I'll get all my money back on this next trade, sort of thing, right? So it is interesting though that you can kind of, in a gross sense, you can kind of split the trading world into one of those two camps. Like, you can pretty much guarantee you're going to be dealing with one of those two issues.
Yeah, totally. And I think it comes down to also like more introverts and extroverts, maybe. Like, that's kind of where that lies. Maybe people who are worried or afraid of making a mistake are going to undertrade, and the people who are really gung-ho and are all about getting things done are going to overtrade, right?
Yeah, so one way to characterize that would be like sensation seeking. So people who are sensation seeking, they're like scalpers. They take a lot of trades. They put on a lot of risk. They're like bam, bam, in and out of the market. Whereas people who are a little bit, like you say, maybe more introverted, or kind of like, one way to look at introverts is to say that they're overstimulated just in normal life, whereas extroverts are understimulated in normal life and seek stimulation. So they do like, what is it called when they jump out of the, like, off the cliff on the, is it called a squirrel suit? Yeah. Squirrel suits and base jumping.
Squirrel suits,
those. Yeah. Those are like the sensation seeking sort of extrovert type people. And so, so it's interesting. I went to a wedding once where it was all of these like base jumpers and like crazy, like Hawaii big wave riders and stuff. Like, it was wild, man. You know what I mean? Like, weren't all, it's interesting. Not all of them were like super extrovert, but most of them were in that way, like you could tell, like you could see why they were drawn to like base jumping and stuff. Yeah, it was really interesting. Like seeing that, like a bunch of those people in the same room. Yeah.
It's funny. I talked to a guy who was a big wave surfer in Hawaii, and they called him the crazy Hungarian because never surfed before in his life, and he goes to the North Shore and he surfs like 40-foot waves or whatever. And I was like, oh yeah, I'm thinking about buying a motorcycle. I was like, a motorcycle? That's so dangerous. Why would you ride a motorcycle? What? So there's a lot of nuance with that, I guess, right?
Yeah, it's so funny. Like, I was talking to one of my my son's friends, his friend's mother, and we're like, well, we're going down to the skate park, and she's like, and we go, does your son have a skateboard, and would he go down to the skate park or whatever with us one time? She's like, skateboard? I'll never let him have a skateboard. I'm much too sensitive for that, like sort of thing. Meanwhile, like, her son's like climbing up these big towers and jumping off into the water at low tide and stuff like that. Like, you know what I mean? Like, doing all these crazy things where you're like, really? Okay. It's just like perception. Like, people say that riding a bike is dangerous, a bicycle, right, on the roads. And yet, you look at the stats for people in the cars on the roads, you got a pretty good chance that throughout your life, like, you're going to get in a real nasty accident at least once, right? That's pretty much baked into the cake. Like, that is going to happen because of just the odds. Whereas people are terrified to go out in the water because of sharks, and that, like, you probably be struck by lightning twice before you be bitten by a shark. So, it's just, it's crazy.
Yeah. Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
If you think that's a good idea, then you should test that idea. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, let's talk about confirmation bias. I've got it, you've got it, everybody's got it. It's just a matter of to what degree, right? So what are some ways that we can be aware of our confirmation bias? And is it a good thing to have a strong confirmation bias?
Well, no. For trading, I would argue no. Not a good thing. one of my favorite studies is this one where they did with little kids where it was in England. And so they had like this box of like lollies, like candies. And they do this for like a 3-year-old, right? Like 3 to 5-year-old. And they put pencils in the box, but the box looks like it has candies in it. And so they bring the box out and they say to the kid, what do you think is in here? And the kids say candies. They say lollies. It's a bunch of lollies in there. And then they go, okay, open up the box and there's colored pencils in there. And they say, what's in there? Oh, it's a bunch of pencils. Well, what did you think was in the box before you opened it? Pencils. And so this is confirmation bias, right? Confirmation bias is a big deal in backtesting because you can go past a trade signal and then go back. Oh, I would have taken that, right? No, you can't take it. And then, but more importantly, the best thing you can do, like in your live trading, is to have a journal, and more data the better. So what you want to do, this is my solution for this, is you have a journal and you write down in the journal when you take the trade, what is the likelihood of this trade working out? Because you want to know, we want a snapshot of that time when you took the trade of what was the likelihood that, what did you think? Because later on, when the trade's over, you're not going to have, you no longer have that ability to be honest with yourself. It's gone, right? It only exists at the moment you take the trade. So you write down when you take the trade in the journal, I think this is a 5 out of 5, or I think this is a 2 out of 5, but it fits my rules, so I'm going to take it. So that's what you do. And then you can go back and you can see, are my 5 out of 5 trades, right, where I rate my entry 5 out of 5, are they, do they make the most money or not? Or what's the deal? How good am I at figuring this out? Because, after the exit's all done and dusted and the trade is out and you're flat, you can't really go back. There's no ability to see whether or not you thought the right thing. The only time that whether or not, what you were thinking about the trade is in the beginning, and that's when you should capture it. So that's what I would say about confirmation bias, is that you can counteract that with a journal. I mean, you can also take videos of your trades where you talk about why you're taking the trade, what you think about in that. But I just think it's nice to have a number rating, even if it's a 1 to 10 scale or 1 to 5 scale, something like that, so that you can go back. And because the problem is, when we first start trading, we think that we know what a perfect trade is, and we want to put more risk on those and all that. Well, do you really? That's the answer. That's an answerable question. Do you really know that, or is that just confirmation bias kicking in? Like all the systems that I tested before, or most of the systems I tested before I had Forex Tester, I had confirmation bias, because all I was doing is scrolling back on the charts going, oh, look, this works really well. Like, and I was just highlighting the perfect trades and skipping over the losers, right? It wasn't until you actually scroll back in the charts and one by one move the candles and start taking, I used to write them down in a notepad, like take the trades that way before I had Forex Tester, and I would go, why isn't this working? It was confirmation bias, basically. Yeah.
No, totally. I think if you zoom out a little bit from trading, I think it's a really important skill to be able to hold like conflicting ideas in your mind at the same time, right? And that really helps with confirmation bias and not thinking that you know it all. And maybe there may be a case where part of this idea is correct, but mostly, the other idea is mostly correct, but part of this other idea is correct, and you could benefit from that. So I think that's a really important thing to consider also, not to get too entrenched in a certain idea or dogma or ideology.
Yeah. You know what? You remind me of something. I just want to point this out to people. If you're listening to this, you're probably a podcast fanatic. And what you just said, they talked about in one of my podcasts I listened to. It's called Dark Horse Podcast. They have it on Odyssey, like the actual video and stuff, but you can find it on, wherever they have podcasts. It's called Dark Horse Podcast. What they talk about in there, so it's 2 evolutionary biologists, and they're married, right? And they talk about lots of things in life. But what they were talking about the other day was exactly what you said, Hugh. And I was just listening to it yesterday, so it reminded me of what you said. What he was saying was, Brett is his name, Brett Weinstein. He was saying that one thing that he likes to do is he likes to go, what would have to be true for my belief to be false? Right. So that's how he approaches things. It's kind of like an anti-evidence sort of thing. So like, let's say, for example, let's say that you're using volume for your trading to make this more concrete, right? So let's say using volume as an indicator, right, in your trading system. And so you see there's heavy volume, right? And the market is printing a reversal, right? Like a kangaroo tail or some sort of reversal candle. So you go, okay, there's heavy volume and the market was unable to penetrate the support level or whatever. So I'm going to go long here. Well, what would have to be true for my belief to be wrong? Well, my belief was that heavy volume on a reversal candle equals, strong belief in that candle. Okay. Well, what if, for example, we were just moving into a period of heavy volume and that like the heavy volume that we had on yesterday's kangaroo tail daily candle is now going to be exceeded by today's heavy volume, right? So that would be, you know what I mean? Like then it would send it even lower, for example, right? Yeah. So, that could be I could look at that and say, okay, what does the volume look like so far today? Does it look like we might eclipse yesterday's volume? If it's really heavy volume today, then maybe that's not going to work or whatever. The idea here is that you're searching for evidence that would discount your base belief. He explains it really well in the podcast, and we can put in the show notes the episode of it. I think it's episode 111. So if you like podcasts and you like biology or whatever, Dark Horse podcast they're really interesting. And it was episode 111 where he talks about that kind of in the middle there. But I just thought it was a really good thing for us traders to remember because of confirmation bias, right? Because we're it's such a big deal in our world is having the wrong ideas and just seeing everything that you just only seek out evidence that fits your ideas and your hypotheses, and then you're stuck. You never get out of that. And so thinking what would have to be true for my base hypothesis to be false is a good way to seek out counter evidence. And that's, when I take a trade, I always think, what is the other party? So what is the person that's doing the opposite? If I'm buying right here, the people who are selling, what are they thinking? Like, why would they sell here? And I'm trying to do that too. I think you should know that. I think every time you take a trade, you should say, well, the guys on the other side of this trade, what they're doing is this, and their thinking is this, right? And maybe they're looking at a higher time frame, for example, and you're looking at a lower time frame, or whatever, or they're the kind of trader that's looking at stochastics, and you think in this instance the stochastics wouldn't necessarily apply. It would be a case where stochastics would break down. For example, in a strong trending market, that's when stochastics break down, right? When the market's trending, you're going to see oversold, overbought all the way, but it's never really. But if it's going one direction, it don't matter, right?
Yeah,
it really don't matter what that stochastic says. Yeah, so
yeah, and I think in trading also, like I guess in a lot of education arenas, but like in trading especially, there's a strong like guru bias, right? Like follow the guru, and he's the one who knows everything, and there's not a whole lot of, sometimes there's not a lot of thinking for yourself and saying, oh yeah, I trusting yourself to know that I can figure this out, and maybe that guy could be wrong. So I think that's something to consider also.
Absolutely, you're right. And that's what people ask me. They say, have you ever heard of so-and-so? And usually my, some trading guy or whatever. And I'm like, no. And then they say, well, so-and-so says X. What do you think about that? And I'm like, it doesn't matter what I think. Like, honestly, it matters what you think. If you think that's a good idea, then you should test that idea. I'm not here to be the arbiter of truth. I'm not the whatever it's called, Saint Michael at the gates of heaven, allowing people in and out. I'm not doing that. Like, you know what I mean?
Yeah.
I am just here to tell you, you need to find out what you believe and then base everything on that. And so, like, it happens all the time. It happened last week. People will come up to me and say, hey, have you heard of this trader? He trades this way. And I'm like, no, never heard of him. And like, he trades this way. I go, okay, yeah, it makes sense. And they say, okay, well, should I do it? Well, I don't know. What do you think about it? It's all about you. People, like, you're right. And I think part of that, like, it's weird. Certain things, like certain industries are like that, where it's kind of like art, and they say, well, so-and-so is like he's a impressionist, or, like they kind of categorize you in that way. And I think some of it is because you don't really learn trade. Like, you can't go to university and learn trading, right?
Yeah.
You don't really, like, there's no real like trading degree or whatever. You have to kind of learn under someone or under the guidance of someone, or maybe you try on your own by reading books or whatever, or websites. It's interesting. I mean, a lot of things, I guess, are like that, you know. And in Australia, if you're going to be a plumber, you pretty much have to work under a plumber. Like you wouldn't just go out and get a plumbing certificate or whatever and then just start. Like it's pretty much everyone kind of has to learn under someone, which is, there's a lot of good things about that, I suppose. But yeah, I think you're right. I think there's a culture in trading of like, you know, so-and-so is in the, you know, the swing trader camp, or he's in the, you know, the price action camp, or the, you know, and they put these people in different areas of based on basically what other people say about them. It's weird. I agree.
Yeah, I think a lot of it's also baked into the cake, right? Like with the education system, it's always about the teacher knows best. So always follow the teacher. Don't think about anything else. And
yeah. I mean, like we used to have, like in the US, they used to teach economics and home economics. They don't do that anymore. You only get that if you go to college and you say, I want to be an economist, right? Like that's, and then they teach you some weird stuff. It's not even, you know, I would argue not even really applicable. So like, you know, it's weird. It's like in a lot of ways, you'd almost be better off learning principles, like you say, like learning principles of how to determine how to make a decision rather than learning the book knowledge that you come out with. Yeah, I mean, there's a lot to be said there, but yeah, I think you're right. I think you're absolutely on the right on like if you get to the point as a trader where you start thinking, you know what, I don't know if I believe any of this. Like if you get to that point, that's a pretty good spot to be, because what that means is you're going to tear it down and rebuild it based on what your driving principles are, what your core beliefs about the market. If you believe the only way to make money in the market is to follow the trend, then you're going to build something based on that. And that's good. That's good. That's a good thing that you do that and that you follow that. So I'm all for it.
Yeah. I think that's one of the biggest benefits of trading, right? You get to know yourself, you get to trust yourself, and there's a way to keep score. So I think that's great.
That's exactly right. Yeah. Well said. Yeah.
Okay, cool. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Each of us has a built-in personality.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, let's talk a little bit about something that I've been kind of researching for the past couple of years, basically trauma. My hypothesis or my research has shown that trauma is basically the cause of most things that we don't like, I guess. Basically diseases, addictions, bad behavior, so-called bad behavior. And somebody likened it to like having a ship with multiple anchors on it. And each of those anchors is like a trauma from wherever, your childhood, whatever it is. If you have all those traumas on your ship, then it's hard for you to move forward. So I was wondering what you thought about that, what your experience is, and how we could get rid of those things.
Yeah, so I think you're right. I would agree in a sense, but I think that there's another component. So like when you're thinking about trauma, so for example, in the child abuse literature, we know that there are some kids who are sexually abused who don't, like, things are pretty normal. In fact, in a lot of cases, like, they do really well in school and stuff, right? Mm-hmm. And then things like neglect, which doesn't really have, I guess, the same stigma that like sexual abuse has. I mean, they're both awful, right? Mm-hmm. In the case of neglect, that's usually one of the worst forms of abuse that a child can go through, right?
Yeah.
So, but here's the thing. Like soldiers, for example, when they go off to war and they come back, a lot of times, they go through PTSD. If they were in a really bad, in a combat situation, the things that they see, all of those things can really impact them when they come back and try to reintegrate into society. Mm-hmm. But here's the thing, they normally do reintegrate into society. It's usually just a process, right, that they go through. It may take a couple of months, 6 months, 2 months, 2 years. But at the end of that, they're actually pretty well functioning in society. So I think what it comes down to, and there's a lot of research on this because it's kind of like a trendy area of psychology at the moment, is resilience. Mm-hmm. And so some people have a very low resilience. So when they are presented with trauma or a challenge, they have a difficult time trying to see a way around it. And it becomes overwhelming. Other people, on the other hand, they're almost built for challenges and they're able to overcome them like very quickly. And it's fascinating as a parent. I have a kid of each. One of my kids is incredibly resilient, and the other one has a hard time and needs to learn the tools. And then, of course, there's a lot of people in the middle, right? So I would say that what you're saying is true, but it's probably mediated by the resilience skills of the individual. In other words, you would say that, yeah, traumas are a big deal. Traumas can impact you for life. But normally, for most people, as long as they have a certain level of resilience, that they'll be able to overcome it. And you can think back to like whenever you had a really bad breakup or something, you thought the world was ending, my life is over. And, you think about when you were younger and stuff like that. But now, when things come up, if you're older, you probably have those tools you've accumulated over time to be able to withstand the challenges and the traumas that creep up. And they're always going to be bad, but there's a process, just like the grieving process with death, you go through a certain process. Same thing, I think, with these. But again, the key is how well are you equipped, with those resilience tools. That's what I would argue. That would be my argument.
Yeah, no, I agree. I think, like you said, each of us is kind of has a built-in like personality when we get here, right? And each of your kids has a different one. And I think that from what I found, at least, the trauma can be something, like really small when you're a little kid and you might not even know it. And that can carry forward in some ways. And, it could come from other places, like you said, a breakup or whatever like that. But yeah, I think that is the bottom line, right? Like having the tools to be able to deal with it, either innately or externally, where you have some sort of process where you go through and get rid of those things. So I think that's an important thing to look at, especially if you're trying to change your behaviors from a conscious standpoint. And, if you can keep telling yourself a mantra or whatever, and your behavior changes, then it's probably more of a conscious level kind of thing, right? But if it's really deep in your subconscious, then you might want to think of other ways to kind of dig it out there and kind of examine what it is.
Yeah. And there's a Denise Scholl book. We can put a link in the show notes that kind of talks about that for traders, right? About trying to uncover these patterns and things. It's a great book. So absolutely. I mean, trading is, in some ways, I view trading a test of your resilience because it's so difficult, and a lot of people, they give up along the way. We see that. Anything in life where there's a very few people that end up making it, in the end, like pro athletes or whatever, Olympic athletes, there's this sort of like this natural culling mechanism where people will fall off along the way. And I think that's, trading is very similar to that. It has a lot of those aspects. It's not to say that trading is difficult, because I don't like to say, well, complicated. It's not that trading is complicated. It's that we're built in a way that makes it a little bit more difficult than it should be, because it's so, you know what I mean? So then we tend to overcomplicate it because we think, I'm doing something wrong here, so I need to add this or incorporate this, or, it's almost like this idea. Computers have made it easy to do that now. It's almost like, the more things we have, the better off we are, sort of deal. But resilience is the key. So, I mean, if you're thinking about trading, resilience is the key. Resilience is the key for, developing the strategies that you're going to use and throwing away the ones that don't work for you. Resilience is the key when it comes to fine-tuning your risk management so that you don't deal with the terrible drawdowns. Resilience is the key when it comes to the psychological pain that drawdowns and, questioning whether or not you're doing the right thing. Drawdowns can come in the way of a broker going bust too, right? It might not be any fault of yours, but it's like a extraneous event. So there's a lot of things that can come up for traders, and many of them, unforeseen. It's like the old quote, the old Donald Rumsfeld quote about there are known knowns, there are known unknowns, and then there are unknown unknowns, which is so true in trading. Like there are those things that are going to come up that you have no idea about, right? And they're going to come up. There are also things they're going to come up that you know about, And then there are some things that you don't know about, but you know they're going to come up, right? It's all this. It's crazy when you think about it, but it's true, yeah. And so I really would implore anyone listening to this to figure out what are the tools that you have for resilience, because that's going to be the key when these challenges creep up, and they will creep up. So yeah.
Yeah, I was just having a conversation with somebody today, and they said it's a little bit ironic that trading is all about making money and all this material stuff, but ultimately it's looking within and figuring out what's inside of you, right? So I think that's something really important to remember.
Yeah, that's absolutely. Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
To me, that smells like, this is an education company wrapped up in in sheep's clothing. So I don't know. Yeah. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think about these programs, like Get Funded as a Trader, those type of programs, and how does that play on trader psychology?
Well, in a way, so there's two different types of them, broadly speaking. There's the ones where you trade and people can hook up your trades to their accounts. So you would get paid usually either a subscription fee or even maybe a percentage of the profits or something like that. And then there are those where you kind of are coming in at like a student, and then they want to qualify you. And once you get qualified, then you can make certain levels where they give you money to trade, sort of thing, right? Like a prop firm or whatever. Yeah. So I've probably mentioned in the past, I had a friend who set up this thing like this. They had the platform created in China, to qualify the traders, and they reversed all the trades. So all these traders were coming in thinking that they were going to trade the fund, and what the fund did, and they were trading demo, that they weren't trading a live account. They were in fact trading the fund from the beginning, but the platform was just flipping their trades. And I said to him, and it was making money hand over fist. And I said to him, I said, aren't you concerned that you're going to get some trader who's really good or whatever and wipe you out? And he said, no. He said, nah. I mean, they will come up, they will, but they always cut their winners short and they let their losers run. And so, and if you think about when you first started trading, you were like that. And he said the biggest challenge they had was trying to convince the traders to keep going. Because they didn't realize they were making money for the fund, and he was trying to convince them. He would like reset their account, so that the demo side of it that they saw was back to zero losses, and he'd do all these things to try and keep these traders to keep going because they were very valuable to him. And now he would get traders that were good, that qualified, and that would move on to a live account and stuff. But there were very few, and so that's because he was targeting beginning traders. He was looking for people like that. So I guess the reason why I mention this is because these prop firms, they know that most people aren't going to qualify, right? So what they typically do is they will charge in some way. I don't care how they phrase it, they'll charge you money. And so really what they could be is, and I'm not saying that they are, but it's logical to suspect that what they could be is they're just an education company masquerading as a prop firm. And so they'll say certain things like, if you pay $2,000, you can trade a small account. If you pay us $5,000 to go through the intermediate course, then you can trade $50,000. And if you pay us $10,000, you can trade the expert. You go through the expert course, and if you qualify, you can trade $500,000. Things like that. So I would just be wary if I were a trader looking for these, because it sounds really good. But you need to ask yourself a couple of questions. How many other traders qualify? Are there any known traders that have qualified for this? What sort of payouts am I going to make if everything goes according to plan? And also, so when you're trading these things, like how soon are you going to get back your money? So if you've put up $10,000, how soon is it going to take for you to get that $10,000 back? And do you trade in a way that they want? Because sometimes they have rules like you can't hold trades over the weekend, which for me wouldn't work because I have long-term trades on all the time. That wouldn't work for me. So it's almost like you have to make sure that there's a good marriage between their qualification rules. Obviously, they have stuff around drawdown and all that, but also the time frames that you trade and the methods that you trade. Because if you're trading a trend following strategy on the 6-hour charts, and they want you to close it at the end of the week and all that, that might be difficult. Now, you could close it out at the end of the week and re-engage, at the beginning, but you'd have to look at what sort of drawdowns would they allow for and all that sort of stuff. So if I were looking for something like this, I would just be really careful that I'm not choosing one that doesn't match my, trading profile. Mm-hmm. So that sort of thing. Yeah.
I mean, for me, there's been a lot of opportunities to promote these things, right? But I've always steered away from them because it's like you said, it's always funneling the person into a certain style of trading. And I almost feel like they want you to day trade when you have to close out your trades at the end of the week. So I think that doesn't work for a lot of people. And there's the drawdown, the 10% drawdown for a lot of them that I've seen. And I think it would work if you have a strategy already and it fits the criteria. But I think the way those are marketed is that they want people who want to get funded into those things. And they're making money on the front end with the fee or whatever. And I think most people won't fit into that mold. So I think you just be careful about that.
Absolutely. It almost seems like in some ways what they're trying to do is create, they teach you how to trade, right? So presumably they're teaching some systems, and then they have all these rules on it. So what they're doing is they're forcing the accounts to not be diversified, right? You think about it, because they're, you know what I mean? They're forcing everyone to trade a certain way and get out of trades, in a certain time frame, that sort of thing. So it almost seems like if they were really honest about what they were doing, they would welcome many different approaches to trading, because that's the best diversification. You don't get diversification when you trade the Swissy versus, the Aussie Kiwi. That doesn't work. The markets are way too correlated. So if I were them, what I would want, and I've talked to people about this, and I know people that have done this actually, is they have teams. Right. So they get teams of traders, and the team trades in one way, and they have a leader, and they have someone they can ask questions to, and they're all kind of learning the strategy. Then they have another team, and they're sort of competitive. So they're all trading the fund's money, but what's happening is they're completely diversified because they have all these different strategies and all these different team leaders that have different approaches. And so this is really cool because you do get that diversification effect. But if everyone's going through the same course and everyone has the same rules on how they, apply their trades, I don't see how you get any diversification there. And to me, that smells like, this is an education company wrapped up in in sheep's clothing. So I don't know.
That's interesting. I mean, ideally, even if they were going to do that, they would benefit from having people trade demo to build up a trading track record, flip the trades, and then the ones that survive would get funded, right?
Yeah, exactly. Yeah.
Interesting stuff. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
That's the big pitfall, right? Making those opinions part of your personality and your identity. And then once that becomes part of your identity, then you're going to defend that to the death. And
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have this question from a trader, and the question is, what should I pay attention to if I don't have a model of the world yet, and I want to incorporate some fundamentals into my trading? So do you have any thoughts about how you would go about creating a model of the world if you're using fundamentals?
I think you would start, or at least I would start with work it backwards, who's successful trading fundamentals, right? And then what are they looking at? And then kind of learn from there and then go from that. I think that a lot of people will try to make a model of the world that they think is right, but it will be way off. It won't approach reality. One example I heard was this guy used to be a coffee bean trader. He actually physically bought and sold coffee beans. So he knows how to trade the coffee bean futures market because he's really good at that. he knows how the mechanics work on the back end. But if you're just sitting you're at home and you're just looking on Bloomberg or whatever and looking at news about coffee, then what you get from that news can be really skewed in terms of how the mechanics of that market actually works. So I think that would be my place to start if you're going to do fundamentals, or if you know something, or if you know a lot about a market. Let's say that you work in cybersecurity or something, then you might want to look at trades in that market, like stocks or whatever it is, and kind of take it from there. Otherwise, it's such a huge pie that you have to like try to whittle down to a small little trading strategy that I think it's almost impossible to start from the big and go to the small. What do you think?
Yeah, I agree. Yeah, so I was saying that I mentioned to this trader, I said, well, you kind of, like you said, kind of want to work backwards. So like, for example, some people, what they do is they'll actually plot out the non-farm payroll numbers or the CPI numbers, and they'll sort of superimpose that on the chart of like euro or whatever, the pound or what have you. So they can do that. So that's kind of a way of like turning the fundamental data, the CPI data, for example, into almost like an indicator. And so you can see if there's like, is there any correlation there, or you can run correlations on that. You can also pull the data off of economic calendars. So you go and get the economic calendar historically, pull that data off, and then you, like if you're going to use these data to dictate your positions, you would go back in Forex Tester, take your positions based on where the data drops on the calendar, right? So you're going through like the Excel spreadsheet and then taking these trades and seeing, if you can make it work. It's really hard though to say, I want to trade fundamentals, but I don't have a model of the world. You kind of need to have the model of the world first. Yeah. You might have some ideas, like some very simple ideas like CPI or interest rates or whatever that you think is a really important thing, consumer confidence, whatever you think is the big, obviously with currencies, it's interest rates are important, elections, jobs, inflation, all of those things are really important. Inflation, because it kind of relates to the interest rates. So all those things are super important. But I mean, the shortcut is what you said. Like, so you might just say, well, Warren Buffett is the guy that I want to follow or whatever. So you would just learn as much as you can, read all the Warren Buffett and Charlie Munger books you can, and then try and figure that out, or find someone else who you think is really good at fundamentals and sort of try and adopt their point of view as well. You could do that. Like I remember the first book I ever read about the markets really was the book by Peter Lynch. He was talking about he would just drive to the malls and see which stores had the most, or drive to stores and see which ones had the full parking lots. There's Bed Bath & Beyond has a bunch of cars there, so I'm going to buy shares in Bed Bath & Beyond. He did things. I don't think it was that simple, but he kind of broke it down that way. And so like that made a lot of sense to me. So if you can do things like that, if you can come up with ways to cut through what's important, if you listen to these interviews of these guys on and men and women on these channels where they talk about fundamentals, they're often it almost always boils down to like three things, like 1 to 3 things that they focus on. The Bitcoin, bull is going to go, well, it's the Fed's printing money and Bitcoin is scarce. There's only 21 million, so they'll say things that, you know what I mean? Like they usually come down to like 1 to 3 things that they're really focusing on. And so it doesn't have to be that complex if you're going to be a fundamental trader. You often see that these people who base all of their fund, all of their trading, all of their efforts on just a handful of ideas. Yeah, I would try and shoot for that. Wherever you get those ideas, wherever they come from, whether it's books or from your back testing, something like that, so that you get to the point where you go, okay, this is what I'm going to do. This is what I think. This is what I believe. And so this is my approach. Yeah.
Yeah, totally. And I think you have to look at the market too. Like you said, it's very simple. It's just basically supply and demand, right? So where can you get supply and demand information? I think it's a little harder in currencies. Stocks is a little bit easier, I think. And, just looking through that. And then going back to your point on the data, plotting the data out. I think last week I saw a indicator on TradingView, and they had the COT data, commitment of traders. And it doesn't quite work, but you can kind of look for that kind of stuff on the platforms and see if they have indicators already built in that could make your job a lot easier.
Yeah, definitely. Yeah. And the commitment of traders data, is that for the futures market in the pros? Is that from the CFTC? Yeah, I know. That's tough because it doesn't come out. Does it come out weekly or something?
So, yeah.
Or is it?
Yeah.
I think it's weekly. Yeah. Yeah, so I don't think it's daily, but yeah, so yeah, that's the thing. You need to find your approach. This question from this trader, what should I pay attention to if I don't have a model of the world yet and I want to trade with fundamentals? It kind of suggests, I mean, reading between the lines, it's kind of saying that I need to have some overarching massive thesis about,
Like
you know what I mean? That's kind of, yeah, and I guess what we're saying is you don't necessarily need that, right? Like if you're going to be Peter Lynch or any talking head on Sky News or CNBC or Bloomberg or whatever, they've all kind of boiled it down. Like, and you can go on YouTube and find these people talking about, you can find plenty of them on there where they're talking about, like, the one I've been following lately, and we can link it up in the show notes, is Stansbury Research. So she does, Daniela Camboni. She does a really good job. Yeah, she brings in all these guys, all these people with totally different approaches. And it's amazing how different, like you can sit there in an hour or hour and a half or whatever, you can watch 3 completely different approaches. It's just like sitting down and watching the stock market channels, the business channels. It's the same thing, isn't it? Like, but she does a really good job of kind of like knowing where everyone's coming from and pulling out the important questions. But if you watch those, you'll just see the same thing. It's just they're focusing on 1 to 3 things, and that's really driving their decisions, and they're completely convinced of it. The good ones will actually they'll have alternative. They'll be like, well, I think this is what's happening, but if this happens, you know what I mean? You kind of have to be looking for evidence that doesn't support what you say and have more than one path. So, there's people who have confirmation bias who just focus in on their thing, and everything, all the evidence supports that. Mm-hmm. Then there's people who have false duality, and false duality is where they like, well, it's either this or this. But usually in life, it's not usually this or this. It's like this. There's a lot of options. So that's where you really want to be as a fundamental trader, I would say, is you want to be in that mindset where you have the path you're on, you think this is where we're at, but you're looking, what would have to be true for me to be wrong? Mm-hmm. And you're looking for that, right? And it's not just 2 paths. It's not the false duality of this or this, but it's, okay, I think it's this path, and I'm going to look for things that could be true. And if they're true, then I'm wrong. And then I have to look at this path, and then I have to look at this path, and I have to, you just want to be more open to what could be happening, I guess, is, that open-mindedness is really important, I think, for people who are in this area, because they have to be able to switch quickly. Like when you're wrong, because a lot of these people, they don't use stop losses and stuff, right? They have major positions, they're position traders and stuff. And so they're like long haul traders holding on to these things. So you gotta at a certain point, you gotta go, okay, that's it. I'm done. Shifting, pulling my money out of Google now. I think Google has or whatever it is. So yeah, that's really important too, I think, is that flexibility.
Yeah, totally. And on Stansbury Research, I really found Rick Rule useful if people want to check that out. Kiyosaki's always good, obviously. Who else? Gerald Caliante. He's always entertaining.
Oh yeah, he's funny. Yeah.
Yeah. And there's a couple guys in there, like, I'm like, ooh, you're 80% wrong. I'm happy that she puts them on there because, they're 20% right also. So they might hit something. But any favorites of yours?
She calls them out too, like Max Kaiser. I saw that one the other day as well. I don't really have favorites. I guess what I like about those is they're relatively short. They're usually like under 30 minutes or under, right? Yeah. And also what I like about it is just getting exposed to the ideas, because I'm not really a fundamental trader per se, but I really like to see what other people are saying. And I can't deal with like the news channels, and I don't watch those. So like, YouTube is a good place to go. Like, and those in particular are really good because you get such a wide array of opinions, like people just like gold. People will say, energies or cryptos or whatever. Like there's always these different approaches and the reasons why. And some people will say they'll have the same trades on or the same positions that they're looking at for completely different reasons. So, that's what makes up the market, isn't it? It's great. Yeah. So I like to watch them because I want to challenge, because inevitably I have my own ideas, even though I try to trade technically, but it's good, I think, to be exposed to the other side of that. Mm-hmm. So yeah, for me, I like that. I really like the other side.
The big one for me is like the Bitcoin maximalists, like Max Kaiser and who's that other guy? Sailor and those guys. because I don't think Bitcoin is like all that, but these guys seem to think that. So I like to listen to those guys in particular. They really challenge my opinions on that.
Yeah, totally. And like, who was the guy that died in Spain? He was the McAfee, right?
McAfee,
Was it John McAfee? Yeah, he was kind of like Kaiser, where he was like, Bitcoin's going to go to $1 million this year, And that was like 2 years ago or whatever. I think it's just really good to see why people say the things they do. Like, what are they thinking? Why are they thinking this? Why do I agree or not agree, disagree? I just think it's really good for us to be exposed to those ideas, because I just think once you get locked into something, it's really difficult to get out. So if you're in that flexible mindset where you're in a path, you believe that's the right path, but you're open and you say, what would have to happen for me to be wrong? What would have to happen? Like, then what do I do? Right. And then which path do I go down if I get these data coming in that confirm that I'm incorrect?
That's the big pitfall, right? Making those opinions part of your personality and your identity. And then once that becomes part of your identity, then you're going to defend that to the death.
Yeah. So the people that are able to disengage ideas, theses from person, you got to have that. And that's a rare skill, actually. It's a rare skill. We know from research as well. And people being able to coordinate theory and evidence, they usually just, when they say, well, why do you believe this theory? You're supposed to say, support it with evidence, right? Like that's science. And then people will just restate the theory in another way. And so that means you're not, you know what I mean? You're just not, you're not at that point. And you'll see this with people when you discuss things, they'll make it personal, or they'll instead of attacking your thesis, they will go with, or a group's thesis, may not be you personally, but another group that you're talking about, they'll attack them, just ad hominem attacks, which they don't have anything to do with the ideas. It's just that, oh, well, those people are stupid, or those people are dumb. Then you're not really dealing with anyone who's thinking about the ideas. Now they're just devolved into name calling. So
yeah, they're great.
You can't really have a conversation with them. Yeah.
So, something to be aware of. All right, thanks, Walter.
Yeah, thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
If you want to be neutral, you need to get out of the trade. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, let's talk a little bit about decision points in trading and where things could go wrong, like, entering a trade, exiting a trade, stuff like that. So what do you think are like the biggest decision points, and what kind of emotions can come up at those points?
Well, I can speak to my experience and what I've seen and what I've heard from the traders. And for me, the big ones are obviously at entry, at management of the trade. Usually it's around the point of, should I move to break even, or should I pull the plug on the trade? So that's kind of like mid-trade management. And then there's the exit. And almost always we are influenced by our prior experiences. So, for example, if we've had 2 weeks of mostly losing trades, we're probably going to have a hard time in most cases as a discretionary trader following the strategy rules. And in a lot of cases, you'll lose your confidence. So you might not want to, you may decide not to take a trade, or you might change things up. Like, well, the last 3 trades I've had good profit, but then the market went against me and retraced so quickly, I ended up with very little profit using my trailing exit. So this time I'm just going to get out as soon as I get to X amount of dollars or X amount of points or pips or whatever. So usually it's along those lines. And the simplest way to look at it for me is that it's a cliche, but you just control what you can. Mm-hmm. And in trading, you can control your decision making, how well you follow the rules. Although that sounds very simplistic, but that's the reality. And so if you decide to change your exit rules because of what's happened recently, you're not following the strategy that got you to where you are. You're not following the strategy that you probably spent hundreds and thousands of trades on testing. So is it going to work? I don't know. My guess would be it wouldn't work as well as the one that you tested, but you never know. So you know what I mean? So that's the way I look at it. So we have those key critical junctures in the trade. And I like to automate my exits so that I don't I release the psychological capital there, and I don't have to spend so much psychological capital there. That also kind of frees up the ability for you to take the opposite direction. What I've noticed in myself and some other traders is that typically if you're let's say you're buying the euro against the US dollar and you've been buying it for a few weeks, then all of a sudden you get a sell signal. It's hard to kind of flip and just take that sell signal straight away, especially because you've been going, you've had this filter, you've been looking at it as an uptrend. However, if you automate your exits, then you're not really making the decision, right? Like the trailing exit you've automated, you flip the switch on, that's doing it. So in some ways, your job is done once you enter the trade, And so I find that a little bit easier to kind of allow myself to see the market in a neutral point of view. You're never going to be neutral when you're in a trade. It's really difficult to be neutral when you're in a trade. If you want to be neutral, you need to get out of the trade. That's the best way to analyze any chart, is to get out of the trade. But so that's how I see it. At entry, at mid-trade management, and then at exit, those are the key sort of decision points in trading. But all of those are impacted by your previous experiences.
Yeah, I totally agree. And I would also add before and after, right? So the decision to actually start trading, maybe you're not in the best emotional state right now. Maybe you got into a fight with somebody. Maybe you were in traffic. So that's a key decision point to figure out, do I really want to trade right now? Or should I just go relax for a little bit and then trade, or just not trade at all, right? And then after, when the trade is closed, another decision point is to journal the trade, right? Are you keeping up with the journal? Are you putting all the information necessary in there? And if not, then you should try and build that habit also.
And it's interesting, have you ever played air hockey?
Yeah,
where you play, you have one paddle and you're trying to score on your opponent. It's interesting because in trading, if you think about it, in air hockey, I play defensive, right? So what I do, and it's the same thing in ice hockey actually too, and probably soccer, I don't know. I play in a way where my goal is to stop my opponent from scoring. So I'm basically playing goalie with my paddle, and I just wait for them to make a mistake, and then I will once in a while go on the offensive. And sometimes, and oftentimes, they'll score on themselves, right? When you got the puck whipping around and stuff, and they'll actually give me a point just by being really aggressive. So in trading, I kind of think of it the same way, where there are some traders who tend to be very defensive. So if they get, like you were saying about journaling and stuff, if they get into a really bad space and their confidence is low, they might tend to shy away from trading, step aside, maybe be gun shy on the next signal. Whereas there are other traders who are more offensive, and what they will do is they will try and make it back. I want to get all that money back that I lost on the USD CAD, that sort of thing. I guess that's another thing to keep in mind, thinking about what you were saying, do you want to trade, or the mindset that you bring to the computer screen when you're thinking about taking a trade. It's almost like what you're saying is kind of the preamble to that. Okay, should I trade today, or am I going to trade? And I guess I would just be aware as a trader, which camp do you normally end up in? Obviously, we can end up in both camps at times, depending on where we are in our lives. But there are those traders who are super aggressive and they tend toward over trading. And then there are other traders who tend to be gun shy and worried about the negatives, right? So they're the ones playing defense. And so just be aware of where you are there, and then you can kind of modify your environment so that, you don't, you know what I mean? You don't end up too far in one camp. And you don't want that. In other words, you don't want your one known weakness to be your downfall, right? That shouldn't be the thing that finishes you off as a trader. If you're going to the game and that this is my thing, don't let that thing beat you, right? Set it up so that that's not going to be the thing that takes you down. If something else, if your broker goes bust, or there's a financial meltdown and the fiat currencies don't work anymore, or whatever, there's a tsunami and it takes out your house and your computer and your livelihood, okay, fine, that's something else. But if it's you and it's the thing that you have, that's on you, right? That's your fault. So yeah, I would just be aware of that. As a trader, I would want to be aware of where I am, like on the continuum. Am I defensive? Am I offensive? Where am I there? Where do I tend to make my errors? Because you can certainly modify your trading life so that it's unlikely that one weakness is the one that is responsible for your downfall. So
yeah, sports are a really good analogy, actually, because when I used to play soccer, I was more of like, I prided myself in being a better passer instead of a scorer, right? So I was more playing on defense. I was more giving the ball away. And then one day I realized, hey, wait a minute, I could score too, right? So I consciously started trying to be aggressive and score. And, in the little league I was playing in, I was probably like the top scorer last couple of seasons, right? After I made that little switch. But in trading also, like I noticed that I was missing trades because I wasn't getting back in, because like you said, I was playing too defensive and I wasn't, aggressive enough, or I didn't have the confidence, I guess. So yeah, that's my tendency for sure. So it's something that I try to be aware of and try to work on.
Yeah. I mean, self-awareness, it comes down to that, doesn't it? Like in trading, that's one of the keys really to making progress, is just that self-awareness. And as you say, journaling can help. Understanding where your pitfalls are, where your weaknesses are. If you have those in mind, that can really help for sure.
Yeah. All right, cool. Yeah. Thanks, Walter.
Thanks.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah. Maybe this person is like over trading. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, we have a question from a trader, and this trader says, I really need to work on my patience, and I need more patience in analyzing my trade entries and my charts. So what should I do? What would you suggest?
That's a loaded question, huh? I think reading between the lines, at least to me, it seems like this person is losing trades and they're thinking, oh, I need to analyze them more so that I don't lose. I don't know what you would think about that, but that's kind of where I'm reading that. If that's the case, then they would have to just do more testing and more practice on that setup or whatever they're using to get more confidence in it, so they can just pull the trigger instead of being unconfident or, and trying to go back and forth on the analysis instead of just taking a trade and seeing how it works out. So that's what I would say. What do you think?
Yeah, I think it's interesting. You said reading between the lines. I mean, it's so funny. Like, you can read so much between the lines. You can say, maybe this person is like over trading. Right? Because like in a sense, I agree with you. Like it seems like they're suggesting if they had more data or more analysis, they would be more right.
Yeah.
That's kind of what it sounds like, the question. But it also could be, if knew how to analyze the charts correctly, I wouldn't be taking all these damn trades. You know what I mean?
Yeah.
Like all these crazy trades that aren't, you know what I mean? So I don't know what they're saying, but yeah, there's lots of reasons why you'd be impatient. It could be that you don't have a strategy that allows you to take trades that you believe in. It could be that you're like all over the shop. Like you see, oh, this guy's recommending that I buy the euro now, so I'm going to buy the euro. And then I have this system that I haven't tested and it's selling the Swissy. So I'm going to do that. Or, all this, like, it could be just information overload. It could be that as well. It's really hard to know, but I guess the key thing is here that in some way, this trader is saying that they're taking too many trades, or they're taking trades they shouldn't take at the very least, right?
Yeah.
There are trades taken and those trades should not be taken. So how do we fix that? I would say it comes down to assessing your performance. And so that's in your journal. You assess your entry performance, you assess your trade management performance, and your exit performance. And also you can assess your intuition performance. So you would have a score for intuition, as in, I have a 9 out of 10 confidence that this trade is going to end up being a winner. Okay. I've entered my trade at this price based on this strategy, these system rules, and I entered an 8 out of 10. And that was an 8 out of 10. It was a pretty good entry. It could have been a little bit better, but I did okay. Did pretty darn good. And then on my trade management, I moved to break even at the right time. So I get a 10 out of 10. I didn't do anything wrong there. And then on my exit, I got out at the right time according to my exit rules. So I got a 10 out of 10, that sort of thing. And then over time, you can see where's my weakness, right? Am I taking trades that are, that don't fit, or that is it the trade was a good trade, but I managed it the wrong way? Or is it that the trade was a bad trade because I took it when I shouldn't have, right? Because those are two different questions that, either I'm taking something outside of my rules, or I'm taking a system or taking a trade that fits, really following the rules. I'm not really entering, exiting, and trade managing as I should. So, and then the intuition thing is just a bonus, because we always fool ourselves into thinking that we're better at picking winners than we are. And so that way you can have some hardcore data on whether or not your higher rated trades that you take are more likely to be winners than your lower rated trades. So yeah. So it's tricky though. I mean, there's a lot to untangle there. That's the problem with these one sentence questions, right?
Yeah.
Is that you don't know exactly what's going on. It's better off to get like a paragraph to know exactly, or at least get a better idea of what's going on.
Yeah, you'd have to ask them some questions on what they're thinking and all that. But yeah, I guess to break down what you're saying, like at least for me in the past, like I would see like a breakout, and I'd be breakout, right? And then I would trade it, and I'm like, wait a minute, that wasn't in my system. So I think part of that has to do with a routine. When you sit down, like maybe you have a physical journal, you open it up and you write down something, or you do a little meditation before that to calm yourself down, or something like that, right? Some sort of pre-game routine that will slow you down and not allow you to jump into those trades when you see them. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice. A lot of people have a day job. You don't want to spend too much time on the charts. So starting on the daily chart would be a good idea.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I have a question. I actually was talking about this with a trader years ago, but I was just thinking about it this week. And this trader's he's worked for hedge funds, creating strategies for them and stuff like that. And he's a really good programmer and a good thinker. And he was mentioning to me, he said, it's always so easy. It always comes down to it's easiest to build a trading strategy that is a trend following strategy. And I thought that was a fascinating comment, because in my mind, I had always thought that the easiest type of strategy to build would be a breakout strategy. I'm not a programmer by any means, but it got me thinking about how, sort of as traders, our worldview or our view of the markets can color what we think is possible or easy or difficult or whatever. Because I've always held, and I've always thought, that the simplest and easiest EA robot to create would be a simple breakout strategy. It just seems so obvious to me. And yet he was, and he's got a lot more experience. He's built these things. He worked for, a market wizard guy for his hedge fund and all that. And so I thought, okay, well, I'm going to defer to you here. But that was a very interesting thing, because, I'd read stories or there's reports, you can go and find them in trading magazines and stuff, where they've looked at, for example, like the old turtle rules that are all known now. The old turtle rules from the 80s and 90s, they stopped working at a certain stage. I think in the mid 90s or early 90s, they stopped working. And then after about 10, 12 years, they started working again, and somewhat difficult to create trend following strategy. Not total. I mean, I can see why he would say that. I can see where it would be totally difficult to create a trend following strategy, but I always just thought the low hanging fruit is that breakout strategy. So what are your thoughts on how, because in my mind, I'm linking these together, the worldview of the markets and the belief that a certain type of trading system or strategy or approach is the quote easiest one to automate. What are your thoughts on that? Because I think it's a fascinating look into the psychology of different traders. That's how I see it.
Yeah, and that's a great question. Well, it depends what you're doing, first of all, right? Like if you're in a fund and you have an automated system, then yeah, maybe trend following systems would be easier to program, or maybe that's just the way he looks at the market. I don't look at it necessarily from the type of strategy, but like I look at it more from individual trader standpoint, like trading the daily chart, number one. That would be the easiest place to start, right? Because a lot of people have a day job. You don't want to spend too much time on the charts. So starting on the daily chart would be a good idea. And then from there, just, I'm not set on one or the other, trend or counter trend or breakout or whatever, but that would be for me the easiest place to start. And then look at what other traders are doing on that time frame, and then kind of like test that and then make it my own, right? But as far as trend or counter trend, I don't see one as being easier than the other one.
Yeah, I always, like in my mind, I always had the counter trend as the hardest, because you'd be fighting, in some ways, you'd be fighting the urge to add some sort of martingale element to it. And some counter trend strategies or reversion to the mean strategies do have that. Like they'll have a system where they'll take a sell and they're going to assume that it's going to fall back to the sell, because they think it's going to fall back to the moving average or the middle of the Bollinger Band or whatever they use, the pivot point, whatever, and then if it goes against them, they take another sell. You know what I mean? Yeah. And I was always really uncomfortable with that, that idea of taking a trade, being wrong, and then taking another trade. You know what I mean? It always seemed like too close to martingale. I mean, I know it's not officially definition martingale, but it it had that smell to it, and so I always thought, ooh, these are tough. But I have heard people that do this, the reversion to the mean, but they tend to stick to certain markets, because they find that statistically there are certain markets that sort of kind of hover around price, whereas other ones are more likely to trend and stuff like that. So I found that interesting. I thought, okay, that makes sense to me that they would do that. Yeah, in my mind, I'd always thought that would be the most difficult one to do, because it seemed to me that inevitably you'd have an upside down reward to risk ratio. So you'd have to be really, really right to have an upside down reward to risk ratio, because I haven't been able to get any that I've tested, strategies like that, like reversion to the mean type strategies, where it works if you don't have a really wide stop, right? So to me, that means you got to take quick profits and you got to have, big losses. And so that means inevitably a high win rate. So I was always uneasy in that world. But I mean, I'm sure there are a lot of people that love that. In fact, I think in some ways, as a beginning trader, when I first started trading, I was of the reversion to the mean mindset. Like I remember thinking, when we were trading the euro and it was like 70 or 87 cents or whatever, and then when it broke $1, I was like, no, it's never going to get, it's going to go back under $1. They're not going to, and here we are 20 years later, and the euro hasn't gone below $1. Like, it's just funny. It's funny to me that I was thinking that back then, I thought, oh, it's going to, they'll send it back down. No way. Because when I first started trading, the euro was new and it was always under $1. It was actually in a permanent downtrend if you go back and look at the old euro chart, it was actually, and they made a composite chart too that wasn't really it was what the euro would have been had the euro existed the year before. They also had that. But the point is, we were laughing as traders, like the only thing you need to know about the euro is you need to sell it. That's all we knew. Yeah. And then when it broke $1, it was kind of like a mind bender for me. I'm like, oh, it'll go back down again. It'll go back down. And of course it still hasn't. So yeah, so it's your mind, it's your view of the markets that color what you think is easy, isn't it? I mean, it's just so interesting, I guess.
Yeah, my friend actually does pretty well with the counter trend thing. Like that's his bread and butter trade, and that's what he learned at the hedge fund. Yeah, so what he does is he looks for like a major support level or whatever, and then he looks for overextended price, and then he has 4 levels above that, and then his stop loss, and then he sets the levels by using ATR. So then price will come up, and maybe he'll take 2 of his entries, and then he's looking for a big, downside. So he's willing to hold it and have that big gain. So that works for him, but I don't think most people could do that.
Yeah. Does he take more trades if it goes against him? Yeah. Or does he just have this
He has up to 4 trades.
He has 4 trades. So it'll go up and he'll sell. It'll go higher, he'll sell again, higher, he'll sell again, higher. So up to 4. Yeah. That's, to me, those are the only ones I think that would work. You know what I mean? And that's, to me, that's so tricky. It's funny. Like I've done the opposite of that. I've literally done the opposite of that, where I'll take a trade, and as it gets closer to my target, I'll add another one, and it gets closer, I'll add another one. And I'm stacking them closer, as really tight right before the target. Like huge positions that are risking everything that came before it. It's the exact opposite of that. So it just shows you where my mindset is versus your friend. So I just find that it's so interesting.
Yeah, that's a natural tendency, right? Like especially with hedgers, they tend to like pile it up and then they're like, oh crap, I'm stuck, right?
Yeah, exactly. Yeah.
All right.
All right. Thanks, fascinating stuff.
Yeah.
Thanks.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Like there's this temptation to like pull your money right out of your hands so that you don't lose money for our collective good. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So, question. I was thinking about this the other day, and I don't know if you had much experience. I think you have actually a little bit along these lines of trading with other people. So my question is, when you're trading with other people, what are some of the things you have to think about in terms of, this is a psychology podcast, right? So there are some issues I think that will creep up that we may not necessarily anticipate. So for example, I'll give you some things that I've noticed. So for example, when you are trading with somebody else, there are a lot of ways to do it. It could be where everyone's sort of trading the same strategy, right? Which means, or same strategies, several strategies. So what that means is, of course, does everyone agree that this is a good strategy to trade, right? So the match between trader, right? And then there also could be situations, there are lots of situations. So in that case, you might have a system where it's like one person lives in one time zone and they're trading it during a certain session, and then you trade it during another, or whatever, or maybe you take certain markets and they trade other markets, but you're basically doing the same thing. There could be a situation where one person's kind of like the money person and the other person's like the trader, right? But maybe the money person knows a little bit about trading, which is why they found you or they knew about you in the first place. So that, there's the whole dynamics there about like a person who knows about trading, who's now giving you the green light to trade their money. What's the relationship there? Are they able to tell you, hey, why aren't you trading the euro right now? It's on a run, or things like that. And then also there's a situation where it's like people are doing different things. Like, I'll give you an example. So I traded a strategy where we were basically gaming the system, and you were essentially trying to make swap. Okay, so the swap that you get paid, and that's it, right? And it was going really, really well. Like we were on the best months, you could get like 7% a month, which is pretty good for just essentially getting paid to wire money back and forth. Because what you're doing is you keep wiring money to try and keep the trade open, right? So that's the game. And you don't want to get too greedy, because if you get too greedy, you get popped out of the trade. But if you're not greedy enough, then you're not going to make, 5 to 7% a month. So in this situation, we were both meant to babysit these open positions, right, on the accounts and collect the interest. Well, I had a trading partner who decided that he was going to take directional trades in our swap trading account. So you can imagine, right, the disasters. Anyway, the point is there are these issues when you're working or trading with other people where some people might have certain goals or certain perspectives versus yours. And how do you match those up when you're working with other traders? I think this is something really important, because I think sometimes people forget that just because you like somebody, somebody and respect their trading doesn't mean you should be trading with them. You know what I mean?
Yeah.
Because there's a lot to unpack, right? So I just wanted to get your thoughts on that, because I've had a lot of experience in this sort of thing, and I've seen a lot of different things, but I'd be interested to get yours because it's a minefield. It really is. It's like having a business partner, in a way. It really is, because if trading is your business and you're doing that trading with somebody else, it's like having a business partner, whether it's formalized or not. So I just wanted to get your thoughts on that.
Yeah, that's a tough one, right? I think, like you said, there's a lot of different ways you can slice it. You can be trading with somebody, you can have a money guy, you could be trading in a mastermind group, you could have a trading accountability partner. And I think the bottom line is that you should look for a personality match. Is it someone who
you get along with, number one, but also you can be respectful to each other. You'll be both supportive to each other, and you'll be able to set and manage some boundaries from the beginning. I think that's really important. So like setting up, okay, hey, this is the account. This is not our directional account. We're doing swap in this account. So you got to respect that. And if they're cool with that, then great. But whatever they do after that, obviously is out of your control. But I think that's the number one thing to look for, right? Is a personality match and a respect match. Is that person not only respect, but also accountability? Is that person going to do what they said they're going to do? And if they don't, and if they've proven that they don't do that 1, 2, 3 times, then you find somebody else, I think. But I think that's the bottom line in any relationship. And a lot of those trading groups or whatever, they can be a lot more trouble than they're worth, in my opinion. Mastermind groups and stuff like that, because everybody either has an opinion against yours and they try to beat you down about it, or if they're respectful, they might not be supportive, or they might be flaky. So I think it's actually pretty hard to find a group that's worth joining and trading with, at least in my experience. I don't know. What do you think about that?
Yeah, no, I agree. I agree. I think that's why, like, when you look at like the prop firms, that's why they have all these hurdles to let people in. They don't just let anybody in, right?
Yeah.
They'll usually make you qualify or pay money and learn how to trade through their strategies or their, approach, and then qualify. Like any group worth joining is always difficult to get through. If you think of any like university or company that you wanted to work for, whatever, it's the same thing with trading, I think. So yeah, I think the key is to have those, like writing a system. When you write your system, you have your rules for trade management, for risk, for entries, for exits. And it's the same thing with that. So like in my experience, one of the things we had to do is we had to just break off money and give it to the trader to trade aggressively instead of allowing the trader to use the swap account. And also, let's say that you and I are trading together and I'm trading a trend trading strategy. So I follow the trend. If the market's trending, I'm doing well. If the market's not trending, I'm losing money. Okay. Or best case, breaking even, but probably losing money. And then let's say you are trading a reversion to the mean strategy. So when the market's trending, you're losing money. And when the market's just chopping around, you're loving it. Okay. So what can happen is, let's say we have 6 weeks of really strong trends. So I'm killing it. And then I say, hey man, how are you going? And you're like, not so hot. Yeah. And so there's this temptation to pull your money right out of your hand so that you don't lose money for our collective good. Mm-hmm. Right. But of course, what's going to happen next week is that the trends are over and then you're going to kill it. You know what I mean? So there's this competitive sort of, it's almost like when people are looking to invest in mutual funds, they'll look and see which ones are at the top and they'll invest in those. Well, those are due for a retracement, right? They're going to fall back into the middle of the pack. What you should really be doing is looking for those funds at the bottom and then sinking your money in there and hoping that that the markets change, that they turn it around, right?
Yeah.
But that's not human nature. So yeah, it's in some ways you even have to have rules for how are we going to pull the rug out from somebody? You know what I mean? Because it's easy for people to get thinking, oh, well, I'm the good trader here. Hugh's not even pulling his weight. Look what I've done since the beginning of the year. I've been killing it and Hugh's been just losing money. We need to get more money to me, or I should get paid more because I'm making money and he's not, it'd be this whole thing. There's actually the best example of this that I've seen in terms of leveraging this experience that you have when you're working with other traders is where they had teams and they taught. So they had a leader and the leader would teach each team their strategy and the teams would compete. And so each week, each day, each month, they would see how well they were doing, right? Mm-hmm. And so the fund would allocate funds to each of these teams. There's 7 teams, and they would each get funds based on how their performance was. And the traders in the teams as well, they would be responsible for bigger accounts as they did well and followed the strategies and all that. So that was kind of cool because it was almost like a sports thing, you know what I mean? Where you're competing against other. And so it wasn't really, and everything was everybody knew what the rules were, how you would get more money to trade, how your team would get more money to trade. It's totally lined up. And of course the coaches were incentivized. They would get a chunk of the team's revenue, of the team's profits as well. So it was a really cool strategy. And so, it was different to if it would be a 2-person or a 3-person trading team because it was more well defined, and they even had like their team name and stuff, like mascot and stuff. You know what I mean? Like
they have jerseys and stuff.
Yeah, I don't know, maybe, yeah. So anyway, I just think like that's a way to kind of leverage that competitive sort of you're winning, you're losing, I'm winning sort of, you know what I mean? Like that sort of thing. Like if people are looking to do that, that model needs a lot of structure and everything. But yeah, so I just thought that was a really cool way of dealing with it, because when it's a small group dynamic, it's a little bit different. When it's like, no, it's your fault. No, man, it's my fault. It's like that kind of finger pointing and stuff. Yeah. So, but one thing I wanted to mention though that I forgot. So there's a way I think to get that criticism, but without the pain of the money involved, which is basically having a trading accountability partner. We've talked about this before, right? Mm-hmm. So one of the really cool ways of trading with somebody is to not trade together in the same account or the same pooled money, but actually just talk about how your trading went each week. So like on the weekend, you meet up with your trading accountability partner and talk about what you did well, what you didn't, let them go through it. So that's like a really good way of getting the critique aspect of a trading team, but without the friction of the money. And you know what I mean? You just have to be open and honest each week and share what's going on. So I think that's a really good way for traders to, to leverage that dynamic in a positive way, is to have someone that sort of critiques you and you do the same. And you're not critiquing them as a person. You're just, how well are you following, right? Your rules. So it's your behaviors. It's not you, the personality of you. So yeah.
I think that's really the best solution to like a trading group or any kind of support, because ultimately, even if you start with the same system, you're going to branch off and trade your own version of it. Worst case scenario, like when I hear you talking, all that's going on in my mind is ego. That's what gets in the way, right? Everybody's ego. They want to be the top dog. They want to be the highest performer. So if you can work with somebody who can put their ego to the side and just help you out and to support you, and you can do vice versa, I think that's the best solution.
Yeah, that's a great point. Yeah, absolutely.
All right. Thanks, Walter. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. What are you getting out of not following the plan?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, a YouTube listener, I guess watcher, has a question. He asks, why is it so difficult for a trader to follow his written plan? What do you think?
Well, if you don't incentivize it, then why would you do it? So why is it so difficult to get people to follow the law? Well, it's not, because you're incentivized to follow the law. If you don't, if you go faster than we say you should go, then we can take your money, right? If you hurt somebody really badly, we can take your freedom, right? So if you're having issues following your written trading plan, then that's because there's no consequences, right? In fact, I would even argue that if you're not following your trading plan, then your life is set up to reward you not following your trading plan. You know what I mean? So do you know what I mean? Like that's like we'll fall. And have you ever seen that thing where like they drop the balls and it's like a big, and they bounce off the little pegs and they end up in different slots and stuff? Yeah. Is that what it's called? Yeah. So that's like, I think of people like that. Like I think of myself and people like that, where you just kind of bounce and you just kind of go like with the flow, and the easiest path is where we end up, Like if it's easy for you to wake up in the morning and make some eggs and then read a book, you're probably going to do that. If it's just killing you that that you're gaining weight or whatever, and you just want to, and you just can't stand the look of yourself, and in the morning you're not going to eat some eggs and read a book, you're going to go for a run, right? Or you're going to go work out or whatever, right? It's because the pain has motivated you so much that it will be more difficult for you to sit and eat breakfast knowing that you should be working out than for you to go and work out, right? Mm-hmm. And it's the same thing with your trading plan. So if your trading plan is designed in a way so that when you do the right things, you get rewarded with those things you like, and if you don't do the right things, you don't, or you get things that you like removed, or you don't get to do the things you like, then guess what? You're gonna follow it. I mean, it's really, I mean, I hate to be like over simplistic, but you can read the Charles Duhigg book about habits, right? I think it's The Power of Habit or something like that. So yeah, that's what I would do. Is I would, and we can put that book up in the show notes. But that's what I would do. Is I would design your life so that you will follow that path. Because right now, what's probably happening is your life is set up so that the path that you're on, that's the easy one. Like that's the one that's going to reward you, right? And that's why, like, I know we talked about in the last episode about like training accountability partners, but that's one of the things that when you have a training accountability partner and you know that each week you're going to have to say, okay, this is what I did. This is why I did it. This is what I didn't do. I know I should have done that. Like if you have that in the back of your head, knowing that in a couple of days, you're going to have to explain your behaviors right that you're doing right now, that's a big motivator too. That's a huge motivator. The observer effect, it's called, where you like know that somebody's watching you and that changes what you do. You know, like if you have a workout partner, and you know, I had one when I was in graduate school. My friend would knock on my door every morning at 5:30 in the morning. I knew he was going to be there. You know what I mean? So what am I going to do? Am I going to wake up, go down there and open the door and say, I'm not going with you today? Like he's in his workout gear. He's going to go to the gym, you know? Like, what am I going to do? So it's the same thing. Like if you know somebody is counting on you and they're going to look at, you know, they're going to watch you and see what you get. Are you going to come with me to the gym right now? I'm ready to go. So that sort of thing with the training accountability partner can really help. Those are my thoughts on how, you know, you can modify your life so that it's the path that you're going to take. What are your thoughts on not following a plan?
Yeah, I think there's also the awareness around what are you getting out of not following the plan? Because you're getting something out of that. That is stronger than actually following the plan. Or you're getting more reward out of not following the plan than you are from following the plan for some reason. So, you know, be aware of what that is. Maybe it's the lottery ticket mentality. Maybe you think you think a trade is like a lottery ticket. So you're buying that and hoping it'll win. And that's more exciting to you than actually following the plan and, you know, getting the 63% win rate or whatever it is. So something to consider there also.
Definitely. Yeah, definitely. Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Good job. You're following your rules. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, we have a question here from a trader. The trader says, I want to avoid the fear of missing out, FOMO, as this causes me to break my strategy rules and I have bad results. All right, so my thinking along these lines is that if you are having FOMO, fear of missing out, so you're breaking strategy rules. So it sounds like there was an entry or there may be an entry, right? You don't have your entry yet, but the market's moving. So you're like, I need to get in, right? So in a lot of cases, like people have pullback entries somehow or whatever, right? Like the one that I trade, Tokyo Train, is like that. System 2 trading systems like that, where you're kind of waiting for a pullback to get in. So then you're breaking your strategy rules and you're getting bad results. Okay, so we know that the bad results are coming from breaking your rules, right? If you have strategy that you believe in, you've probably tested it, you probably have the numbers, you probably have some confidence in it, right? If you're getting bad results, you're saying, well, that's because I'm not following my strategy. So really what's going on here is this person is not following the rules, right? They're a slave to the emotion, the fear of missing out. They're a slave to this, you know, oh no, I'm going to miss out on an opportunity. And they're not a slave to their rules. So the reality is, if you want to change your results, assuming you have a strategy that makes money, we don't know that that's the case, but let's assume that what you need to do is set up your life so that you are following your rules is the only thing that makes sense, right? Because right now, what makes sense to you is following your emotions, right? Not following your rules. So what you need to do is get away from that and move to a situation where you know that if you follow your rules, you will be rewarded. If you follow your rules, you will have a trading accountability partner or someone who looks over your trades every week, whatever, that says, good job, you're following your rules, even if you lost money that week, right? Because that can happen. You could definitely have a week, especially if your win rate is anywhere around 50% or less. It's quite easy for you to have a losing week, depending on how often you trade. So yeah, so I would just say this at the core is emotional trading. And then it's kind of like this weird blame game where we blame it on, we're having bad results because we're not following the strategy. If I had just followed my strategy, right? We don't know that, because you could follow your strategy and still lose. You could follow a bad strategy, right? It doesn't make money. But in this case, it's just kind of assumed that that's what we have. So that's kind of my thinking for this trader. What are your thoughts on this fear of missing out issue?
Yeah, the thing that comes to mind is something you mentioned before in a previous episode on thinking like on a long enough timeline. So if you said gamblers think on a long timeline, right? They're not so concerned with the current bet. They're concerned with how am I going to perform over like 10,000 bets or 1,000 bets, or whatever it is. And I think this is a similar situation where, you have to trade enough so that your advantage plays out. And if you don't do that, then you're always going to be at the whim of your emotions and what looks like a good trade at the moment, but isn't part of your system. So I think if you can think in a longer time frame, you think about, okay, on a long time frame, if I don't follow my rules, I'm going to lose money, right? And if you follow the rules, then you make money. So I think thinking that way helps a lot.
Yeah, that's a really good point. I've been testing a strategy over the last 3.5 months or so, where it had a really nasty drawdown, and I was like, it trades almost every day, right? And I was like, but I was thinking in terms of the long term. I said, I think it'll probably pull out of this, and it is interesting that study where they study the best gamblers, that they look at like they look on a really wide horizon and way out into the future. The thing about trading, though, or even gambling, I guess, is that once you look in that really long term, you realize it doesn't make any sense to take huge risks. You know what I mean? That almost becomes like a rookie mistake. You know what I mean? Like, because I remember the first time I got some traders together and I was gonna like give them a crash course in trading, right? I had to, because I just got out of break-even trading. So all of a sudden I'm an expert, right? But one of the things they said was, like, what are some risk management tools that you know of, or risk approaches to risk management? And you know what they said? They said, well, if the trade looks really, really good, like it's going to be a winner, then risk more. And that blew me away. Even then, I was like, you know what I mean? So that's like that kind of thinking just goes away when you have like you were saying, the long-term gambling thing, where it's like you're going to live for thousands of years, and then how would you operate then? Because then that if you have a really small edge, you're going to make a lot of money, like a casino, right? Casinos have these really razor thin edges, but they make a lot of money. And why do they make money? Because they just get people that go through the system and they're skimming off that little bit, like the slot machines that pay out 98.5% or 97.2% or whatever, it pays out. So every dollar that goes through there, 97.5 cents gets spit back out one way or another in the form of jackpots, and they just take that little bit. Well, it's the same with your trading strategies, right? If you're thinking of the long term, you go, who cares if I keep, ending up with these little tiny wins and these little tiny losers, and once in a while I get a big winner or whatever. If I add it up over time, over years, you're going to see a big fat result, because you're compounding and all that sort of stuff. So yeah, it's a really, really good way to look at things. It changes everything. It really does. When you start thinking in terms of long term, there are a lot of really good habits that come to the forefront when you do that. Whereas, the crazy gambler doesn't think long term. They just think the next bet, right? Oh, this is a sure thing, right? Yeah. So they do that. Yeah.
Bet everything. I think it also helps to think about that in your real life too, right? Like if somebody yells at you on the street or something, or if somebody honks at you in a car, like in the long term, that doesn't really matter. So why are you going to get bent out of shape over that guy, right? He's just an ass or whatever. But I think it helps to look at it that way too.
Yeah, that's a good point. And they could, maybe their dog died that morning or something. Like you don't know. You never know what's going on in their life too. Yeah.
All right. Thanks, Walter. All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
You can be a really good trader. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question here from a trader, and this trader writes in and says, my biggest trading challenge is that I want to become an expert trader and to know when to enter and when to exit trades. So that's where he's coming from. And my question to you is, what do you think about that? What do you think about this goal of becoming an expert trader so that you know when to enter and when to exit? What are your thoughts on that?
Yeah, I think that's everybody's goal, right? When they get into it. That's not uncommon, obviously, but I think some people put too much pressure on themselves when they say, well, I want to be an expert trader. The first step is to see if you like it or not. Do you really like trading? Do you enjoy it? Do you really want to be doing this for a while? And then the second step is just to learn the steps, learn the basics, go read some books, learn a few trading strategies, test them out, get some data on it, and then kind of go from there. And all you really need is one trading strategy, right? So I think that's a big thing to consider, and saying that you want to be an expert might be putting a lot of pressure on yourself. So just take the steps one by one and then see what happens. And then the second thought would be, you might not need to have like exact perfect exits and entries. There are different trading methods where you can kind of scale in, scale out, and most of your trades are so-called wrong, but they're in a general area where you can make money later on down the line. So don't put too much pressure on yourself to have an exact entry and exit, because there are methods that have a little bit more of a gray area. So that's my thoughts. What do you think?
Yeah. I think you're kind of right on the edge of where I wanted to go with your last comments. That's exactly what I was thinking, because thinking back to when I first started trading, I used to think that you had to sit down, and as a trader, you would sit down, you would look at the charts, and you would know it's going up or it's going down. You know what I mean? It was a prerequisite. If you're a trader, the prerequisite was that you must know at any given time, where is the market headed, right? Okay, and I think that's kind of built into this question. So I think you're kind of picking up on the sort of the same idea that I was thinking. And I could be wrong, but I think what this trader is saying is that I have no idea when I sit down and look at the charts where it's going. So I need to know, right? I need to become an expert, right?
Yeah.
I disagree. I totally disagree with that idea, because I had that idea where we would sit, I literally would call my trading buddy. We would get on, it wasn't Zoom back then. It was like Skype or something. It was Skype. Yeah. We would get on Skype, and we had the same, I don't think we screen shared. I think we basically had the same screens that we could log into, so we saw the same thing through the same template, the same, indicators and everything. And our question always was, okay, where do we go? Do we buy or sell? And we were trading the pound yen every day, at the London Open, basically. And we did that back with the euro too, when we first started trading in 2001, when I was trading with him. So, I think that's the wrong way to look at it. And I could be wrong, but almost every really good trader I know has this same sort of outlook which is, I just sit and wait until there's free money over there in the corner and I go pick it up. Right. So you're almost like that lion that waits in the tall grass until there's like some weak little water buffalo, and then you pounce on it. Right. That's kind of what I view trading as, And so I don't think that you necessarily, as an expert trader, would need to know when to enter and when to exit, which gets into the other sort of subtle thing that you were touching on too, which is you can be a really good trader. And I know you said this, and I'll say that basically in a different way. You can be a brilliant trader. You can make piles of money. You can change your life. And you can also think, I really screwed that trade up. And that can happen all the time, because you might have a trailing exit that popped you out of the trade before it went another 500 points, or 500 pips or whatever, right? You might have a really good system that makes money, but you feel bad. I'll give you an example. Yesterday, I took a trade on my system. I put the orders in, and the orders are triggered or not. I was kind of high-fiving myself because I had several days in a row, that were going well. And I was like, yeah, and I saw that it was probably going to click in during Asia. So I'm like, yes, another day, and of course, what did it do? It just barely clicked in my 3 orders and then went, and then stopped all 3 orders out, right? Made nothing on the day. It's the worst possible result other than getting gapped on your stop or whatever. So it was like the worst thing. But I don't look at that and say I did anything wrong. Like all my numbers, everything pointed, the system is a straddle. So it'll take a buy or a sell, but it took a buy in this instance. And I anticipated it was probably going to be a buy and everything was looking good because from the buy side, I've been making money and then it just collapsed. But that doesn't, I don't take that personally. You know what I mean? And when I take trades, a lot of my discretionary trading, I have 2 targets or 2 ways to get out of a trade. I split it up. One of them has a target and one of them has a trailing exit. So that way I kind of trying to be always right. So if it really goes in my favor, hopefully my trailing exit will make me a big pile of money. If it doesn't go, it just goes a little bit. Hopefully my target will be hit and I'll make a little bit of money, right? And it'll, you know what I mean? So I don't know. I literally, most of the time I look at the charts and I think, I have no idea where the market's going to go. I have a couple of hypotheses. It could go do this and go up. It could do this and go down. It could do this and go nowhere. I have lots of ideas about what could unfold, but I don't have to be married to anyone. So I think this idea that, because you look at the charts and you don't know what's going on, you need to learn more. You need to become an expert. I think that's incorrect. I think that in a lot of ways, and you've talked a lot about this on our podcast here, understanding yourself and humbling yourself and open to new information is really important as a trader. And so I don't think that expert traders necessarily know when to enter and when to exit. They might design rules where to enter and where to exit. That doesn't mean they're always going to feel like those were the perfect rules for every sort of trading environment and every trade that unfolds. Because I certainly don't feel that way. I'm always looking how would this be different? And that's a slippery slope that you can get into and over, curve fitting and over designing your parameters so that they work really well on the last trade. And we've talked about that as well. But I think the main thing is what you hit on, which is you don't necessarily need to know where the market's going. And you actually don't need to necessarily have perfect entries and exits. You just need to have something that's good enough to extract profits, right? And then you work on the next system, right? You work on another one that's complementary. So one system works really good in trending environments, and the other one works really good in tight range-bound environments and that sort of thing. So I would just caution anyone who thinks that you must know where the market's going to become a profitable or expert trader, and that you must know where the perfect entry and the perfect exit are, because that's not true. It's just not true. You just need good enough. And in fact, getting to good enough is usually the type of strategy that will work in a lot of different markets, right? One of the signs that you're overfitting, you're curve fitting, is that it starts to break down in certain situations, right? Like maybe it works really good on, the EURUSD, but it doesn't work so good on the Aussie CAD. So it could be, now it doesn't necessarily have to be, but it could be that what's happening is you kind of, using the specific moving average or the specific Bollinger Band settings or, whatever you're using indicator wise on that kind of fits that particular market, the EURUSD, and doesn't work when you're looking at other pairs or the market. So yeah, those are my main thoughts, is that, there's a lot to unpack. It's a very simple challenge that this trader has laid out there, but there's a lot in there, and a lot of sort of deep and dark roads that you can go down and get stuck in for years. I know because I've done it. Yeah.
Yeah. Same here.
Yeah.
And to extend your idea of you don't need to know where the market is going to go. If you look at hedging, now hedging isn't for everybody, obviously, but our friend Gonzalo, right? He was talking about hedging at the conference, and in that method, you don't need to know where it goes. You just you could close your eyes, enter a trade, and then you would just manage the trade on both sides, right? So I think that's something to consider also, look into that, not necessarily trade it, but look at the concepts behind that and the fact that you really don't need to know exactly when to enter and exit.
Yeah. Yeah. It really frees you up, doesn't it, when you start thinking that way?
Yeah.
That style of trading can really remove you from it kind of removes the ego from the trade, which is interesting. It's a very interesting way to trade, given that so many of us are stuck. Our ego is tied to each individual trade. So it's it's a referendum on how well do you trade every single time you take a trade, what are you going to do here, buddy? Are you going to pull this one out?
Yeah.
But it changes when you start trading like you say, like Gonzalo. Yeah. Yeah.
Okay, cool. Thanks,
All
Walter.
right. Yep.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Your confidence, and you get to that point where you're like, okay, I know what's going on here. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here from a trader, and the question is, what's your biggest challenge? And he says, I'm trading a small account and I need to see more profits, more consistent profits. So that's what I need because I'm trading a small account. And the question about if you wave a magic wand, what's the one thing you would change about your trading? He says, I need confirmations before entering a trade. Okay. Mm-hmm. So what are your thoughts about this, unpacking this idea of trading a small account and needing more consistent profits, and also needing confirmations before deciding to step into a trade?
Yeah. So reading between the lines, it sounds like he's trying to make a living with a small account. That's what he wants. But just my opinion on that. But even if you have a big account, you still want consistent profits, right? So I think this is a case of somebody who wants to be very sure about the outcome of the trades, and they want like high win rates. So in that case, you'd probably look for like a high win rate trading strategy. And you can never have like 100% confirmation. So you have to, again, go back to your system and lean on those statistics, your win rate, your win versus losses, and all that. And just take it from there, because the more trades you take based on that system, the more profits you'll probably make. So I think that's the way I would slice it. Maybe I'm reading that wrong, but that's the way I see it. What do you think?
Yeah, I think those are really good points. I agree. I think, that thing about the thing that I wish I could change about my trading is that I need confirmations before entering a trade, and then couple that with I need more profits consistently. Yeah, I think this is a confidence thing. I think this trader is looking to add more indicators or more confirmations, more reasons that this trade is going to be, working out for me, because he's feeling under the gun, trading a small account. Again, this is all, like you say, this is sort of reading between the lines, trying to figure out what's going on here. But if I had to guess, I would guess that this trader is feeling rather lower confidence, because he's under the gun trading the small account, wants to really build it quickly. And so I would caution. First of all, I wouldn't be trading the account. I would be trading demo or even in a simulator like Forex Tester or something. And I would be trying to, as much as possible, trying to build up your confidence without risking money. And so if you're trading a small account, you might even want to trade with smaller accounts. So once you go through the simulator and build up your confidence, and let's say a small account's like $5,000, he might actually want to trade like a $500 account, 10% of that first, and just get good at executing first. As you know, and most traders probably know listening to this, when you're deciding about a strategy, you end up usually on one end of the scale or the other. On the one end of the scale is you have really high win rate, but lower reward risk ratio, which means you got to execute really well or you screw it up. Your execution, the wiggle room for execution is really tight. And if you get slipped by your broker or anything like that, you're going to be screwed. And so and think about it in terms of like, if you had a strategy where you were buying and taking 5 pip profits, right? It's really easy to see the market go 5 pips in your favor, right? It's really easy to accumulate those. But as soon as you get slipped, or as soon as the market goes hard against you and stops you out at a 25 pip loss, you've lost 5 winners then, right? So that's kind of the one end. And the other end is you have a lower win rate, but you have a higher reward risk ratio. There's a little bit more room to kind of screw up on your entries and exits, and the broker can't do so much to screw you over on these sorts of strategies typically. So it's a little bit, quote, easier to deal with in the execution of it. The problem is psychologically it's damaging when you have a 20% win rate, and you know that chances are 4 out of the next 5 trades you take are going to be losers. That's kind of where you are. Now, I know people will write in and say, well, I have this strategy that's, it's got an 85% win rate and a 10-1. I'm like, yeah, that's true. But those trade like once every 5 years, right? Yeah. There are those strategies out there. They totally exist. I've seen them. I've traded them, but they literally trade once in a blue moon. So, okay, fine. Good luck with that. You know what I mean? I mean, good luck. I'll see you when you're 100. See how you've done with your 5 trades, you know?
Yeah.
So, but anyway, the point is, I think that's exactly what's going on. I think you've clued into it too. I think it's this idea of, you know, I'm really under the gun trying to make a living on this small account. And so I need more confirmations so that I can get my win rate up. And I think that's the wrong way to do it. I think you need to build your confidence organically by getting trades under your belt and understanding that any given trade is just a crapshoot. It's a coin flip. It's a loss or it's a win. It has nothing to do with you or the number of indicators that you slap on your chart before you decide to take the trade. It really doesn't matter. So yeah, that's what I would do. I would focus more on building up your confidence. And I know this is not what a lot of people want to hear, but it really is. It's work, just like any other job. You build up your confidence and you get to that point where you're like, okay, I know what's going on here. I have confidence that, you know, my 48% win rate is good enough. You know, that's going to work for me. So yeah.
I mean, that's not the sexy answer, but like that's what it is. It is what it is. And I think also if you don't trade your live account or your entire live account, that also gives you opportunity to add more to your account from other sources, like your job, or maybe you take on a side gig or you have a side business or something, and you can build up your account that way while you're testing, while you're doing all this demo trading. And that allows you to have a bigger account later on when you're ready to go.
Yes, exactly. That's right. That's exactly right. Yeah. You kind of want to, like, it's kind of like with like running a race, right? You kind of want to run the half marathon where the second half of the half marathon, you're like gaining speed, you know? You want that negative split, as they say, right? You want that. And it's kind of the same with trading. Like, you want to get to that point where right about the time you're on the home stretch and you're going with your live account, you know, you've done all the work. Your confidence is at peak high. You've taken so many hundreds and maybe thousands of trades. You're at that point where you're ready to go live, and you're ready. You know, you are confident. You are ready. You understand it's a normal curve of trades. Yeah, we all wish we could have the ones on the long tail that are the big winners, but you know what? That's how it's going to be. Most of the trades are going to end up in the middle of the curve, and that's how it's going to go. And so you kind of want to. It's just like running a good race. You want to be on the home stretches where you really want to be hitting your stride, and that's where you want to be at the point where you're at peak confidence and you're ready to go live and just turn it on, man. Flip the switch. That's what you did all this work for, right? Is getting to that point. So yeah, so I would definitely agree with that. Yeah.
Cool. Awesome. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Just because they've traded it that way the whole time doesn't mean you have to trade it that way.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question here from a trader, question that came through. The question is, if you could wave a magic wand and change one thing about your trading, what would it be? And this trader, he says, it's really about accepting my losses. Now, I think this is a really interesting concept, because the way I look at accepting losses is that what happens sometimes with trading is we believe that our ability as a trader is tied to our win rate, or our value as a trader comes from the last trade we took. And so there's a whole lot of energy that goes into explaining why the last trade didn't work, and maybe modifying, our system so that future trades don't end up in the same loser category as the last one, and things like that. I think our ego can kind of get mixed in with the strategy, and that can lead to some tricky decisions that probably in most cases shouldn't be made. But I'd be curious to get your thoughts on that. That's kind of my thinking about accepting losses, is that I try my hardest, and I explain this to my trading students. You should be at the point where if you have a losing trade, there's only one reason why that happens, and that's because it was the luck of the draw. It was bad luck. So you flip a coin, it lands on tails, you lose. It lands on heads, you win. And I know that's oversimplifying, but that's basically trading. If you've done everything right, if you've executed exactly as you should, the only reason why you have a loss is bad luck. It shouldn't be anything you did, anything that was wrong about how the way you analyzed the market or the way you did this or that. nothing to do with you and everything to do with luck. And if you can get to that point, what happens is you kind of remove your ego from it and you just focus on the thing you can control, which is the execution of your strategies. And so I find that to be most freeing. But I'd love to get your thoughts on this idea of how do I start to get to that point where I can accept my losses?
Yeah, I totally agree with you on the ego part. Like that's all it really is, right? Is our ego fighting back and saying, oh, you're wrong, you're dumb, you messed up or whatever. But yeah, like you said, in reality, it's just luck of the draw, playing the numbers, playing the odds. And I think a lot of it also has to do with just getting used to losing, maybe going through Forex Tester or demo trading or whatever, and just kind of like exposing yourself to that and being okay with that and just kind of doing it over and over and over again so that you get acclimated to it. And I think that's really all it is.
Yeah, it really is, isn't it? I mean, it just comes down to, we feel like in life, so often you feel like if like you're trying to win a race and you don't win the race, right? So what did I do wrong? How can I get faster? Or, you try to get that promotion at work or whatever, and you don't get it. And so you think, well, what could I have done differently? So you're always kind of, as humans, like think about it. Ants have been making ant hills for, I don't know, thousands of years, millions of years. They've been making these little ant hills, and they're probably pretty much the same. Like the ant hills that were made 2,000 years ago are probably about the same. But as humans, when did we invent the car? Like in the 1800s or late 1800s or something? And look at how far they've changed. Like we're always thinking of ways to improve things. That's just the way the human mind works. And the same thing happens with trading, isn't it? Where it's like, how can I make this system better? How can I make this car better? How can I make this fan better? I mean, we have fans now that don't even have blades on them, right?
Yeah.
It's so crazy how humans are. Like they're so insane the way that we improve things, and we're constantly looking at ways to make them better. Whereas, if we didn't have so much of that mindset, I think that would kind of help with the idea of, accepting losses and really trying to focus on those things that you can control, which is being the best executor of your trading strategies as possible. So it's one of those spots, and there are many of them in trading, where our instincts or the way that we're built, it kind of goes against what we really need to do in trading. A lot of the basic instincts we have as humans works against us when we're participating in the market. So it's a tricky
I think
thing.
at a certain point you have to say good enough, right? That's good enough. I did everything I could do, and that's the way it's going to be. So let's just move on and not think about it too much.
Yeah, and actually that brings up a good point. I've seen systematic traders who like make automated strategies. They talk about how, like, let's say you run optimization and you go, oh, the best moving average to use for the strategy is the 23 exponential moving average, right? They say you shouldn't use the 23. If that's the best one, you should actually use something close to like the 20 or the 25 or whatever, but don't use the 23, right? And it's kind of this idea of, you want to get used to the idea of using good enough, because whatever was best for that strategy back the last 5 years is not going to be what's the best going forward, right? So you're always going to be chasing, history, so to speak. So yeah, I think it's interesting when you hear systematic traders talk about that, about kind of like what you're saying, like using what is good enough. Like it's good enough to work, but it's not like the ideal thing, because you're always going to miss on the ideal thing. We don't know how the markets are necessarily going to behave over the next 5 years.
Yeah, that's an interesting concept. So would they go back and test those, or would they just put it in like a live environment?
Yeah. So, well, from the books that I've read, right? So what they say is like, you run back, you run the optimization, you go, okay, which one is the most profitable? Oh, it's the 23 moving average. Okay. And then what would the 24 give you? What would the 25? What would the 22 and the 21? And they would look at it like that. And as long as they're all pretty much profitable, I mean, not everyone says it, but some of these guys will say, don't use the optimized one, just use one that's good enough, because you don't know. Like, it's not going to be the 23 the next 5 years. There's just one thing guaranteed. If it worked 5 years on the 23, the best, and that made the highest profit, it won't be the 23 the next 5 years. It might be the 20 or the 26 or something, but it's not going to, you know what I mean? So I just found that an interesting idea, because it kind of forces your brain down that path, right? Of not over optimizing, and of good enough, which is what you said. Like, it kind of clicked that in my mind, like the good enough idea. And I think I try and do that a lot with simple trading strategies. Some people look at my strategy and say, you don't have enough, like you're overlooking, you know what I mean? Like, what about Yeah, you don't have enough. Like I took the Ichimoku and I stripped like 3/4 of the stuff off the Ichimoku, right? Like Ichimoku traders have told me, oh, this can't work because you're not looking at this line and then all that stuff like that. And I'm like, well, I don't know, it works for me. I mean, it's pretty simple. You're just using price crossing over, one line. You know what I mean? So yeah, it's just if you can get to that point where you're okay with good enough, you're okay with simple. It's just the fewer degrees of freedom you have, the less likely you are to overfit and curve fit and get to the point where you're not really going to have something that works in the future. So yeah.
Yeah, interesting. Yeah, my wife told me a story recently that kind of goes what you're saying right there. She said that I think California has asked if they want to remove the daylight savings time, right? Like about 6 or 7 times, and every time they've said, "Oh no, let's keep it." And the number one reason was because it's always been that way. So like you're gonna wake up 1 hour earlier, 1 hour later, you're gonna mess up your whole schedule just because it's always been that way. And I think that's something to consider, like with that Ichimoku example, right? Like just because they've traded it that way the whole time doesn't mean you have to trade it that way. And I think that's something that people should really look into and experiment. And you're just as smart as any of the other traders, so don't sell yourself short.
Yeah, that's so interesting. Yeah, I've seen similar things where they say like in Quebec they were voting to become like an independent country or whatever, like a independent from Canada. And they just missed, like 49% voted yes, right? But 51% are like, we've always been part of Canada. So, even though we speak, I mean, everyone's supposed to learn French in Canada, but it's kind of, and in Australia, it was the same. Like Australia was going to vote to be a republic and everyone thought it was going to pass, right? Like all the polls said, I mean, this was years and years and years ago, but everyone thought it was going to pass, that they're becoming a republic. Like it was baked in the cake, right? And then when it came time to vote, everyone was like, we've always kind of had the queen and, we'll stay with the Commonwealth, So it was really it's really interesting, like that momentum for, tradition or whatever, where you kind of like, it's always kind of been that. That's the, there's a cognitive bias, status quo bias. Yeah, status quo bias. That's what it's called, where it's like, it's always kind of been this way, right? That's how we always do it. So yeah. So interesting how we get into that. We get into that mindset so easily.
Yeah. And I think it really is in a lot of those cases. It's really a case of that generation has to pass away, and the next generation has to make the change. Otherwise, there's just too many people who are in that camp, right? And I think in our own minds, we should be aware of that. How are we giving into that tradition bias or whatever it is?
Yeah, I think that's a good point. Like I think eventually, like how on your phone you can choose different rings on your phone. And that ring that's like the old phone that was like the old ring, like that'll eventually go away, right? Because there'll be no one alive that knows what that means. So all the phones are gonna have all these jazzy ching 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 ching, all these rings that sound like that, and there'll be no more option for the ring because nobody even knows what that like. What is that? Yeah, it's funny. All right, Hugh. Thanks.
All right, cool. Thanks, Walter. See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
What casinos do, right? Casinos don't kick you out of the casino because you won. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what are some good day trading psychology tips? The psychology with day trading is quite a bit different from other types of trading. So what do you think? What makes day traders successful?
Yeah, that's a great question. So I'm working with one right now, and she's pretty good. But there's a couple of things that come to mind. As I see it, taking a step back, and actually Adam Hartley talked a lot about this at our conference in London, where he was talking about trading the lower time frames. And this is the reality, or I believe this is my reality. What I believe about trading is that when you trade at higher time frames, when I say like higher time frames, like 8-hour, 12-hour daily, weekly, you have some advantages. One advantage is you don't have to be really, really spot on with your execution, because generally speaking, you're going to have really wide, like really far profit targets. You're going to be making hundreds of pips in many cases with those higher time frames. So if you get in a pip or two off of the ideal price, or where you quote should have gotten in, you're okay. So the higher time frames make it easier in that sense that you can be a little bit sloppy and still be profitable. If you're trading the lower time frames, that's not the case. If you're trading the lower time frames and you're sloppy, you don't have to be that sloppy to go from profitable to not profitable, right? And same with your broker. Your broker can slip you, and which is typically what we see in the retail world, especially in Forex, where you will be slipped. And when you are slipped, it's just eating away from your profitability, unless you do something to anticipate that or counteract that. So I just want to get that out front. I think it's better for most traders to start with the higher time frames, and if they wish to trade the lower time frames, eventually work their way down there. That is usually the path of least resistance, right? However, the advantage, and Adam talked about this at the conference, is that when you're trading the lower time frames, you actually get instant or near instant feedback. If I'm trading the 5-minute chart, I'm going to know within a half hour whether or not that was a really good trade and how well I did in terms of that trade. That's not the case when you're trading the daily, right? It may be weeks before you know. So there's that. And then it's kind of like they say, money amplifies your personality. So if you're like a really greedy, domineering person, and then you have the money, which is basically the power, that enables you to be more domineering and more greedy, right? You know what I mean? Kind of amplifies. And that's sort of what goes on in the psychology aspect of trading, I believe, when you're trading a lower time frame. So if you have a problem with revenge trading, in other words, you have a trade and it's a loss, so then you double down on your next trade, take twice the risk to make back, those losses from the previous trade. Those sorts of things, if you're doing that on the lower time frames, because you're getting this instant feedback and you're finding out immediately how good that last decision was, that's really bad. And you don't need me to tell you that. That's a tough thing to do, to overcome. All of those psychological things are going to bubble up, and you're going to have to deal with them right away. The advantage of trading the daily charts or the 8-hour charts is you don't have to deal with those emotions right away. You can actually put it away and say, all right, I will deal with that later. I understand that I have these feelings of revenge trading and all that. So this is a long-winded way of saying the best traders for the lower time frame in terms of psychological makeup, temperament, all of this sort of thing, I believe are those people who are extremely self-disciplined. In other words, people who are trained as athletes make really good. People who are collegiate athletes or even professional athletes, it almost doesn't even matter the sport. It could be, what do you call it when they have the bows and arrows?
Archery.
Archery, yeah. Archery or, running or whatever. It doesn't really matter. If you have that mindset of like you're very, motivated and and regimented and you have a schedule and things like that. Because one of the problems with trading the 5-minute charts is with Forex, you can trade it all the time, or cryptos, you can trade it 24/7, right? So you're all like, it's always there. So you need to have that specific time where you set aside, okay, this is what I'm going to do. So this is my long-winded way of saying, if you're thinking about trading the lower time frames, you need to be concerned about all of those trading issues you have, because they're going to come up quickly. You're going to have to deal with them. If you are not disciplined and regimented in your approach to your trading, those will come back. Those will hurt you badly. So it's almost always, in my opinion, recommended to start higher and then go down to the lower time frames. It doesn't mean you can't do it. I'm not saying you can't do it. I'm just saying it's easier if you get the fundamentals down and then, on the daily chart, and then work your way down to the 1 hour and the 15-minute and so forth, right? And that's what we've seen over and over again. It takes a special type of person who's highly disciplined and self-motivated and regimented who will do that. And that includes taking breaks. Because it's so psychologically exhausting, it means that you need to have time off. Like I've talked many times about the couple I know in Spain, and they take the summers off, right? So they trade the 1-minute Euro chart every morning in their own little offices in their house, and they do it for 3 hours every London Open. And then at 11 o'clock London time, which is not the same, I think Spain actually is on a different time zone, whatever, it doesn't matter. The point is, and then they go and sail all in the Mediterranean. They go on the sailing all June, July, and August. They are not trading. So they're not trading most of the day. They're trading for 3 hours, and they've got a good 3 months vacation to look forward to every year. And that's the kind of thing I think that makes sense. If you're going to be really intense and trade those lower time frame charts, you need to have some sort of schedule like that where you have your, your runs or your walk with your dog or, your workout at the gym. And you know what I mean? It kind of fits in your schedule. It can't be something that's just always lying around, kind of encouraging you to come over and have a look, sort of thing. That's bad news, right? So those are my thoughts. What are your thoughts on it?
Yeah, I agree. I would add one thing. Another thing I noticed is that people who are good at day trading are pretty good usually at not thinking about the past, not dwelling on the past too much, and just going forward and saying, okay, I didn't do so well that day, but today's a new day and I'm just going to do something. I'm going to do my best again. So I think that's another thing to either cultivate, or if you have that, then that might make you a good day trader. But I think a lot of times it can be easy to get really wrapped up in your trades, wrapped up in losses, wrapped up in trying to make a lot of money quickly. So I think that's another thing to look at. Just, if you're not the type of person who can really let go of things easily, then maybe day trading is not for you. Like you said, start on the higher time frames and then kind of work your way down until you get to a point that's really comfortable.
That's a great point. What you said reminded me of, there's a guy named Peyton Manning, which people may not know outside of the US, but he's like a famous American football player. And he said that what he learned from his dad, who was also a pretty famous American football player, was that he had to reset after every play. And I think it's exactly what you're talking about. Like he said, you have a bad play, where you throw an interception, which is when you throw the ball to the other team. He said it was always about going back to the sideline and resetting, right? And if you look at the really good Olympic athletes as well, like the divers, that do the spins and stuff in the air and the twists and all that, that's the same thing. Like if they have a bad dive, they completely reset. They let go of that and it's over because there's nothing they can do about it. The judges have scored it and they're on to their next dive. So in another 15, 20 minutes or whatever, they'll be their turn to do the next dive. And it's all about the reset. So I think that's a really good point. People forget, you can't do anything about what's happened, right? You can't, there's nothing to do. It's done. It's sealed. So all you can do is put all of your energy, focus, and attention on the next decision that you have to make, the next execution that you have to make. That's where you have your power. Your power is always on the next trade. It's never on the trade that's been completed. Now, an open trade's a different idea, right? Like an open trade, you still have a bit of you know what I mean? But when it's done and it's locked in and it's a loss or a win or a break even or whatever, that's it. There's nothing you can do about it. And that's, you're right. A lot of the big problems that come up for traders is the fact that we're always kind of tweaking based on what happened in the last couple trades or the last trade in particular. So yeah, so the reset, I think that mentality of the reset is key. That's a really good point. Yeah.
Yeah, I think basketball players are probably the best at that, right? You watch like Steph Curry or LeBron or whatever, they'll miss like 5 shots in a row and then they'll still keep coming back and then they'll hit 5 more in a row. So
yeah, that's how, that's how I was testing a system last year. I'm still testing it. And when I started testing it on a live account, small live account, it kind of went up a little bit and then it went down and had a nasty drawdown for like, I don't know, 4 weeks, 5 weeks. And it trades not every day, but 3 times a week. It could trade every day. There's an order every day, but it usually trades about 3 times a week. So it trades fairly often. And for me, it trades fairly often. And what was so interesting was I wasn't even because I had done my back testing on it, I wasn't concerned about the drawdown. I mean, I was looking at it, I noticed it definitely, but I did, you know what I mean? I just kept putting the orders in every morning. Put the orders in and now here we are. Well, now it's up nearly 48% or something like that since November. So November to March, whatever that is, 4 months or something, something like that. Yeah, it's about 9% a month, or a little bit better than that. So yeah, I mean, it's pretty crazy that if I had let my emotions run, I would have shut that trade system down after about 5 weeks. I would have said, "Oh, it doesn't work. It's at a 21% drawdown. Blah blah blah. This is terrible. Blah blah blah." But because I just kept chopping wood, keep going, now I can see it's probably going to have a pretty good year. We'll see. I mean, we got ways to go, but I'd be really excited to see what it looks like a year, in next November. This year, when we get to November, which currently as we record this, it's like 8 months away or 7 months away or whatever, I'd be really curious to see where it is in a year. Because I know there's going to be another drawdown. Just because we're at equity highs now doesn't mean we're not going to have another drawdown. We probably will over the next 3 weeks, most likely, But that's like you say, it's just that mentality. Keep taking shots, and that's what casinos do, right? Casinos don't kick you out of the casino because you won, right? Like if you're not cheating, if you got lucky and you win, they want you to come back. Why do they want you to come back? Because they have the odds in their favor. They know that as long as you keep playing blackjack, you're going to lose, or you keep playing roulette or whatever you won on. They want as many of your plays as possible, because the more plays you give them, the more likely it is that they win your money. That's why you get free tickets to the casino, right? Free suites and stuff like that. So yeah, it's the exact same thing, and it's a great way to look at it. So I really think if we can just make that mindset as traders, a lot of good comes out of that. So
yeah, totally. All right, thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice. Nobody's going to be perfect. Nobody's going to be exact, but I think it's good to take in these ideas and see how they fit in your paradigm. And
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this is kind of a philosophical question, but I think it fits in with psychology. I think Jung and a lot of other psychologists, they thought that there were probably like 3 parts to the human mind, right? What do you think about that and how that applies to trading?
Okay, so I may say something that's going to be kind of weird, but I think that all sciences are fairly new, I would argue. And psychology in particular is extremely new in a sense. Like, think about quantum computers. How long have quantum computers been around for? Not very long, right? So they're in their infancy. We don't really know much about them. Like they found things like this is crazy, right? The reason why they go to great lengths to put these quantum computers in these cases and put them in at such a cold temperature is because they've literally, now this is going to sound really woo-woo to people, but they found people walking by the quantum computer impacts the processing going on the quantum computers. So they're like, they don't look at it like it's the consciousness of the person, but it could be, right? So the reason I bring that up is there are so many things we don't know. For example, in quantum computers, because they're so new, we just started using them. Same thing I would argue in psychology. I would argue that what typically happens in a field like psychology, which is fairly complex, and even neuropsychology or neuroscience, what we typically will do is we will rely on the dominant technology of the time to make analogies. So Freud was relying on the steam engine when he talked about the mind and how, if you think of the id and the ego and the superego and all that, right? He was relying on like steam engines and things building up and then exploding and stuff. And then what you found, like, for example, in the 80s and 90s, is you had these cognitive psychologists and they're all using the computer analogy because that's the dominant thing, right? And so I believe all of that stuff in the theoretical area of science, and I would even argue physics as well, but I don't want to go down that rabbit hole because that's a totally different. But let's just stick to psychology because that's what we're on, right? I believe that we as humans will rely on whatever the dominant thing is at the time to kind of explain things and make them fit into little boxes and make analogies. And so we can think of them more easily that way. I'm not saying it's wrong. I'm just saying it changes, right? So all those things that like Jung and Freud came up with back then, they're kind of in the context of that day. It made sense. Just as if you talk to people who are studying memory or studied memory in the 90s and the 80s, they talked about, like RAM of a computer and RAM in your brain, sort of. They made the analogy of short-term memory and long-term memory, which is kind of what your computer has. It has a hard drive for long-term memory, has the RAM. Is it the RAM? Yeah, RAM for short-term memory. You know what I mean? So, like, look, I'm not here to knock anybody. I am no theoretical psychologist or anything like that. I'm just saying I think that these things are dated, and it can figure out. It's kind of like when you read the Bible or whatever, or a translation of the Bible, you can see the influences of the culture of the time, during that translation. And I think it's the exact same thing in science. All these people who are coming up with theories, which we need these people. They're smart people. They're doing great service to science and all that. I'm not knocking them. I'm just saying, I think that the utility of their approach is probably at its highest at the time and period when they came up with it. And then later on in time, it kind of degrades and isn't as useful for us. That's my opinion. So, I mean, I know some people they're going to disagree with that, and they're going to think you're crazy or whatever. But my opinion is that that's where we need to interpret their theories, is in the context of their day, of their time. Yeah. What are your thoughts on that?
I agree. I think that, well, the way I look at it is, as far as I can tell, there's two parts to the mind. There's the conscious and the subconscious. Like, there's the parts that we can change consciously and we can do something about on a daily basis. And there's some stuff down there that I don't know where that comes from. I don't know how to change it sometimes. And, it does affect my behavior in certain situations, right? So in practical terms, that's how I see the mind. Like you said, I also believe that a lot of these things are popular, memes, if you will, of the day. And they come from people who have some theories. I think, Freud was, in my opinion, not that I know a whole lot about psychology, but in my opinion, he was pretty off about most things, right? By the same token, I think that Jung was pretty on about most things. But like, nobody's going to be perfect. Nobody's going to be exact. But I think, it's good to take in these ideas and see how they fit in your paradigm. And my paradigm is like very simple. But, I think that that's just something to consider. And in a trading context, I think that being able to understand, okay, there are some stuff in my conscious mind that I can control pretty consciously, and there's some stuff that I can't control that I might need to work on by some other means, hypnosis or whatever, right? And I think that that's kind of where I stand on that, and that could change, obviously, but that's what I think.
No, I think you probably bring up the most important point, like in terms of Freud, like his contribution, this idea of the subconscious, right? I think that's really really cool. I think that, with modern technology, for example, so we have studies where, one of my favorite studies, we have studies where people are shown, okay, so you go into the lab, you sign your life away and say you're going to do the experiment. You sit there in front of the computer, right? I think they might have some that have goggles, but I think this one I'm talking about is just the screen, right? So what happens is they actually show you slideshows, right? Like images, photographs. And some of them are disturbing, like maybe like a dead bird or something, or someone who has a really damaged arm, right? Like a cut arm or something, right? So they're sharing, and then some of them are nice, like butterflies and bunny rabbits. Okay. So, and what they found was what they were doing is they're recording the reaction on the eye and probably the galvanic skin and all this stuff, right? So they got these physiological, and what they found is fascinating, is that before the really gruesome images that were shown, the people would actually react before they were shown the image. So they would have a guttural reaction to the disturbing view of the guy with the arm chopped off, or whatever it was, like something nasty. And that would happen before it was actually shown. So, these sorts of things like this, when you get into the woo-woo world, it's kind of like, whoa, I mean, there are psychologists that will talk that away, just like people will talk away near-death experiences, and they'll come up with all these. In my opinion, Occam's razor doesn't apply when you start talking about these things, because they start coming up with these really convoluted ways of explaining away. I mean, you know what I mean? Where it's not Occam's razor anymore. Occam's razor in this study would be, okay, we have some sort of pre-stimuli awareness. In other words, we know what's precognition. We know what's going to happen and be presented to us before it happens. And so it's just fascinating that when you get into that area. So I think, long-winded way of saying I agree with what you're saying about Freud. Like Freud is, you can study psychology for decades and never really learn much about Freud, right? But there are people that spend their whole life in the neo-Freudian, area of psychology, and you know what I mean, like all of that. So I mean, it depends on where you're at, and it's like anything, you can study geology and never ever learn anything about gold or whatever, you know what I mean? Like,
Yeah.
But some people like the ones that get paid, they know a lot about oil, they know a lot about gold, right? Those are the geologists that are out consulting for the companies, right? I mean, so there's obviously advantages in that. So yeah, so I agree with what you're saying about, that was a giant, massive contribution that Freud made, and Jung kind of took it in his own way, twisted it a bit and stuff like that, which is awesome. And that's great. I encourage people to do that, to think beyond what your contemporaries are thinking. So that's great. But I just love this idea of the unknown. Like there's so much that we don't understand. Like there are people right now, there are neuroscientists right now that think if they can map out all, and I know some of these people, they think if they can map out all of the neurons in the brain, that they can basically duplicate consciousness, that consciousness arises from the neural network, right, of the neuron. Like, you know what I mean? Like that's the thought. Is that once we get this, we'll understand it. We got it. We just, it's like the DNA. When we map out the human genome and all that, we'll know exactly where all the diseases come from. We'll know what you're going to get and all that. And they're like, okay, no, wait, now it's epigenetics. Okay, so environment does have an impact. All right, darn, we missed on that one. Sort of that sort of thing. So I really think, there are so many things we don't understand, and this idea of the brain being like a receiver and receiving this precognitive information that you're about to see a really nasty picture of a dead bird, right? You know what I mean? Like that's amazing to me. I just think it's really cool that there are still lots of things to be discovered. And as traders, bringing it back to us as traders, that means that we shouldn't necessarily throw away something if it's a little bit outside what you seems to be obvious, right? Like obviously there's no such thing as psychics or precognition, because if there were, they'd go and claim that $1 million reward that the amazing Randy has offered for anyone that can, prove that they're a psychic or whatever. You know what I mean? Like, so there's a lot to unpack there. And I think the deeper you get into it, the more you can find your little niche and find your edge, psychologically, in the area of psychology or research that you think will best apply for you. So that's what's great about science. There's these wide ranges of areas that we can go into.
Yeah, totally. And I think, it's all a matter of like what makes sense to you, what works for you, right, is the main thing. And on that topic of psychic abilities, what's his name? Ingo Swann.
Yeah,
he was one of the famous psychics for the government, right, in those CIA tests or whatever. And I read his book, and he said something really interesting. He said, if psychics can see the future, that must mean that it has already happened. If you think about that one, I was like, okay, that's possible. Like how can you see something if it's not there already? So just something to chew on, right? Something to think about.
Right. But then some people will say, well, there's parallel futures, like it could go this way or it could go that way or whatever, right?
Yeah.
So I always thought, like, if that's true, like the people that argue that, I always thought, if it's true that there's a multiverse and there's all these different branches of where we could go, then what are they seeing? Do you know what I mean? When they're seeing the future, which one are they seeing? A particular one, the most likely one? Are they just seeing the general outcomes that most of the branches, end up over in this area? Like I always kind of try to, are they seeing like the mass conscious, like what most people are going to experience? Like I always try to think what is it exactly they're seeing? Like Ingo Swann. I just I find that fascinating too. Like if what they're saying is true and that they're seeing the future, and if it's true, as he said, that that it's already happened, then does that mean there's no free will? Like we're always going to make the same, like, you know what I mean? Or is there free will, but we end up in the same place? Do you know what I mean? Like it's weird.
Yeah, I know. I think it's really, from what I've seen at least, like it appears to be, well, it depends on the skill of the reader first, right? Like what's their skill? Are they just making stuff up in their mind, or is it something that's actually coming through? Another thing I think is they generally seem to see the highest probability outcome. But then there also appears to be certain events that will happen. Like you have a lot of free will, but there are these like landmark events that will happen for some reason or another. I don't know. That's the way I see it at the moment, but who knows, right?
Yeah. That to me makes sense. Yeah, that to me makes sense that you would have that they would events, right? And then all the stuff that kind of supporting stuff that gets you there is kind of irrelevant, or they can't really, they can't pull that in or whatever. But yeah, it's the whole thing is fascinating.
Yeah. And I guess it comes down to also what you do with that, right? It's going to happen. What are you going to do after that? And same with trading. Like the trade's going to work out this way or the other way. What are you going to do? So
exactly. Yeah.
All right. Cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
The longer your view, the better off you are, I think, as a trader. I really believe that. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question from a trader, and this trader is currently making money, wants to make money faster. He's trading real money for a couple years, and his big issue, his big challenge is, I have a difficult time accepting losses. So what would you suggest for our trader buddy here who has a difficult time accepting losses?
That's an interesting one, huh? Right off the top of my head, I would think that maybe that part about trying to make money faster is what's causing him to not accept the losses easily. Maybe he thinks that he should do better, or that would be another thing. Like maybe he thinks he should do better. Maybe like there's a perfectionist kind of syndrome also. So those two separate things. So maybe the first thing would be to consider how you could get a bigger account, maybe get an investor, get some family money or something like that, and just try to scale up that way instead of beating yourself up so much on the losses. And then if it is a perfectionist type thing, then there would have to be some exercises that you do around being okay with those losses, being okay with those losses actually contributing to your gains. That's what I would say off the top. What do you think?
Yeah. I mean, I like thinking in the long, like trying to bring it to the long view, like the casino, and so that you don't really put any specific importance on any given loss. Because, just as the casino doesn't really care that in the last 5 minutes, they lost 25 million, so let's say on the floors of the casino in the last 5 minutes, but they know, given that all the odds are in their favor, by the end of the hour, they'll be back up again or whatever, right? Like that's kind of, you can't control the outcome. So I can flip. Okay. So I can flip the coin. And I can say, hey, Hugh, do you think it's going to be heads or tails? And you can choose heads or tails. But that doesn't mean that you're going to win, that you're going to be right? You can even choose the coin. I can say, Hugh, I got this old Roman coin. I got the Australian 20-cent piece. I got I've got the Kennedy $50. Is it a $50? Yeah, $50. I have all these coins, right? Which one do you want to flip? It's totally up to you. Which one do you want, heads or tails? You can have either one. I don't care. I'll take the other side. So, it kind of feels like we have some control over that by you choosing the coin and you choosing whether you get heads or tails, and I don't get to choose that. But the reality is it's still a 50-50 proposition. Not all trading systems are. And with the casinos, they have such a slight edge. They just want to push as much money through their tables and their machines as possible, because they know they're going to skim that little bit off of it, right? Which is what pays for all the lights and all the staff and all the free drinks and the shows and the restaurants and the convention center and the pillows and the maids and everything, like that little bit, right? And so it's the longer your view, the better off you are, I think, as a trader. I really believe that. You can just sit there and go, look, here's my edge. Here's how much money I want to push through this month, this year, this decade. And here's what I think is probably going to happen. You never know what's going to happen. There's no guarantees, but that's what you want to get to, that point where you're just focused on the execution. You reward yourself for executing correctly. You do not reward yourself for getting lucky on the last trade. That's not under your control, right? It's just not. That's a function of the win rate and your execution. So as long as you're executing as you should, that win rate should settle down, and you should know within about 100 to 150 trades, you're probably going to know what your win rate is. Like, it ain't going to move much from that. And if it does, then you got to decide, what's going on here. Is it really broken, or am I just in an unlucky streak? But yeah, that's what I would say. I would say concentrate on what you can control. And if you've ever played the lotto, do you choose the numbers? If you play so you kind of feel like, I can choose the numbers, like I got the control, right? But you really don't. You don't have the control. You might as well just have the computer do it or whatever. So yeah, so it's tricky. It's a tricky thing, isn't it? Yeah.
Yeah, it is. Cool. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Look into resilience, and I would look into positive psychology. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here from a trader about recognizing different types of markets. So this trader says, I'd like to know when the market is trading in a range and trade it like one instead of pretending it's going to break out into a trend, which when it does, it's a fake. Boom, I take a loss. Or to recognize a trend and then get in at the right time instead of at the end when, you guessed it, it's another trading range. And also to hold on to a winning trend without panicking and selling out and getting back in and repeat. so this trader is obviously frustrated. We've all been there, right?
All been there, yeah.
Yeah. So I have a lot of thoughts on this, but what's your impression, or what do you think is going on here?
Yeah, two things come to mind. Number one is like, maybe you got to work on a little bit of patience. I think a lot of people try to pick a range or a trend in the early stages, and it could go either way. So I think you have to learn how to identify that. And then number two would be identifying it. So either wait for the range to develop or use an indicators or something like that will give you a good idea that you are in a trend if you have a hard time spotting it, just with a naked chart. So you could do like multiple, like 3, 4, 5 indicators to show you that, when they're stacked up correctly, that'll show you that, you're probably in a trend, and that's a good place that you can look for some trades. I don't know. What do you think?
Yeah, certainly there's like the mechanical side of it. I agree. Like there's a lot that you could identify as, okay, this is how I'm going to trade. I'm going to wait until this happens if it's trending to identify that it's a pullback and define it as a pullback and all that, right? Mm-hmm. But the other side of it also is kind of like the mental side of dealing with these sorts of situations, right? I think you could kind of split this question into, what do I do mechanically, which is technically on the surface level what this trader is talking about, right? Like, what do I do? I don't know what to do here. It just, everything I try kind of, like, if you ever we actually, when I first started trading, my friend and I, we actually did this. We were like, it was so bad. Well, we tripled the money on the first night or the second night trading the Swissy, and by the Friday we basically were busted, lost all my money. But then we got some more money scraped together, and we started, like, after this sort of thing kept happening, we started thinking, why don't we just reverse our trades? And I think everyone's been there, right? Where you have this system and you think it's so great, you start trading it, and it's like everything goes against you, right? Which is kind of the frustration that's seeping out of this question from this trader. So there's that side of it, like the mechanical side of it. Like, how do I identify a range? How do I identify a trend? How do I know when it's a pullback versus the end of the trend? There's all that part of it, right? But there's also the other side of it, which is like the mental, like, how do I build up resistance or immunity to this sort of thinking where I just feel like everything's going against me? You know what I mean? Mm-hmm. That's kind of how I see this, is like, yes, okay, fine. If you want to do the mechanical stuff, my favorite thing is to just look at what people think. So if you find on the dark internet, these not really on the dark web, but in little corners of the internet, you'll find brokers that actually tell you what percentage of traders are long or short different markets, right? And I find that to be extremely useful information for identifying the strength of a trend. I use it as a proxy of trend strength. In other words, when all of these traders are going long, I want to be short, and vice versa, right? So I use that as a proxy. But that's, the mechanical. You can look at, patterns, and are the candles getting really small and wicky and closing near the middle? Okay, that's probably a pullback, right? Are the candles really big and giant? Then that's obviously the trend push. So you got to wait for another little pullback, right? And pullbacks come in all different types, shapes, and sizes, and all that. But to me, the more interesting aspect of this question is, what do I do? Like, I feel like everything's going wrong. What do I do? You know what I mean? And we've all been there. Like I said, my friend and I, we literally, when I first started trading currencies, we literally we're trying to map out a plan. Like, how can we take our system and then instead of taking the trade, just reverse it, because everything's
turn your
going
chart upside down, right?
Yeah, exactly. Yeah. Actually, and I know a guy who did that. He invited traders to trade for his fund, and they traded on demo to qualify, and they weren't trading on demo. They were trading on live accounts, and he flipped their trades. So, I mean, and they made money for him. And he was like, man, the most difficult thing was just trying to get those traders to keep trying to qualify, because I was losing my best traders, because he was, it was just crazy. But anyway, the point is, I think you need to build up some resilience. So this sort of thing is going to be rooted in two areas. So there's the feeling, emotional part of it, and there's the logical. You can build up your logical confidence by doing testing, right? Lots of testing, get your data, get your numbers, and okay, typically, have a 48% win rate. So what does that mean? Well, any given trade is actually slightly more likely to be a loss than a win, right? So you can couch it in sort of statistics and logical mind. And then the other side of it is building up your feelings that you're going to be successful, and actually, going, hang on. So I feel like every time I take a trend trade, the trend is over. Is that actually the truth? Can I look at the numbers and see, is that true? Is it always the case that when I get into a trend, a pullback on a trend, that it fizzles out? Well, actually, no, it's not really. If I look at my numbers, right? And how many of these winning trend trades do I really need? Maybe you have a strategy that has a lower win rate, but once or twice a year, the trends are so strong and so significant that makes up for all of your losses that you've had the last 6 months, and you end up in the black, right? There are a lot of trend traders that trade that way. There are a lot of professional traders. There are a lot of funds that trade that way, where they literally have months and months and months, even years, where they're down, down 20%, down 12%, down 8%. And then 1 year, boom, they're up 600%. They're up 300%. That's normal for trend trading, right? So I would look into resilience, and I would look into positive psychology. There's a whole wealth of information there for building up your resistance to these emotional, I think resilience is really important for traders, one of the overlooked things. And so if I were this trader, I would be working on my resilience, and certainly, building out a strategy, like we said, all that stuff can be done. And, getting your stats and your numbers and all that, that's great. But the part of it, I think, that's probably going to be most useful, here's an example. Actually, I was talking to a trader the other day, and she was explaining this. And it's a really good a really good analogy, because we were talking about resilience, and she was saying, I've learned that, I imagine that she's driving her car, and the windshield, it's raining, okay? And so all these raindrops are hitting her windscreen, and so these are issues that come up. So these could be problems in your trading, problem trades, difficulties in your life, right? There are these little drops that hit your windscreen, and then you are the wipers. You just wipe them away. just let them go, let them fall out. And while it might seem like it's overwhelming when it's raining, it's all just a bunch of little tiny individual drops that you can just wipe away and let them go. You can leave them there on your windscreen as long as you want, but you're also able to flip on the wipers and flick it away, right? So, I mean, it's kind of an interesting way to see these little issues that creep up that we all have, and particularly when you're in this sort of stage of your trading where you're thinking, geez, nothing's going right. It can be really difficult. I understand.
Yeah, I would also, one thing that came up when you're saying that is that I would also look into your previous programming, right? from anywhere from when you were born until right now, and kind of look at your thought patterns, because the way that you were talking, or the way this trader is talking, sounds like a friend I have, and the way I used to talk before. So I always had this mentality that things are going to go wrong, right? Things are not going to work out. So at a certain point, I would just give up and stop trying. It could be this trader psychology, I don't know, but I would invite you to look at that, and like you say, look at specific situations where you did succeed and things did work out, and kind of build on that, right? And not dwell on, oh, what went wrong, but look for a solution instead.
Yeah. It's true. And it's so easy to get into the catastrophizing mindset where like one little thing goes wrong, and then you build up this illogical chain about why everything's going to go wrong, right? Like that. And that's something you got to guard against. And there are antidotes for that. They're just simple ways of rephrasing things. Going, okay, yes, I've had 5 losing trades in a row. Have I ever had 5 losing trades in a row in my testing before? Yes. Okay, fine. What happened after that? Well, it tend to be a big winner after that. Okay, all right. So could this just be normal, everyday trading for my trend trading strategy? Yeah, it could be. So you just kind of talk yourself off the ledge sort of thing, and get back to a more logical reasoning, because it's so easy to get into that really negative state when things aren't going well. And I understand it. We've all been there. Like, we're not like making fun of this trader. And one of the reasons why we don't mention names is because we don't want people to think that we're not poking fun at them. We're just kind of digging into the question and saying, well, is this really the question? I guess you could at one level say that's the surface question, but really I think it comes down to exactly what you're saying. You know what I mean? You've got to be really strong psychologically to withstand. I mean, that's trading. That's the game. The fact is, for every trader that ends up trading well and going into like decades of trading, there's lots of traders that gave up along the way, right? The way I look at those traders is they didn't have the resilience to continue trading long enough to the point where they made it to the other side, right? It's really more of a survival of the fittest sort of thing, or who keeps at it the longest gets to the point where it's worked. And though it's so easy to just drop off and go, oh, I'm going to go sell multi-level vitamins or whatever, you know what I mean? Like, it really is. Yeah. So, yeah.
I don't want anybody to think that we're talking bad about anybody or anything like that.
No.
There's plenty of times where I've asked a question and I didn't know this at the time, but I realized, oh, that's not what I really wanted to know. I was asking some sort of surface level thing, and the real answer was deeper. And sometimes I heard they told me the deeper answer, but it didn't register because I thought it didn't answer the surface level question. So we're trying to get deeper in this and hopefully help more people that way.
Yeah, exactly. Yeah, that's right.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. A lot of people who don't succeed in trading, some of them don't want to face the issues that they have.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I'm surprised we haven't covered this before, but if somebody's brand new to trading, let's do like a episode on trading psychology for beginners. So like somebody's brand new to trading, what are some of the first things that you think people need to know about trading psychology?
Well, that your savior is not your system. So when you first start trading, it's more of a treasure hunt. It's if I find this treasure, then I win the game. And then the longer you trade, the more you realize, if I understand myself, then I win the game. So it completely changes. You go from external, like looking for the treasure and hunting for the perfect strategy or strategies, to in the end, you end up trying to figure out, okay, how am I going to deal with myself? How am I going to figure out what's wrong with the way that I'm approaching this? How do I change things so that I am better able to it all becomes more of a self-discovery. So that's what I would say, is that in trading, we initially look to the outside, particularly the system, to save us. And then later on, as we trade for years and years, we understand it's really the system. It's like, okay, this is probably a bad analogy, but like, a beauty pageant, right? And and they have the swimsuit and the, evening gown and whatever. Does it really matter which evening gown they're wearing? Are they like, is that contestant going to win because she's wearing the most beautiful dress or whatever, or the best dress for her, physique? No, like it's going to be the whole, like the interview, the evening gown, the swimsuit. It's all that stuff, right? That's all summed up. And it's the same thing with trading. Yeah, sure, the system is important. You got to have a good one, especially one that you believe in, that fits with what you believe. But that's not going to make your day. Like that's not going to end up. I can tell you right now, like the reason why someone who's a brilliant trader can share with you exactly what he's doing or she's doing, and it may not work for you. And that's really because it's what you believe that's so important. So yes, I would just say in a broad sense, in the beginning, we all look for the treasure. And then later on, we start to learn it's actually myself. It's how I deal with my own thoughts, my own feelings, how I interact with my own strategies. That's what's going to make me a better trader. That's what's going to help me get to the point where I'm consistently where I want to be as a trader, or at least close. Because a lot of times, you always feel like you can improve. But yeah, so that's what I would say.
Okay, cool. Yeah, just to add on to that, I think that the ultimate payoff in trading is actually like self-development. And a lot of people who don't succeed in trading, some of them don't want to face the issues that they have. So I think that, that's part of the process. And that's ultimately one of the biggest rewards of trading, is figuring out who you are, figuring out how you can use your strengths to do this thing that can help you make a living. And at the same time, just maybe trading's not even for you. So that's also part of the self-development process also, right? But I think that, really facing who you are and what you're made out of, I think is, it's probably the biggest payoff in trading aside from the money. Yeah, I think that's, if you can come to embrace that, I think that trading becomes not only easier, but more fulfilling.
I agree. I think I would even go so far as to say that if I meet a trader who's successful or has been successful up to that point, and they don't have what you're saying, like they don't have that, like you get a sense that they definitely haven't gone down that road. I actually, and I probably shouldn't say this, but I actually think that they're just lucky, and I think that they're eventually going to crumble. Like, you know what I mean?
Yeah.
So it's kind of like if you go into the casino and there's that really brash guy who's going hard at the table, like pushing all his chips in and on, whatever, on blackjack or whatever, or craps or whatever game it is. And then he wins and he thinks, oh yeah, I'm so good. Like I'm such a great craps player. Okay. Well, to me, that's exactly what you described. Like if you have a trader who doesn't have that, that they haven't gone down that path of self-discovery, all they've really done is they've gambled really hard and they've been lucky. And later on, what's going to happen is, because they haven't gone down that path, they're going to get wiped out. Like, and you don't have to look any further than, like, there are a lot of traders out there that have done this. Like Jesse Livermore is one that comes to mind, where, you just get to that point where they just blow up. And it's because they're seeing trading as a game, and they got lucky. And the casinos are full of those sorts of people. That's why the casinos invite them back, right? Hey, come and stay at our suite. Like, you can stay in the presidential suite. Come on back. We want to see you again. Because they know eventually they're if they keep doing that hardcore crazy risk stuff, and they don't know, they have no system, right? They don't know what they're doing. They're going to blow up and give all the money back to the casino. So yeah, so I actually think, like, and there are those traders out there who people will fawn over and say that they're so great and all that. But I always think, man, it's a ticking time bomb. Like, it's not going to be pretty, sooner or later, if they keep doing what they're doing and they have no clue as to what, about themselves, like they haven't done any sort of digging into who they are and all that. They're just gambling, and they're gambling hard. They're a little bit wild with their bets, and eventually they're going to blow up. So yeah, but that's just me. That's what I.
Yeah, no, I mean, that's not just our opinions, right? It's an actual fact, and you can read
books like The Market Wizards. What's the other one? When Super Traders Meet Kryptonite. I think even Millionaire Traders, right, has a few stories like that. So yeah, if you read those books, you can see where these people were, so-called successful. They had fun. They were trading millions of dollars or whatever, and they just blew it out because whatever, they didn't know themselves well enough. So something to pay attention to.
Yeah, that's right. Yeah, that's right. Yeah.
All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Who are too scared to risk a lot of money, they never get to that point, but you have the advantage of being at this point now that can literally change your life. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this question comes from YouTube. So a trader asks, should his trading psychology or mindset be after losing all of his money?
We've talked about this before in other podcasts. The Market Wizards book, they are almost not completely without exception, but nearly without exception. If you read Market Wizards and New Market Wizards by Jack Schwager, we can put the link down in the notes for this. But basically, almost all of those traders, they've been through that. They had a situation where they had too much risk on. They took a loss that either wiped them out or just was too hard for them to process, and they swore that they would never do that again. And so you can use that as a leverage point in your life. You can go, okay, I've done this, I've made this mistake, and I swear to never do it again. It's not the luck of the draw why this happened, right? That is not what's the luck of the draw. The luck of the draw is when you give your money to a broker and the broker runs off with the money and you never see it again. Okay, that's luck of the draw, right? But what you did was poor risk management. I mean, there's no way to I mean, I can sugarcoat it, but that's what it is. And so you need to get into risk management. You need to learn about risk, and you need to understand why. Not only did the risk rules that you employed, whether you were aware of them or not, led to that, but you can also see how the risk rules that you employed almost made it a certainty that what happened was what was going to happen. And I can link up the risk calculator if you guys are interested. You have to understand your strategies and have some statistics on them, the basic ones like average win and average loss and the win rate. But if you have all that, you can plug it into the risk calculator that we can put in the notes for this. Go there, watch the video. It's a short video, shows you how to use it. But that will give you an idea of how these odds play out, right? Because that's what you're doing. You're playing a game that you don't understand the odds to. That's the only reason why you would lose all your money. And I raise my hand as someone who's done this many, many times. Okay. I did this for over 4 years. I screwed up and did these sorts of things, these crazy things, because I didn't understand. Embarrassingly, I had a graduate minor in statistics, and I didn't understand what I was doing. So I am the poster boy for idiocy, right? So it's not about how much confidence you have in a trade. That's irrelevant to how much you should risk. In fact, some of the Market Wizards, there was an interview in there where one of them says, he goes, I don't think that you should have a graduated level of risk. Like it should either be all, like a full risk for this trade because it's worthy, or none, right? So there are traders who will argue that, like, oh, well, if it's this kind of trade, you could risk this much. If it's this kind of trade, you risk this much, and all that. And he makes a good case, I think, for, I can't remember who it was, but he makes a good case for, either on or off, sort of binary, and when it comes to trading. Anyway, so that's what I would say. That's my spiel, is that that what happened to you was not only likely, but probably nearly inevitable. That you were employing risk rules that you weren't aware of. So you need to understand what you were doing. And then how do you vow to never do it again? Because if you vow to never do it again and you don't ever do it again, you come from a long line of traders who are very successful, who use that turning point to become successful. That was the seed that a lot of those Market Wizards planted, and they said, okay, I'm not doing this again. This is awful. Like I borrowed this money from my dad, or all my investors that gave me the money, I blew it up, or all my life savings, I lost 35% of it one day, or whatever it is. that can be literally the point that grows your trading career if you let it and if you understand what happened. So it's a very good opportunity, actually, if you think about it. Like it's one of those things that traders who are too scared to risk a lot of money, they never get to that point. But you have the advantage of being at this point now that can literally change your life if you let it. But you gotta know what to do from here. So that's what I would say.
Yeah. Of the successful traders I've seen, the ones that were successful the fastest actually blew out accounts the fastest also. So it's like that fail faster type of thing, right?
Right. Yeah. So that's what it was. I wasn't blowing up my accounts fast enough.
Yeah. Blow it up now.
Yeah. No. Yeah. Oh man. Yeah. Yeah. I can see that. Yeah.
Yeah. All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Nothing to fear in life, right? There is only a fighting solution.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here from a trader who is asking about, we asked basically what's the thing that you would like to most change about your trading? And he says, I would really love if I could trade without fear. So this trader seems to have a lot of issues with fear. So I have some thoughts on that. So usually what I've noticed in most instances, what you're going to see with most traders is they're either going to be fearful of, they're sort of, if they have like low win rate strategies, they don't want to take the next trade. So they're kind of like shy, like trigger shy, I guess you would say. So they miss signals, or they don't want to take the next signal. So they're fearful of the loss, right? And then there are other traders who basically fear going wild. they have no like that's the opposite, right? They take too many trades. They take trades on systems they haven't tested. They just get someone tweets out something and they take a trade based on the tweet or the article that they read at FX Street or something like that, right? Mm-hmm. So, there's those. But I think it basically comes down to the fear. Really, we have fear of the unknown, right? And so that's what I learned from a lawyer. He wrote a book on, there was a guy named Jerry Spence, and he was a defense attorney, and he never lost a case. He's a famous one out in Wyoming. And anyway, so I read his book, and he was talking about how fear tells you that you're like alive, and it really kind of switched it on for me, this idea of embracing the fear, because that's really the unknown. When you have the unknown, which is what we deal with in trading, you deal with probabilities, right? So we don't know there really aren't very many certainties in trading. Even if you have a stop loss and a take profit, it's not certain that you're going to hit either of those, right? Mm-hmm. In theory, it could gap over either one of them, really, or it could stay in the range for your entire life, I guess, in theory. But the point is that fear is something that you have when you don't know what to expect. That's what fear is, right? And it's the same with, like, if you go to a country, like let's say you live in a country where the country next to your country, the neighboring country, there's always this conflict with the two countries. And so what happens is you have like these really interesting ideas in your head about what the people are like in the other country, right? Mm-hmm. If you've ever talked to someone in Japan about people in Korea, or people in Korea about people in Japan, you kind of get this idea, right? Like there's this kind of unknown, and it happens all over the world. It could be, I don't know, maybe in Peru and Bolivia, they have the same thing, but wherever there's kind of this conflict of opposing views, right? So, and that's really just the unknown. You don't know what's going on there. So my antidote for this would be to say, you need to get more information. And the best way to do that is to actually practice your strategy. It sounds kind of obvious, but a lot of traders don't practice their strategy. They don't use a simulator where they go in and take the trades as if they were trading live in a live account and gather up that data and get that experience and that sort of stuff. Because the more experience you have with your strategy, the less fearful you are, because what happens over time is the unknowns they shrink down because you've traded the strategy in so many different situations, right? So that's really, I think, what I would say to this trader. But I'd be curious to hear what you think about this. This trader who says, I really, trying to trade without fear.
Yeah, no, I totally agree. And just to take a step back from what you're saying, I think I've noticed that the people who are afraid to trade, generally half the time, I don't know, more than half the time, are trading sizes that are too big for them. So that's why they're afraid to take the trade. So they're going to lose too much money relative to their account, or they're just, like you said, over trading, right? So you want to take a step back and ask yourself, am I risking too much? And then, is that why I'm afraid? And then going forward, I would also invite you to look at things that you're afraid of in your real life. Like, have there been situations where you went to a country and you were afraid because you didn't know what was going on? So like for me, I'm in the US. So if you go down to Mexico, certain parts of Mexico will look kind of sketchy compared to neighborhoods in the US, right? But they're equally safe. Nothing's going to go wrong there most of the time. But they do look a little sketchy because they don't have any like paved roads in some areas, and some houses are run down, and there's a nice house next to it. So just look at those kinds of things in your life and see, how can I face some of those fears? And when I did face some of those fears, was it as bad as I thought it was going to be? Because it's tough to say, but like, it's easier said than done. But there's really nothing to fear in life, right? There is only finding solutions, and being afraid of things makes you kind of freeze up and not take action, not look for solutions. So I think that's a good way to kind of back into the fear of trading, is to look at what you're afraid of in your real life, and kind of analyze it from a more distanced and more objective view, and then look at your trading in the same way.
Yeah, it's interesting, isn't it? Because what you were saying about like the neighborhoods, I think you get like these cues. So for example, if you're from, let's say you're from Ohio, all right? And so you learn these cues. Like if you're driving through a neighborhood and, everyone's got like the nice green lawn and they're all mowed nicely, and they've got their SUVs out front and everything, that cue for you is like, this is a safe neighborhood, right? But if you go to that neighborhood where like people are just kind of standing around, not doing much, and there's maybe some rubbish like on the sidewalk and stuff, and it's a bit dirty, some broken down cars or something, cars without wheels or something like that, you start thinking, okay, this doesn't look right. Like this is, you know what I mean? Like we get these, it's like we have these heuristics in life where it's like a mental shortcut. It's like, okay, I see this, so therefore this. And I think it's exactly what you're saying with trading. Like, I have a losing trade now. I've had 2 losing trades now. I've had 3 losing trades now. Okay, I'm trading a system that's going to bankrupt me. I've seen this before, right? Yeah. I'm going to lose my trading account, right? So you kind of get these cues. Yeah. And so the best way to, like what you said, like it's really interesting what you said, that prompted a thought in me about they're just challenges, right? So it's always a challenge. Like when you have a fear of something, it's fearful because it's a challenge and you don't know what the solution is. But what's interesting about that is to choose to be fearful is to actually choose to not accept the challenge. Do you know what I mean? So you're basically saying, I'm scared, I'm not going to look for the solution. You know what I mean? Isn't that interesting? It's and what you said, that kind of prompted that thought in me of yeah, it's true. Oh, everything's a challenge, right? It's not about a problem or a roadblock or this. It's just a challenge. And whether or not you accept that challenge, whether or not you want to look for solutions to that, that's your choice. You can choose to sit there and be fearful, or you can choose to go, okay, this is what it is. How do I overcome this? What do I need to do? Right? So yeah, it's a really good way of reframing it. And that's actually, reframing is just a great way in a lot of things in life to reframe that as a challenge, right? So we sometimes with self-talk, we talk about things and we make them bigger than they are. And instead, oh gosh, I've had 5 losing trades in a row. I'm just going to lose my account like I did last month, and blah, blah, blah. This system isn't going to work, blah, blah, blah. But if you reframe it in terms of, okay, well, what have my stats been? Okay, did my stats look like this? Okay, how many losing trades did I average? Well, it only has a 31% win rate. So I've actually, to have 8, 9 losing trades is not unheard of. So I've only had 5, so just kind of that giving yourself a different perspective. Sometimes it helps if somebody else can do that for you, which is why, you know, like having a trading accountability partner, someone that you talk to, sometimes they can help you reframe it and see it in a different way too.
Yeah. I think it's also a growth. It's a growing pain, basically, right? Like, think about when you're 5 years old, you were really scared of cars because they're these big giant things that make a lot of noise. But now, like, it's a similar thing. Now you're not afraid of them because you know how they work, and you know that they, you know, you just get in them and you go. But it's a similar thing with trading. Like, if you're afraid of taking a trade, then you have to grow into not being afraid of taking the trade. So just something to work on.
Yep, definitely.
All right.
Okay. Thanks.
Walter. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Trader can stop looking at the numbers and enjoy life. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a trader here who's written in a question, and the question is, if you could wave a magic wand and change one thing about your trading, what would it be? And our trader friend here says, I would like to learn to not look at my numbers, to just enjoy trading and living life. I thought this is a really interesting question because, well, this trader I think is fairly experienced. Let me just double check. Yeah, been trading experience, for years and years, right? And this trader is saying, I need to stop looking at my numbers. I just need to enjoy trading and living my life, which is really interesting because there could be like the subtext might be I'm spending too much time, at the computer watching watching price bounce around, right? We've all been there. But you could also read into this as like this trader understands that part of trading is letting go, right? And the idea of controlling what you can control. I'm really big into this. And when I work with some of my coaching students, a lot of what we do is this idea of focus on what you can control, right? So you as a trader, you can control what? Well, you can control if you get into a trade, when, at what price you get into a trade, how much that trade you're going to give it, how much wiggle room. In other words, how far does it go against you before you pull the plug, if at all? How far will it go in your favor before you take profit, right? So you control the amount that you're going to trade, right? And how long, even you could have a time stop, right? How long will you hold on to this trade? So all of those things are under your control. However, what's not under your control is this particular sequence of wins and losses. That happens to be random for everyone. Even if you have a 99% win rate, that is a random sequence for you, right? Your losers will come. And even if you trade martingale, even you can't. That martingale is really, when you think about it, the martingale approach is trying to take the randomness out of trading. Like, I will always win. You know what I mean? And of course, that doesn't work. Yeah. But this is really good. I think this trader is really close because the idea of not looking at your numbers to just enjoy trading, I believe that the easiest way to do this is to focus on your exits and entries and to pay attention to how well you are doing this. So you need to grade yourself on your entries, grade yourself on your exits, possibly even grade yourself on your mid-trade management. So for example, I have a target on every trade and then I have a trailing exit on almost every trade. And so I kind of have that mid-trade management where, when does the trade go to break even sort of thing? Is it when the trailing exit gets beyond my entry price? Or is it when I hit the first target? Do I move to break even? You know what I mean? There's kind of a decision I have to make there. So I believe that you should be scoring yourself on your entries and your exits, and you should really gear all of your focus and all of your attention on that. Now, this assumes that you have a system that you've tested, you have the data for, it's going to work, or you don't know it's going to work, but you have a pretty good hunch that it would have worked over the last decade or so, and there's no real reason why you would think it would stop working now, right? So that's what I would say about this idea of, just to enjoy trading and living life. Living life could mean that you're just spending too much time in front of the computer, and you can automate your exits. I've done that. You can do things like that, or you can simply trade the higher time frames. But when it comes to looking at the numbers, and it's really it sounds like this trader's like, I just need to learn to let go. The trader understands you need to learn to let go, but how do I do that? And again, like I think for me, what I found, and for the traders that I work with, we just put all of our focus on what we control, which is how well are we entering these trades? How well are we exiting these trades? How well are we mid-trade management, sort of thing, right? Which is, like I said, moving to break even or whatever. So what are your thoughts on how this trader can stop looking at the numbers and enjoy life?
Well, I mean, that's the whole point of this, right? So that's a good way to look at things, I guess. A couple of things I've kind of like came up for me. One, I'm not sure what numbers they're referring to. So like you said, it could be the trade itself. Maybe you're spending too much time in front of the screen looking at the charts. So yeah, I mean, like you said, I would say try to automate as much as possible. Try to, you could automate the entry, automate the exit, try to cut down the number of trades that you do maybe, or number of systems. If a system isn't like performing or adding a whole lot of value to your overall portfolio, then maybe cut it out and find something that's a little more time efficient in that sense. If you're talking about you're analyzing your stats too much, like your MFE or your drawdown or your win rate per week or whatever you're doing, then find a way to streamline that. And what's the minimum number of stats that you need to look at? And is there a way that you could automate that? Like have some sort of system that sends you an email or something with your just some basic stats, or just look at your statement once a month or something like that, right? Enjoying life, I think, is the whole point of this. So I think it comes back to the automation ultimately. Like, how do you automate as much as possible and only do the parts that you enjoy doing, right? I don't know, maybe it's the analysis, maybe it's the back testing. So figure out, what do you enjoy? What do you like doing in the trading process? And then try to outsource the rest. Maybe you could hire somebody to do some of your other stuff. And that could be one way to enjoy life more and get your time back.
Yeah, those are all really good options. Yeah. It's funny, isn't it? Like when you first start trading, you kind of get sucked into it, like as if you want
to do as much as possible, I think, or something, right?
Yeah. I felt like I was trying to crack the code. I think that's why I was attracted to like GAN and things like that,
Yeah.
And I think that's why GAN is so attractive to new traders. The idea that he's cracked the code sort of thing. But all the traders I know that are successful today, they have more of this letting go kind of sense. You know what I mean? Like kind of like,
Like what makes sense to me, I think is important. What important thing for me, at least, like if it makes sense to me, I'm more likely to figure out a trading strategy around it, as opposed to trying to fit myself into this other mold of GAN or, Fibonacci or whatever it is. Right.
Yeah. 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 That's why I always cringe when I see traders like on YouTube or whatever say, this is like, if you have this strategy, you've got the golden goose. You know what I mean? Like that's part of that always gets me. Or actually, you can see it in the free factory forums too, where people like say this. And it's interesting because what ends up happening always, if you look at those threads, is someone will post a strategy and like it's like, I got it, and then everyone's like, first the naysayers come in and like, oh, this is crap, how come you didn't add RSI or whatever, something like that. And then then there's like some people that get some attention, like get some traction, and more people kind of look and see what's going on here. And then by the end, like years later, it's only the hardcore that are left, And usually the original poster is long gone.
Yeah.
Somebody else is kind of like a little team of people have taken over, But it often doesn't look like they trade it differently. So the way that the original poster posted it and the way that the people are posting at the end. And so if you come in as a newbie in the thread, you'll be like, hey, how come, what's going on? Oh, we found that, you got to have the smooth RSI and then, everything's good. It's so funny. Like, yeah, it's funny the process that it goes through. But I think that personally traders go through the similar process where you kind of like, you get the strategy, you get really excited about it. And you might even have some success for a while, but eventually there are things about it that you don't mesh with, and you have to either throw it away completely and find something different, or you modify it. That's where you end up usually.
Yeah. It's funny, you look at those threads, right? Like how many people have actually tested it? I don't know. I've maybe counted 1 or 2 people per thread, and the rest of them are like, oh, I'm just going to do this right now, right?
Absolutely. Yeah. And you can tell by the questions, because they say, they'll say, well, what's the win rate, or what's the, how is it how profitable, you know what I mean? They're asking questions that they would know if they tested it.
Yeah.
You know what I mean? Like and then they're like, okay, yeah, I'm gonna try this. Yeah, it's funny. It's so funny. Yeah. Anyway, yeah, so I think there's a lot that this trader can work with based on what we've talked about here today, so hopefully that helps.
Yeah, but I like to focus on, like, trying to live better and live life. That's awesome. All right, thanks, Walter.
Yeah, definitely. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Great job identifying that you're stubborn and that you're emotionally triggered. That's key. A lot of people can't.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, we have a question from a trader here. The question is, we asked the trader, what's your biggest challenge? And it's a he. Yeah, he says, my biggest challenge is that I'm quite stubborn and I am emotionally triggered. So being stubborn and emotionally triggered. One of the things I think about, I first think about when I hear this is, I find that women traders have an advantage in that they typically, as a group, and I know I'm generalizing, but as a group, they typically are better at letting go of poor trades.
Yeah, I agree.
Whereas men tend to, their ego gets wrapped up in it.
Yeah.
And so that's a stubborn thing. And in fact, I think there was a quote about George Soros saying it takes courage to be a pig, or you have to know when to be a pig, or something like that. In other words, taking these massive positions that are obviously outside the norm. And to me, that's a very male sort of characteristic of being like, it's definitely going to work, So obviously, one way to look at this is to say, well, trading is just probabilities. In the end, there is a probability that your next trade is a winner, and there's a probability that it's a loser. And there may even be a probability that it's a break-even result. But that's what we're dealing with, probabilities. And now, whether you believe the probabilities have changed based on previous trades, that does depend on your strategy, because there could be some interrelationships between, like, for example, in some trend trading strategies, you may be more likely to have a winner after you've just had a winner, right? And that sort of thing. Whereas if you've kind of had win, loss, you may, or loss, you may not be likely to have another winner for a while until the market starts trending again, giving you really good signals. So that could be the case. But I think what's interesting about this is that the emotionally triggered part too. So this trader is recognizing that he is being stubborn, which I believe I had when I was starting trading, because I would move my stop loss. So I had a trade, I put my stop loss in, I take the trade, then the trade goes against me, and I move my stop loss further away because I don't want to be stopped out. Why is that? Because I was emotionally tied to that trade and I was being stubborn. I could have just decided to let the market hit my stop loss. That's what I do today. In fact, I can't remember the last time that I moved my stop loss. I just let it ride. But this trader is saying, he's getting emotionally triggered. That could also lead to things like doubling up on your next trade to make your money back, sort of this almost like a mini martingale trade, right? Or possibly straying from your rules because you're getting really emotional, right? Which, like I said, that's what I would do with my, moving the stop further. So I'd have like a buy trade on the USD CAD, and I remember like I was getting on an airplane, and before I got on the airplane, I moved the stop loss and I landed, and I was like, this was before there was internet on the airlines, and then they're like, oh wow, it moved even more. So then at the airport, I would move my stop even further. It's like, and you end up taking like 4 trades worth of loss, instead of the original 1 trade loss. So by being stubborn. So what are your thoughts on this trader trying to get away from stubbornness and being emotionally triggered?
Yeah, that's a really good question. Well, first of all, great job identifying that you're stubborn and that you're emotionally triggered. That's key. A lot of people can't figure that out, or they're not willing to accept that. So that's great. That's a great start. On the surface, more surface level stuff, like I think you can, through realization, or just like you're saying, looking at your numbers and rationalization, and just like not rationalization, but just like through objectively looking at your trading and your numbers, you can say, okay, I shouldn't be stubborn because these numbers, this is what happens. I have like a 20% drawdown or whatever, right? And that's a good place to start. But then if you look at it that way and you're still being stubborn and emotionally triggered, then you have to figure out, where is that emotion coming from? And this is what I've been doing, researching on my own for maybe a good 15 years, and even more so in the past 5 years. And all of the things that you don't like about yourself, or you have issues with, come from some sort of source. And that's going to be, it could be something in your childhood, something in your adulthood, whatever it is. But the reason you're doing these things is because it's protecting you from something. It's protecting you from an emotion that you didn't want to feel in the past. It's protecting you from some sort of some sort of getting hurt, right? It doesn't want you to get hurt, so it wants you to be safe. So it's going to protect you by doing this thing. So a good exercise that I found is that you sit down. You can do this with a therapist. You can do it with yourself by just sitting down and meditating, and just feel into that feeling. Like if it's being stubborn, like feel being stubborn, like feel it with your full body and see what comes through. It might not be an event. It might just be a simple fix, or it could be something like in your childhood or something like that. And just see what comes out. Keep asking yourself, why am I being stubborn? Why am I being stubborn? And don't judge yourself for it. Just let whatever comes come, and just see what comes up, and then face it. Just say, okay, that happened, but I choose to move on. And I think that goes for the emotionally triggered part too. Like if there's an emotion that's triggering you, or first face it. And then I think when you face it, a lot of times things will come up, and you'll be able to figure out either where that came from or how to resolve it. But a lot of times these emotions are triggering us because we are stuffing stuff down, and it's not, you're not able to release it. So I would also look at that. There's plenty of things you could do for that, like hypnosis, go see a therapist, meditation, plant medicine, whatever you want to do. But, just kind of look at it in that sense, and don't beat yourself up because you're stubborn or you're getting triggered or whatever it is.
Yeah, that's a really good point. Some people may be interested in the trading tribe because it's basically the idea that it's basically what they do. So this idea of like where you're saying like lean into the emotion and feel the emotion. So at the trading tribe, you can find that. You can go to Ed. We can put the link in the show notes. You can go to Ed Sequoia's site. So Ed Sequoia was the Market Wizards guy. He was one of the first interviews in there, right? And most people remember the Ed Sequoia interview because it's so unique. Anyway, he's written a few books, one on the trading tribe. I used to go to the trading tribe in my city. Don't go anymore, but it was really interesting because the whole idea is that we have these emotions, but we're not allowed in normal Western life to experience them. So you set up you kind of like subconsciously set up these things so that you have these really extraordinary events in your life. So you kind of set up the big argument, or you set up the big trading loss, right? So for traders, you're setting these things up. So what Trading Tribe is, it's a safe place to go to kind of experience these emotions. And you do exactly what you said. You kind of lean into it, and everyone's encouraging you. We don't really talk about trading at Trading Tribe. You just kind of feel it, right? So the best way to get information on this, it's not for everyone, because what we noticed at the Trading Tribe was people would come in, they read Ed Sequoia's interview in the Market Wizards, and then they like Googled him or whatever. They found his website, and they found these Trading Tribe things. And so they're like, yeah, I want to learn how to trend follow like Ed Sequoia. And then they go to the meeting, and they're like, whoa, I was not expecting that,
This is not about trading.
Yeah, it was like people, yeah, exactly. People bawling their eyes out and stuff, and like, whoa, and they never show up again. That's it. But yeah, so the Trading Tribe book, Ed's book's really good because it explains exactly what you were talking about, kind of in detail. His theory, anyway. It's kind of Freudian, I guess, but the idea is that you need to experience these. If you don't have a place where you can experience these emotions, you will create these emotions in your everyday life. Like they will come up eventually. So yeah, it's kind of exactly what you're saying. It's just a different approach to sort of purging those. And the idea is that if you experience these emotions at the tribe, then there's no longer any reason for you to set yourself up for failure or whatever with your trading, so that you have these terrible emotion out, things, all that kind of stuff. So it's not just related to trading, but it specifically is a group for traders. And many cities around the world have local tribes. You can look that up at the link, sequoia.com, and follow the links there and see where the nearest one is, or if you can start one. They're all free. It's not that it's just set up for traders. So that might be something to look into too. If you find yourself in that emotionally triggered state, which we all really are to some degree or another, whether we recognize it or not. It's just what do you do about it?
Yeah. And I mean, the culture is such that it's surprising how many people repress their feelings, right? Like even just some basic everyday feelings is super repressed. So anywhere you can have a safe space to let that out is, fantastic. All right. Thanks, Walter.
Definitely. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey everybody, and welcome to another episode of the Trading Lifestyle Podcast. As you can see, it's been a while since I've done one of these, but I'm really excited to talk to Denis because he has this really cool software that's really going to help a lot of traders. So welcome, Denis, and maybe you could tell people a little bit about yourself and what you've been up to.
Yeah, sure. Maybe I can share my screen. Maybe, yeah, sure. I will just select my my screen right there. Don't know if you can see it. Yeah, you see it. Perfect. Yeah. So for the presentation, if you agree, I can we can have some summary about me. I have been a Walter Peters student a while ago now. I'm trading since 2016. I think I started in 2012. It's been a while, so I'm a swing trader. I'm mainly trading the D1 and H4 time frame. I'm manual swing trader, so it's very slow style of trading, but it's my own style. A few years later, I had an old website on which I presented my backtesting system, my results publicly, and at this time I had I sold some signals, and the link between this and my software is at some point I needed backtesting software. Backtesting is very, very important. I think you and Walt already a lot of time on your channel, but it's very important for in every activity. You need to train yourself. You need to build confidence during your trading journey. So you have to backtest. This is the only way to improve yourself. You have to test your strategies, your ideas on the markets, and the backtesting software is very useful for that. So I have been trading successfully. However, I needed to find new system with a more trade frequency, with a higher trade frequency. And for that, I looked for some softwares available on the market. However, there were only very limited softwares because I needed to customize my ideas. I need a modular software, and the available solution were not. It was not possible to do it with them. So I wanted to design my own system, my own software, and I came up with an idea. I had to build it myself, But first, it was only for me to test, to assess my ideas. And I designed small backtest engine with some interfaces, and I needed for that to be fast and accurate with good quality data, because during the backtest, the data quality is very crucial, because it's the main point of emulating the financial markets. So at some point, I needed a user interface to assess the strengths of my ideas, trading ideas, and to have some statistics. Again, it's crucial, it's paramount when you assess a building system. So I end up with a backtesting software, in fact. So I told myself, if it's useful for me, maybe it can be useful for other traders who want to be traders, who want to test their trading systems. So I came up with the idea maybe of selling it, and right now it's the case. So I used this small software to improve, to add some new features for everybody, to be like the average software, backtesting software on the markets. So I had some needs. The first one is to be fast. I know, and I think you know, a lot of backtesting software, and sometimes they can be very slow to load some symbols, to assess, to test, to trade. So I wanted to be very fast, because you can have quickly new ideas, so it has to be quick to test. The other point was to be modular, because again, it's important to test easily new ideas and not code, not use some word interfaces or word software. It has to be smooth in the process. I'd like to avoid, again, to save time, avoid the step-by-step time forward. I think you know it too. Just pressing the space bar it's useful, but when you are backtesting tons of system, you lose a lot of time just by pressing space bar to fast forward. So I needed to be faster than that, and other items like good data. I talked about it, and the efficiency. That's why there is a lot of statistics in the software to assess quickly the trading system. So maybe I can show you some features, but in the software you'll see there is a very common backtesting software features needed, like charting tools, like graphical tools. So yeah, here's naked markets. So it's pretty common backtesting software features. I will show you right now. So you can start a new backtest, and you can select the different symbols. You can select all major, for example. You'll see it's pretty quickly to load all these symbols, and after that you can fast forward. And for that, there are a lot of very simple tool to draw something. So yeah, you can change the time frame, of course. You can it supports the multiple monitors. If you want, you can detach the charts. So it's very basic features, but it's always needed for me and for every user. Of course, some other features, you can manage all the data you want to download. It's important to notice that all the data in the software are free. This is good quality data because it's coming from free and paying sources. But I wanted to be free in this particular software, and it's possible even on the Naked Markets website to download it for free. because it's just data, you know, it's a very simple data. You just need to probe the market all day long, all year long to have this data. So it's not very expensive to have and to gather, to be very fair and honest. So I don't see why the customer have to pay for this kind of data. So in this feature, you can select, you can update, you can choose your broker if needed. You can update and export data if needed. That's so you have common features like hotkeys to save time. We'll see after the rules, screenshot, yeah. Other stuff, pretty common again. So after that, if you want, you can set orders like a pending or instant order. You have the indicators, of course. I think it's pretty useful for some users. So that's the point, I think. Yeah, some tools for the risk reward assessment. But yeah, it's the common features. But if you agree, I can show you the feature which is very interesting, I think, in this software. It's called the Rule Manager. What is the Rule Manager? The Rule Manager allows the user to define some kind of rules to customize how they enter or exit the market. They can pause the market, they can take some action. For example, if I create a new backtest, we can see on the left, so we're on the XAUUSD daily chart frame. So we have all these rules here with some example. So maybe as an example, the engulfing buy rule. This is a setup rule. What is a setup rule? A setup rule is a rule containing a condition. Here we can see that we define the condition to be the last bar has to be a bullish one, an engulfing bar 2, engulfing 2 previous candles, and another feature is the bottom void bars. This is the space between the bars we can see here for the bottom. And here the action is to pause the backtest. So an easy test is to drag and drop this rule. We can set here and automatically it will fast forward, and we can see that the software pause automatically. So it's very interesting to save time during backtesting, because instead of just pressing the spacebar, you can define what you want, like condition on the market to pause. And after that, you can decide if it's good or not to enter or to exit the market, which is the main point to save time with this kind of software. So here, I can, if I want, enter the market manually by setting stop losses or take profit, or I can use the entry rules. What are the entry rules? There are some kind of other kind of rules like that. And we can define a way of entering the market. Here we can set the type of order, buy stop, sell limit, or other thing. And we can see here, this buy stop order, we can set the stop loss automatically. This is the low of the last bar. We can see the take profit, which is dynamically calculated. And we can set the lot size automatically or manually if you want. And you can set the expiration delay and the execution price, which is here the high of the bar. So instead of setting manually the order, you can easily just drag and drop. And right now you can see it's pretty easy to see how it's working. So this is one use case, very easy, but you can define a lot of rules. There are a lot of possibilities. I use a simple one, but it's possible. For example, here it's about the entry rules, the way we enter the rules, but we can define the way we exit the market. For that, we can, for example, change this rule, this entry rule. I will remove the take profit. I save the rule. So for example, I'm just there. I can set the order. There are no take profit, but I can see here the exit rules. There are some different kind of rules. The examples here are very simple, but still useful. PSR exit or a 3-bar exit, for example. So first, we enter the market. This is done, and we can use the 3-bar exit by we have defined condition when the order growth is greater than 1. We'll see when the growth is greater than 1%. The action is to modify the order. And in fact, we modify the stop loss to be the lowest value of the last 3 of the previous 3 candles. So it's called the 3-bar exit. We can easily just drag and drop on the instant order. We can see here it's set, and we'll see when here it's not yet to 1%, it's now 1%, and we can see automatically it's set to the lowest value of the 3 previous candles. This is a way of trailing exit, for example. And we can see that. Another quick example just to show you, if I do the same thing, but I use the PSR exit, I will add this indicator to see better. And this rule uses an indicator value, the parabolic SER, and when the input is 1, in fact, when there is a changing, when the value is upward or backward, there is this value is set to 1 or to -1. So we enter the market just here, yep, and we can use this exit rule. And we will see this is another way to trail the exit. I forgot to mention the action is to close the order when there will be a modification, a change in the PSR direction. We can see, okay, it's closed automatically because here the movement, the direction of the PSR has evolved, has changed. So this is the quick example, just to show you how it's possible to customize the rules, but there are so many possibilities. You can here the setup rules are defined by posing the backtest, but it's possible. For example, another quick example. We'll take here the XAUUSD 12. So if I use this one, for the action, I can add action, and I can add some condition here. In this one, I used an action to pause the backtest, but I can add an entry rule. Like that, I have a fully automated system. I can show you here. So I'm doing the both here. I will do a pause and setting an entry rule. So we can see here. But if I want, I can remove the pause backtest. I save the rule. And we'll see here we have an automated system. It's not doing very well here for sure because it's just for the demonstration. But it's pretty handy to save time because the backtesting process to build confidence can be can be very time consuming. And I think that's it for the role manager. But an important point is that there are a lot of function to customize. You can see here to set your condition. You can use some operators. You can have the value of all the prices, the value of the candle or previous candle. You can choose the time frame, and related to the time, you can modify the orders. And there are some price patterns. You can set condition when the candle is bearish, neutral. You can add a lot of things, and it's still in improvement. So the customer can request new features to add some new ideas. You can, for example, maybe I can show you quickly. Here, if I create a new rule, let's say support resistance level, it's pretty easy. We can say for this level here, the last bar, when the last bar will reach support resistance level, in fact, it's just the horizontal line, we will pause the backtest. Okay, it's saved. So right now, if I detach this rule, and I will use this one I just created, and I will put this horizontal line maybe there, an interesting turning point for the price. We'll see it's automatically paused. So it can be pretty handy. We can do the same with the trend line, with the rectangle for the price area, for supply and demand concept. There's a lot of things to do, and you can use all indicators inside your condition to enter, to exit the market, or just to set a condition to take some action.
Oh yeah, this is amazing. I would have never thought of this myself, and it's super handy because it can be used by both discretionary traders, manual traders, and automated traders, and anybody in between, right? Because you can just set up your own rules and then drag and drop, or just have it run. So this is fantastic.
Yeah, exactly. Because if you are just a rookie trader, you can backtest manually, but you can have some semi-automated trading just to save time, or fully automated trading. So depending on your experience level, you can use it to your own advantage, and it's pretty handy. Myself, of course, I use it every day. But it's for this the rule manager it's pretty handy, I think. I hope so.
Yeah.
And just another feature I can show you, and that's a bit sad because in all the solution, all the existing software, backtesting software, they don't include this kind of features. It's the statistic module, in fact. So here it's not very interesting because we have only 9 trades. I can show you maybe. I have here some samples for information. It can take the backtest data to have some statistic about it, but it can take as input some external statement like MT4 statement, like ONDA broker statement, or some even Forex tester statement, and you can see the statistics, which are very crucial to assess the strength of a trading system. You can see the basic graphs, the drawdowns, the growth over time, some statistics about the winning and losing trades, some specific ratio to assess quickly the strength and the efficiency of the trading system, some symbol analysis, timing analysis too. You can see the duration of each trade with the tickets and the risk analysis, the risk of a run or risk of drawdowns, the list of trades, and you can even do some Monte Carlo simulation, which is pretty handy too when you do a lot of backtest, by setting some option like skipping position or insert some artificial slippage to see if your trading strategy is very sensitive to slippage. Can be the case for lower time frame. But yeah, this module is pretty handy, and you can use it for your own backtesting results, but for external backtesting results as well. It's yeah, I use it.
Yeah, that's awesome. I mean, that's the one thing that's been missing, like you said, from a lot of software out there. I mean, AMI Broker has a pretty good set of like reporting tools, but that's only like automated backtesting, right? But with this, you can actually do their backtesting analysis and analysis of your live account, like you said, with the Oanda API or the MetaTrader connection too, right? So that's awesome. It's amazing.
Yeah, sure. Yeah. Thank you. It's handy, and I don't understand why this kind of feature is not included in every software, because again, you can backtest a lot, but if you are not able to see properly the statistics of your own trading system, there's a lot of traps. You can think it's profitable, it's performing, but if you check some specific ratio, you can understand that it's not going so well, in fact. So I think it's very important, in fact. Another quick feature is the fast backtest. I show you. In fact, we can backtest here with a graphical interface, but it's just to save time. It's possible to do it without any graphical interface, and you can save a lot of time. For example, if I want to backtest some of my setup rules on several symbols at the same time, I can choose the time frame. I can use external API strategies. It's compatible with Forex Tester. And right now I will use the setup rule. It can be pretty. So let's do this. This example sample setup rule. We can see the default entry rule, and we can change if you want the entry and the exit rules. For example, it can be pretty useful to use it for one single system, one setup rule here, but you change the exit rule. You can see quickly if it's better to use a 3-bar exit system or a PSAR exit system or some kind of what you want exit system. So it can be, and the same for the entry rules. This is the same condition to enter the market, but you will change here the variation, and it's possible here. With different, I will not. It can be. It's rather quick, but and you can see when it's over. You can check the statistics for every backtest. So the same way, it saves time. It's the main point.
Yeah.
So yeah, it's a bit. But just to show you quickly.
Yeah, let's see this.
So we'll see. Yeah, it's not only 21 trades, so of course it's a very basic setup rules. But it's again, it's pretty useful. So yes, for this fast backtest feature about it, and again, the data is a quality data, and you can use the real spread data. Again, it's very important, I think, in the backtesting software to to be able to use the real spread, historical spread, because in some software it's easy to set the spread to just one pip, for example, but it can change the results, the performance of the backtest. So using the historical spread value is very interesting, because we want to be as close as possible to the the real financial markets. And again, yeah, Statistics Center, I talked about it. And just, yeah, last item is just the community oriented. In fact, every file, every backtest, every statistics you can share between users, of course, to assess the backtest of other users. If you are interested in some traders, you follow their performance, and maybe you want to invest some money on it, you can share this data. You can upload the statistics on the web without, you can check the statistic without having the naked market. In fact, it's still interesting. And again, it's possible to request some features to profit from it. Everybody can profit from it if it's very good. There are some public resources. If you have any question, don't hesitate, of course, Jörg.
Cool. So it's going to be naked-markets.com. And then the forum, I think the forum is really cool. That's a really great idea, because people can share their entry and exit rules, the formulas, and then their back tests. So that's going to be a huge one, I think, because people can build upon each other, right? So
yeah, exactly. Exactly. That's the spirit. Yeah.
Yeah. Awesome.
Okay.
Cool. So you've been working on this for a while, and
yeah.
How does the licensing work, first of all? Is that one computer or any computer you own, or how does that go?
Oh, to be honest, when I started this project, I didn't think it will be so long to design, because it was my own software. And after I thought I can sell it, maybe it can be interesting for other people. It took me about 2 years maybe. Wow. And for the about something like that. But I'm pretty happy, because it's useful for me and for other people. Still, there are already some people using it, and they are pretty happy with it. It's good. It's very pleasant. Yeah. But yeah, it's for information, it's developed in .NET framework, so it's pretty modular, and there are some features I'd like to implement, like a new API, and you'll be able to code, to design new system with easy language, like C#, for example, or Visual Basic, something like that. Mm-hmm. It's pretty,
yeah, I was really impressed when I asked you if you could do a Oanda plugin or a Oanda API access, and you had it done in like a couple of days. I was like, oh wow.
Yeah, yeah, sure. Yeah, but yeah, it's a pleasure, because you had a great idea, and everybody can profit from it. So it's a win-win. It's yeah. So the customer. Don't hesitate to request feature. I'll be very happy to implement it, to improve the software.
Mm-hmm. Okay, cool. So it's ready for purchase, and we're going to run a special just because you watched this video for the entire month of May 2022. There's going to be a discount. So you want to talk about that a little bit?
Yeah, sure. Yeah. So to remind, the website is nakedmarkets.com. So yeah, for the launch, this is the launch discount. The public price initially is $269, but for the launch discount for you, the price will be $179. During 1 month, I think we'll do this limited discount. So yeah, it's it's a way of sharing this kind of software.
And if they purchase a license, does that just work on one computer, or is it for whatever computers they own? Just one computer, right?
Yeah. At the moment, it's for one computer alone. It's bound to one computer.
Okay.
We'll see after, but at the moment, it's one computer.
Yeah, that makes sense. Okay, great. Well, thank you for sharing this. I mean, I think this is a great piece of software. I think there's a lot of, like I said, there's a lot of features that I never even thought of before, but make a lot of sense, and they really speed things up. So I've personally been using it for how many months now? And
and
I haven't been.
I'm happy. Thank you.
Yeah, I haven't been using it recently because I've been testing this system that has like proprietary indicators. But even from the time since I last used it till now, like there's so many things you seem to have added. So I think, the development process is really going along smoothly and really speeding up. So I think that's awesome.
Yeah. Great. Just for information, about the improving process. The updates are very regular. The roadmap is public, so we are on the websites, on the forum. We can see here. We can see the next major feature which will be implemented, like the API, the news trading module. In the next coming week, it will be available, and some interface with MT4 to import some indicators or some strategies, or to export to MT4 all the rules which are defined in the rule manager will be exportable in MQL4 language if needed. This is some features, and it's updated regularly. I think it's important to be transparent for the customer, because it's a lifetime license, but they can follow up the improvement of the software. To be honest, of course, it's a software is young, so it can be improved easily with a lot of new features, and I think that's it. I'd like to thank you, Hugh, for this video. Of course, Walter Peters, for this great community, Rima, and especially Yagas too.
Okay, great. Well,
thanks to you, Hugh.
Oh, my pleasure. I mean, thank you for presenting this to me and letting me test it out, because it really speeds things up for sure. So, any last words? Anything you wanna share with people, or?
No, I think that's all. I wanted to design efficient, fast, and modular backtesting software. I use it myself to design some new system. I hope it's the case, and I'm happy to share it with you.
Great. Awesome.
Again, thank you.
Yeah, you're welcome. Thank you for coming on.
Thank you. Thanks to you.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice. A lot of people just can't let go of that idea that you have to work hard for your money.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk a little bit about cognitive dissonance in trading and how that can affect your trading, how that can affect your life, maybe even. What do you think about cognitive dissonance and how that affects traders?
Yeah, that's interesting. That's a really good topic. I'm glad you flagged that one. So for people who don't know, cognitive dissonance is when you have like this friction between what you believe and like what is presented to you or what you're doing. So like, for example, if you think that all wealthy people are jerks and they have to be jerks to make money, they have to screw someone over to make money, and yet you want to be wealthy and you're working towards wealthy, does that mean you're trying to become a jerk? Right? And so there could be some things subconsciously that you're like, there's some cognitive dissonance, like, I don't really want to become one of those people. Yes, I do. No, I don't. And so there's kind of that friction, right? So in trading, one big one would be like if you have a bias. So for example, right now, I have a bias on the dollar yen where I put a trade in every day. In fact, I'm going to do it right after our podcast here. I'm going to put my orders in, and my bias currently is to buy the USD against the JPY. So buy the dollar against the yen. However, I put in buy orders and sell orders because it's kind of like a breakout strategy, right? So I don't really care if it goes up or down. I'll take both those trades and it'll be one or the other or neither. You know, if I was only going to stick to my bias, which, you know, I have a reason why I believe that the dollar yen's more likely to go up than down, but I would have a hard time actually taking the sell side, right? And you kind of see this, if like, let's say you were in a trade for like 3 weeks, okay? Maybe it was like a 4-hour chart trade, but it really went well. So, and you're using some sort of trailing exit. So then you spend all this time trying to figure out when to get out, right? Finally, you get out, you know, you try and stick to your rules or whatever. You get out after 3 weeks, you make a nice, big fat profit. And then there's a sell signal immediately. What are you going to do, right? Mm-hmm. It's hard for people. Do you know what I mean? Like, you've already made all this money and you've already seen the uptrend, right? You bought and it went up, and then now all of a sudden you have a sell. It's kind of tricky, isn't it, to switch gears and do that, because there's some dissonance there, because you believe, or you did believe, that it was going up, and now is it going to be easy for you to take the other side when you've spent so much psychological energy on the buy side, right?
Yeah.
So will you be able to sell? So that's another thing. And then just like, you know, like, let's say, here's a big one actually. This is my last one. Example. It would be this. You believe that the best way to make money from the markets is to find those turning points and hold on for dear life. So it goes up to a point, it double tops, and then you sell, right? And so you need to hold on for as long as you can so you can make a big chunk of profit. But your mentor or some strategy that you bought online says that you should trade the trend. Okay.
Yeah.
That's dissonance too, right? Because your belief is that this is how I should trade, and yet you're trying to emulate your mentor or someone who sold you a strategy in the dark corners of the interwebs, right?
Yeah.
It says you shouldn't try to find a turning point. You should just ride the strong trend. So what are you going to do, right? That's another like dissonance thing. So those are the way I look at it, kind of like who you're becoming or what you believe in terms of wealth and money, because that's a big one for traders. Whether or not your strategy fits your beliefs, and also the individual trades you take can also be a source of friction too, psychologically, because you kind of get married into one side or the other. So that's how I see it. Those are the sort of like 3 broad categories, I would say. What are your thoughts on dissonance?
Yeah, those are good ones. The only other one I would kind of add that kind of goes with your, you know, like going against what you believe about yourself, is that I think a lot of people kind of short circuit themselves because they have a string of winners and they make a lot of money or whatever, and then they think, oh no, I'm not supposed to be that successful, or I'm not a real trader. What am I doing here? And then they lose it all. They give it all back, right? I think that's one of the big ones that I see also, and I've done.
Yeah, they kind of feel like they're a fraud.
Yeah.
Sorry.
Yeah, I've done that too. So like it's definitely a natural thing for people to do. But yeah, that's the big one that I would talk about.
Yeah, I know really good traders that will pull all their money out when they hit like 100 grand or 200 grand or whatever. You know, they just start with a small account and they get to 100 grand, and then they're like, boop, I'm going to go back to 10 now, because, you know, they know that when they get over that 100 grand, they start taking huge risks and they get really, really aggressive and they wipe themselves out. So in some cases, it's other people that tell them, like their wife. You know what I mean? Like, it's like, So like, I mean, that's kind of one way to hack it. I think you should really get to the root of it. But that's a huge one, isn't it? Where it's funny, you know, we get told when we're growing up that you have to work to make money. You got to work to make money. You almost are told you got to trade time for money. And then all of a sudden this trading thing comes around and they're like, no, you're going to get paid for the decisions you make. So yeah, there's a lot of work involved in kind of building up your confidence and refining your strategy. That's where the work part is. But then after that, it's really more managing your mindset and just making decisions. So you can, like, I could sit down and take 10 decisions today and take 10 trades, and I would either lose money or make money depending on those decisions that I made today, right now, right? Mm-hmm. But that's not the case with most people. They learn that they trade money for time, or trade time for money, whatever. Yeah. So it's weird, isn't it, when you start thinking about it's a different way, But if you think about it, all the really wealthy people, they all have some sort of thing that's leveraged, whether they sold a bunch of books or a bunch of music albums, software, or do you know what I mean? Like they always have something where it's even like Elon Musk or whatever, he's an easy example, but he has different things that will, like, if the stock price goes up because he gets paid in stock or whatever, that so it's kind of a weird thing where if you really think about it, if you want to be wealthy, the two broad paths are usually real estate or the markets. And you could argue that real estate is a market as well, right? I would argue that, but yeah, but it's never really trading money for time. You don't really see, other than like maybe surgeons or anesthesiologists or something like that, or lawyers, usually, and even lawyers, when you get high up, you're actually no longer making the money from your own hours because you become a partner. You're making you're making the money from the profits of the firm, right? Because you basically own a part of the firm as a partner, right? So you have a share in that. So even then, the big time lawyers, they're not even really trading time for money anymore. It's so important. It's so interesting how that's so ingrained in our culture. Like even in like healing circles or healing modalities that I've studied, a lot of people just can't let go of that idea that you have to work hard for your money. And I think that's something that everybody has to really work on and really evaluate. Why am I believing that? And, does that serve me or does it not? Yeah, exactly. I mean, I had a discussion with a friend the other day, a couple weeks ago, and he was saying, I just don't understand how someone could just, like, we were talking about cryptos or whatever. He's like, I don't understand how someone could just like all of a sudden be worth $1 billion or whatever, 100 million. He had like a big number in his head. And I was thinking, like, the Native Americans when the colonists came, the Native Americans, they didn't have a wheel. Now they did have a wheel for their kids. So their kids had little wheel cars, right? Like they'd give little things to push around and stuff because like little boys like that stuff, right? As we all know. But they didn't have wagons or anything like that. They had sleds, so their horses could pull like sleds, right? But they didn't use the wheel, even though they knew what a wheel was, and they actually made the wheel into toys. They didn't use it. Now, my thinking is, what if there was someone in a tribe that had come up with the wagon or like some sort of wheeled sled rather than the sled that they had? Imagine what that would have been worth to all the tribes, and imagine how many tribes would have wanted traded with him, because basically he came up with an idea, turn these sleds into wheeled sleds, and how valuable that would have been and how useful would have, provided that it worked. And the plains can be pretty rocky and rough and all that stuff. We know all that from the wagon trails, right? But I'm just saying, like, that's an idea to me. Like, that's an example of someone who could have, it didn't happen, but it could have been like $1 billion idea back in the old days, right? I mean, billion, whatever, whatever, however they traded back then. But, it's just really interesting to me to hear that mindset, because you're right. I mean, that's a big one. That is a big thing. You get taught from a very young age that, time is money. And you do homework during your home time, and you do schoolwork during your school time. And the first jobs you get are by money. Like my first jobs I got I was doing magic shows for kids' parties when I was a kid. and it was always time for money. Even then, it was, whatever it was, $80 an hour or whatever. It was really good money, but it was still time for money, and I could only do so many magic shows on the weekend. Right. So, yeah. It's interesting how we just can't see what's all around us.
Yeah, definitely. All right, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Is your intuition actually adding anything?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. Welcome back.
Thanks.
So I have a question here. This came up during our coaching clients call that we have with the coaching traders, and he's a really good trader, and he was talking about how he's back tested his strategy. He's now live trading. Okay, he's doing really good work with his psychology. He uses a hypnosis track that I gave him twice a day. He's good at journaling. He uses his subliminals. He's got an excellent track record trading, even with his live account, right? But he still questions himself, sees his rules, he sees the setup, right? He knows this is a valid setup, that he should take it, but he still thinks, should I be taking this setup? He still questions his abilities to interpret the charts as he should, even though he knows he's good at this, right? And this is kind of, the backdrop is that he's kind of transitioning over from back testing into live. I mean, he's been trading live for a little while now, but not that long. And he's just, he's at the point where he really wants to ramp up his account size and all that. So he's getting to this point where he's kind of questioning his abilities to interpret whether or not this is a tradable situation, right? What the markets are telling him. So what would you say about this?
Yeah, that's always a tough one, right? I think two thoughts on that. Like, number one, that might just be part of his personality and how he's wired. So he just might have to learn how to manage that. Two, which probably is more likely in my opinion, I was watching a Denise Scholl interview like a couple of days ago, and she was talking about how all these negative emotions that come up when we're trading link back to something else that happened in our life, right? Something that was programmed into us, something that our parents told us, something that society told us. And I think from her like traditional psychology standpoint, she says you have to kind of like just manage it, right? Manage it or stuff it down a little bit. And there's definitely some validity to that. And understanding where it came from, I think in her opinion, is kind of like half the battle, and that kind of releases things. And it can, I believe. But I also believe that if there's something that you can't release through that method, I think it's some sort of trauma that's in your past that you have to like face and resolve. And that could be like before you were born, that could be when you're a kid, maybe you had a bad divorce or something like that. And a lot of these things have an impact on us that we don't realize the significance of. Like today, it might seem like a very insignificant thing, but back then it might have been a huge thing for you, and you might not have been able to process it at that time. And that could be causing what's, happening now. And she brought up a couple of examples of like, maybe not getting approval from your father or something like that. So, there's all kinds of things you can do for that, like hypnosis, whatever. There's a ton of modalities out there. But I think that's something to look at. If you're, obviously this guy is proven this guy is successful, but he still doesn't have that confidence. So I think that would be something to look into. What do you think?
Yeah, I agree. I told him we'll put a link in this show notes for those people who are not familiar with Denise Scholl's book. You guys can check that out. Yeah, so he's taking the You Get What You Trade For course, which actually is very closely aligned with Denise Scholl's ideas. Mm-hmm. And so he said that's been useful, very useful to uncover those things, like just like you were saying. So that's thing number one. And then the more sort of conscious thing I said was, to have your A grade trades. So you have like a printout or a screenshot of like the perfect trade and compare that to what you're looking at now. just to see and to record your belief that the trade at the beginning of the trade, record when you take it to record your belief that the trade will work out. How confident are you on a scale of 1 to 10, for example? And then after you have hundreds of trades, you can go back and look and see, is your intuition actually adding anything? Because you can use that, you could leverage that if it's true, right? It may be exactly what you're talking about, which is why he's going through the You Get What You Trade For course and, uncovering all that, because that's definitely probably number one, right? But it also could be that his intuition is actually saying, hey, watch out, this isn't a good one. And it could be right. Now, I tend to think that's unlikely, but it's a possibility. So that's why we, you know what I mean? That's why I say record the data. So so work on your history and your psychology. Have a perfect example of a perfect trade, so you can compare that to what you're looking at now, and then also record your intuition, feelings in your journal, so that again you can go back and you say, oh, okay, if I say it's an 8, 9, or 10, the trade is like twice as likely to work out and be profitable. And if it's below a 7, it's unlikely to be, it's, more likely to be, a loser. So do you know what I mean? Like you can do things like that. So I think it's like kind of that multi-pronged approach is what we were talking about. So I think, but definitely, it could, like, Denise is onto something. Yeah.
Okay, cool. Yeah. Try everything basically. See what
try everything. See what sticks. Use all methods. I mean, the way I look at it is like some of it is subconscious and some of it is more conscious, right? Some of it is for your logical mind, like, oh, this is a perfect trade, and oh, I think this is a 9 out of 10. Like that's for your logical everyday. And then there's the real deep thing, which stuff is what you were talking about. Yeah, exactly.
Yeah. Okay, cool. Thanks, Walter.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
So if you want something different, reprogram your subconscious.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk about imposter syndrome. I know we talked about that a little bit on the last episode, but maybe we can go into that a little bit more in depth. Maybe you could tell us what that is and how that manifests in trading.
Right. So imposter syndrome is when you feel like you're a fraud, basically, right? So we talked a little bit about in the last episode where let's say you're a new trader and you start trading, right? And you have, in your first month, you make 30%. You make a bunch of money. Actually, I know a guy that did this. He went to one of our seminars and he was talking about this. If you feel like you didn't deserve that, if you feel like it wasn't you that did that, right? Then you can easily self-sabotage yourself, right? So you can do something to bring yourself back down to where you believe you should be. And I think this is something that comes along a lot with traders, like the traders we talked about in the last episode, who they could make a lot of money, and then when they hit a certain level, it's like a psychological barrier, and then they crumble. This is something that, to me, I feel like the root of this is really your core beliefs that you get when you're schooled at university or high school or even primary school. And your home life, the people around you that you trust and admire and ask questions of when you're growing up, you feel like, you're not worthy. So you're an imposter. You've lost, you've got something that shouldn't be yours. And in fact, there's a really good interview. I think it's the last interview of the first Market Wizards book. So it's called The Market Wizards by Jack Schwager. And I believe it's the last interview. It's either that one or the New Market Wizards. I believe the New Market Wizards has a different psychologist. I think that the first one has a hypnotherapist. And he talks about this guy and how he it was kind of an imposter, but he was the other way around. So he had this imposter syndrome where he was a trader, right? And he was losing money, and he wouldn't like look at his statements or something like that. Like he would get his statements from his broker and he'd throw them away or something. So under hypnotherapy, this all came out, right? It wasn't, the trader had come to the hypnotherapist to try and figure out, how can I improve my trading? But what come out from the hypnotherapy session was that he was basically felt he was a fraud because he was telling all of his friends he was a trader, but he was actually just losing money hand over fist, And so he was talking about what he was doing with his statements and things like that. So the core of this is that you have to change who you are, right? So you need to change, and we can change our personality. This is something that people think that, by the time you're 5, your personality is set. That's all BS. We know that from the recent research in psychology that you can change your personality. And you've probably done it. I've done it in my life, where you live in different places with different people, and you can kind of reinvent yourself and become a little bit more outgoing, or a little less outgoing, a little bit more intellectual. You can change it's a progression. Our life is a developmental curve. It's not a straight line. You don't just stay an introvert or an outrovert or extrovert or whatever, you don't stay, simple-minded or whatever. You can improve lots of things. So for imposter syndrome, what you can do is change your beliefs about yourself. And that's really, in my estimation, best done with subconscious tools like hypnotherapy, like subliminals. There's a lot of things you can do when you're falling asleep, but ways to seed your subconscious. You can use hypnotherapy. You can use a really good hypnotherapist. NLP is something that people talk about, neuro-linguistic programming, which is kind of on the fringe of psychology. And most psychologists that are academics will frown, but not all of them, but many will. But they frown at ESP research. So, whatever. There's a lot of good research on that sort of stuff. So I would say if you feel like this is something you're running up against, you would work on yourself, you would work on your core beliefs and change what you think about yourself. Because the way I look at it is your subconscious isn't out to get you. Your subconscious is just your program. So whatever you're programmed to do, look around your life. That's where you're at. Where you're at right now, where you're at today, that is your program. Okay. So if you want something different, reprogram your subconscious, and then you can get different results. The Silva method is another one that people look at. That's another thing you might look into, if that makes sense to you. But there are lots of different ways to do it. What are your thoughts on the imposter in trading?
Yeah, so I was just thinking about that, and an interesting reflection of that, kind of like, like the younger guy or the newer guy can't be successful, is like, I see that in soccer a lot, right? Football.
Yeah.
So like you have these like 16 and 17-year-old kids playing on the senior team, right? With these 30-year-old, 40-year-old guys. Yeah. And you don't really see that in any other sport. And, those kids could feel like, oh yeah, I'm an imposter. I don't belong on that senior team. I don't belong with those older guys. But no, these guys are just as good as the rest of them. So I think, that's a good way of looking at things and saying, okay, even if I'm not that experienced in trading, or if I feel like I don't belong here or belong making money or whatever, then you can kind of look at those kids and say, hey, this kid is doing really well at, the highest level of soccer. Why can't I be at that level of soccer also? And I think what you're saying is spot on, in that you have to change the way you're programming. And at least from my perspective, there's 2 ways to do that. One is you can consciously change things, and that's if your programming is more in the conscious mind. But if it's more subconscious, then I believe that you have to get rid of a lot of the traumas that have been programmed into you or have been given to you, or whatever, whatever happened. And there's a lot of different ways to do that. Like you said, the Silva method, I've seen people get some good results on that. And some of the other stuff I've tried. So yeah, just try a bunch of things and, see how it works.
And it's important to remember that it's kind of normal, for people to feel like no matter what they've done, no matter what they've accomplished, that it was, that they're a fraud, or that they're incompetent. I mean, that's kind of normal to feel that way, because there's always going to be someone who's better than you, right? Like that's just the case. Like when the models go to the runway, there's always going to be a model that's more attractive than they are. When the bodybuilders go to the bodybuilding contest or whatever, there's always going to be a bigger, more defined, stronger dude or whatever, you know what I mean? Or whatever. Like And the same in trading. Like if you hang out with traders and you're starting to click and you're starting to make money, there's always going to be a trader who's trading bigger accounts or more, or betting, making higher percentage or whatever. And traders can be kind of jerks that way. You see a lot of like talks, traders give talks and they talk about how great they are and stuff like that. And it's funny. Like, I don't know. I just find it interesting. Like, how a lot of times traders will use their past to justify, maybe they feel imposter syndrome. You know what I mean? Like maybe that's what's going on. Like they feel like, I worked at, Bank of America and I was trading these huge amounts and I made this amount of money from my bank, and now he no longer works at Bank of America. He's no longer trading that huge amount, right? He's no longer doing that, but he still wants to feel important. So he'll tell those stories about what he used to do, and you know what I mean? And feel like, oh, I called the top on the pound and blah, 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 things like that. Like, it's just, to me, it's just screams imposter syndrome. That's what they're, and there's a lot of that in trading. Even it's funny, they say, actually, this is a really good thing. I know I've talked about in the past, but it might be important for people who haven't heard this before. They say that one of the things I learned from one of my first psychologist professors was that you can get free therapy by going to a park bench, sitting on the park bench and watching people walk by, and listen to yourself. Listen to what you say about the people that walk by, because that's the stuff that you're projecting out there. Do you know what I mean? So you see that guy and you go, oh, he thinks he's so smart and blah, blah, blah. Well, that's basically, it's a reflection of what you're saying, what you think inside about yourself. So so that's another thing you can do too, is catch that. Because if you don't know why it's happening, it's hard, right? Maybe you go see a hypnotherapist, maybe Silva method, maybe, park bench method, whatever. But there are a lot of ways to kind of get at that.
Yeah. All right, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Spend some time with the system and figure out how it works.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, we have a question from YouTube. So this guy says, I've been watching the podcast for a while, and he hasn't gotten to watching all of it, but he's a beginner and he has a problem exiting trades. What he does is his stop losses are 10 to 20 pips, and he'll move to break even at 30 pips. And he says that he consistently can catch 50 pips, but a majority of the time he doesn't know when to take profits, and he's always hoping for more. And then basically it turns against him and he either loses or breaks even. So what are your thoughts on trying to fix that?
So I wrote about this in the Naked Forex book. Like, you kind of have to decide who you are, or you can be both, right? So I talk about this idea of being a runner, where you like the trailing exits, and you're going to have these really big wins occasionally, but a lot of times you're just going to have like middling okay trades, and you're going to give back profit, right? Or if you're a gunner, you use targets and you look for specific targets that can be based on quantitative data that you have, like the pair usually goes this far in 10 candles or whatever, you know what I mean? Like, you can do something like that, but at the end of the day, you're just happy with the target. Now, I like to do both. So what I will do is I will have a target. Some systems, the target is relatively easy to achieve, provided the trade is winner, provided the signal's okay in this instance. And then the other bit of the other half of the trade, usually I will use a trailing exit on, because I like to catch those big winners occasionally. And anyone who's a trend follower will tell you that will make your year, that time of the year where you get that really big trade or two trades of the year. So that's my belief, is that you can decide to be one or the other or split it up. usually the test that I ask traders to use to determine whether you're a runner or a gunner is to say, all right, hey, Hugh, imagine you're in a trade and your trade is up 100 pips, but then it goes against you and pulls back, and you end up losing 50 of that 100 pip profit, and you're out at 50 pip profit. Okay, so that's scenario one. Scenario two is you are in a trade, it goes in your favor. As soon as it hits 50 pips, you get out, and you're very excited. But then if you had waited just a little bit longer, it would have gone 100 pips. So that's scenario two. Which of those scenarios is more psychologically distressing? Is it scenario one? If that's the case, then you probably are a gunner. If it's scenario two, then if that's more, psychologically distressing, then you're probably a runner, and you would be better off using a trailing exit. Or you can do like me and do both, and that way you can always pat yourself on the back when when it's a winner no matter what, right? So it really comes down to that. You just don't know. Like you can use the ADX, and you can use the moving averages, and you can do that, the MACD, and you can do all these things to determine whether or not the trade's going to keep going. But at the end of the day, the trade doesn't care where your stop is, if it's at break even or if you're up 900 pips. The market doesn't care. It is probably going to go up and down. Even when it's going down, even when it's going up, it's going to go up and down. So whether you get clicked out on your trailing exit or your break-even stop, the market don't care no more. So what do you say about that?
Yeah, no, I agree. And I think, like you said, the data is super important, right? I think if you have a lot of data, you can really see, okay, does this make more sense to do this for me, or does it make more sense to let it run? One example recently that I tested, apparently it only works in the euro US dollar, the system that I tested, but works really well. And what I looked at was, I asked like several questions. Okay, how far does this run from the entry? What's the biggest run that it has? And then how often does it hit these other points, like 1R, 2R, 3R, or whatever? And I found out that you could get like 7R on some of these trades. So that was a reasonable target that you could put in there. I started using a 7R profit target on every trade, but my exit was on a moving average. So if it crosses over the moving average and it closes on the other side of that moving average, then I'll close it out. And that seemed to be the best balance between capturing some profits and still having that, capturing that big run also. So I think it really is about the data. Like, look at the data. Don't look at the data from a perspective of a particular trading system, but ask some questions like, how far does it run? How far does it get into profit before it snaps back? Or how often does your entry actually work as written? So those are some things to look at, and not necessarily just taking a certain strategy and going with that.
Yeah, you're right. I mean, and traders will find when they look at trailing exits that there are different types of trailing exits, right? There are like tighter ones that are going to bump up your win rate, but they're going to reduce your average winner size. And then there are looser exits that are going to depress your win rate, but your average win size is going to go up because it's going to more easily capture those huge wins, right? Those 9R, 10R wins and things like that. So yeah, so it really depends on what you want to do. I mean, I will say most of the time when I've looked at it, I have found, not always, but most of the time, the trailing exit is the way to go in terms of if you want gross profits, right? It kind of makes sense, right? Like you're letting the market give you as much profit as it wants to. That's not always the case, because what you'll find is that some systems, they kind of have like momentum signals, right? And it's just good for a little pop, and it's not, do you know what I mean? It's not necessarily likely to keep going. So it really depends on you, and how you interact with your strategy. So yeah, like what you were saying was really interesting. Like, if you look at the average distance that a trade goes, right? And then you go, well, the median is 75 pips, right? So I'm going to use that as my target, right? Because that's the median. And so, half of them are going to go further than that, half of them aren't. Remember, that doesn't mean you're going to have a 50% win rate or whatever, because it's just of the winning trades, right? So it's only the winning trades are even going to get on that side where the median is, right? So, all those things you have to take into account. Yeah, so I mean, it's really interesting. I think when you're building a strategy, because you're forced to answer the questions like, what's important to me, you know. I mean, kind of these sorts of things that come up a lot in trading. We talk about it in the podcast where all these things keep coming up, like what's important to me, how do I deal with this, what does this mean, right? And so when you're building your strategy, a lot of those questions come up because you're confronted with, okay, if I do this, then this is probably going to happen. Am I happy with that? Or should I do this so that I avoid this sort of feeling or this sort of, going down this path? So it's really interesting. In a lot of ways, it's like you're thinking like, who should I marry? Should I marry this person? Yeah, she's really great and everything, but she's got a cocaine habit. What am I? You know what I mean? Like, so like, it's sort of like it's the same thing with trading systems. There's always going to be something you don't like about it. Even like the brilliant trading systems that have high win rates and high average winners and all that stuff, they usually have the problem of not trading that often, right? Like there's always something about so.
And along those lines, like you're not going to find out about your girlfriend's cocaine habit unless you spend some time with her. So like the same thing with the trading system, right? You got to go through the iterations, you got to do the testing, you got to look at the data, you got to get on the screen and do some demo or whatever, live trading. So yeah, spend some time with the system and figure out how it works.
Great point.
All right, cool. Thanks, Walter.
Yeah.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I definitely like my coffee. It tastes good, but I find that it spins my wheels too fast, and I'm kind of just all over the place.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk about substances that can affect your trading, especially stuff like, caffeine and coffee and stuff like that. So what have you found that helps or hinders you?
Okay, so I used to be on the coffee every day. And my family, like my father-in-law, he's a coffee exporter, so we got lots of coffee around, you know what I mean? Like,
yeah.
So I mean, coffee is not a problem in this house. We've got it, and you got to drink the good stuff. So I used to be I was down that path, and every day, and I've done this repeatedly in my life where I'll go off coffee. I had a coffee shop for a while, right? Before I became like really sunk into my trading. I was into trading when I had my coffee shop, but I didn't have a lot of time because of the business. I didn't have a lot of time to do trading stuff. I tried. Luckily, the coffee shop was slow enough that I had some hours there, but that's a different story. So yeah, I found personally for me, and I know some people, you can do like genetic tests and they'll tell you whether or not you process coffee, or caffeine or whatever, like they have that stuff. I found personally, I don't think I am a good candidate for like lifelong caffeine addiction. And so I've pulled back, and I've been off of it probably for like 3 or more years now.
Oh, wow.
Probably going on 4 years, so I'm off of it in terms of that. And the reason why is I don't like the crash. Like it's great. You can be very productive, and it can help your focus and all that. What they found is that with extroverts, when they are on caffeine, they tend to perform at a higher level because they're always kind of lower. And then when they get stimulated, whether it's by their environment or whatever, caffeine can do that. So they're like down here. Think of like a U-shaped curve. In the middle of the U-shaped curve is like peak performance. So extroverts are kind of down here, and then they get caffeine, they get closer to the middle of the peak of the curve, right? And then introverts are kind of almost always near there. So when they have it, they kind of go down, right? They go down the other side of the inverted U. And I'm probably more introverted in terms of my personality. And so I feel like, I can also do too much caffeine. right? And I just didn't like having that feeling. So it can be useful. I would say, this is what I would say, and then I'll be quiet. I would say that this is the kind of thing that would be useful if you were taking a trade in which your entire trade plays out before you on the charts and you are sitting there watching. In other words, scalping. Okay. So if, however, you are a trader who trades like I do, like generally higher time frames, generally I'm not sitting there watching the charts. Generally, like I just put in 6 trade orders this morning, right? And guess what? They're on the daily chart and I do not care what happens to those trades. And I am not going to look because they are either going to hit their targets, make some money, or get stopped out. And that's it. I'm done. Okay. My psychological energy is over. But if I was sitting there trading the 1 minute euro, I would probably want to have something going on, whether it's caffeine, brainwave entrainment, do a bunch of push-ups, whatever, have a pull-up bar in my office so I could do some pull-ups, jump around, whatever it is to keep, focus for that 3-hour session where I'm scalping every day. So that's what I would say about that. It's totally up to you, but for me personally, I don't find that useful. I've tried other things. Like there was a supplement that's supposed to those yeah. I tried that for a while. It didn't really seem to do much. It seemed like a bit of a scam, the one that I tried anyway. So yeah. So for me, I think you're better off doing like personal stuff like brainwave entrainment is what, I would do that rather than just a substance. I find that to be well worth it, as opposed to, caffeine. But that's just me. What have you found?
Yeah, I mean, I definitely like my coffee. It tastes good, but I find that it spins my wheels too fast, and I'm kind of just all over the place. The crash doesn't really hit me. Like I used to drink coffee before I went to sleep, and I slept fine. But it's that spin up of the brain, for me at least, that gets me all over the place, and I can't focus on things. And I usually end up at the end of the day not achieving much. So I try to cut back, and I try to be aware of like if I've in that state, or if I took enough coffee to get me that state and I need to back off or whatever. So now I'll drink like half a cup or something. But some of those mushroom coffee substitutes are actually pretty good. I mean, they don't taste as good as coffee, but close enough. And you don't get that spit. I don't get that spit up, at least. I've tried the nootropics and they work, in a pinch, but I think, like you said, you're better off just doing like some internal work and some meditation or whatever to calm your brain, instead of relying on those nootropics. I think nootropics can be a good like bridge if maybe you're kind of, I don't know, you're depressed or something like that, right? It can kind of maybe give you a little boost until you can do it yourself. But otherwise, yeah, I don't see any long-term uses with that. I'd be interested in hearing your thoughts on alcohol, though. Like what are you doing with alcohol? Do you still drink, not drink, or whatever?
Yeah, so in Australia, I'd be considered a non-drinker, but that's just because I don't, it depends on where the baseline is, right? Yeah. But I will occasionally. What I won't do is drink and trade.
Yeah,
that's a big the problem. The problem over here, like in Australia, what happened? I've done it before. I made the mistake where, like, I went out with some friends or whatever, came home. Okay, so the London session is raging, right? I'm coming home. The London session is raging. New York's or even New York's open if it's really late. And then I place trades, and then in the morning I come back and look at my account and go, what was I doing? You know what I mean? So
yeah.
I made that mistake. I mean, the last time I did that was probably like 2006 or back 2005 or 6. So I don't do that anymore, but I don't really drink that much either. I mean, they would say I'm a non-drinker, but I would drink. I would probably, okay, so here we are halfway through the year, right? So it's halfway through the year. So it's been 6 months. This year, I've probably had, 3 drinks, something like that. So yeah, I don't really think it really depends on what your goal is. If we're talking like trading wise, I think what we've been talking about, like nootropics or brainwave entrainment or meditation, something to help you focus, depending on what you need. Like what was interesting when you were talking about your experience with caffeine, that like I just kept thinking, yeah, that's like a classic reaction to what an introvert would do if they had caffeine, right? They would kind of get scattered, and you know what I mean? Like they would, you know what I'm saying? Like they would have all these things going on, and like, and I understand that too. Like I've been there. I found that routine sometimes helps. So like if you have this routine with your coffee where you're going to do this, like you kind of go down a checklist, that might help from straying away from that or whatever. But yeah, so my belief isn't that alcohol will necessarily be a detriment to your trading unless, of course, you're doing it and trading. But you know what I mean? Or,
Yeah.
like that's the big. Or like even over here, like if you had a big night, and okay, so if I have a big night here and I wake up late, like this time of year in the winter in Australia, which is the summer in the northern hemisphere, like my daily candles, they're at 7 a.m. they're on. That's it. It's a new daily candle at 7 a.m. So if I'm not up, like if I'm sleeping in or whatever because I drank too much last night, that, you know what I'm saying? Like that then I miss trades or whatever, right? Or get a bad fill or whatever. So in that way, it could impact it. But I don't really think that, just having the alcohol in your system. I don't know. What are your thoughts?
Yeah, I mean, I think it's totally up to the person, right? Like how they perform. But it's interesting because in the past maybe a couple of years, I've found that drinking beer really messes me up. Like even if I have a couple of beers, it's not a good thing in the morning. But like I'll drink, like I like whiskey, I like tequila, I like red wine, and I'll drink a little bit of that. And next morning I don't have hardly any effects. But yeah, it's kind of weird. But I don't drink that often anyway. And I found that on a day-to-day basis, it's kind of like it kind of messes up the signal, I guess you could say, like it from your brain to whatever. Like I'm a little slower. I'm not as quick. I'm not as focused. So on a day-to-day basis, it doesn't help. But yeah, so I've cut way back. I used to go to the store on a weekend and get a 6-pack of beer or whatever, but now I don't do that anymore. So,
right.
Yeah. That's what it is for me.
That would be like that would be common here where I live. I actually don't live that far away from what they call a bottle-o. Bottle-o is like a wine shop, whatever. Yeah, but yeah. So yeah, I mean it's interesting. It's like a lot of things in life you kind of learn over time, don't you?
Mm-hmm.
You learn over time. Okay, that was a bad. That was a bad choice. Okay, all right, Walter, we made a bad choice here, so we need to do this, right? So like you kind of just learn over like you've learned with beer and stuff. Like that's just kind of the way it works, isn't it? Like over time, you just kind of focus in on what's important, what works, what doesn't. It's like by the time you figure everything out, then you die. It's like, man, I had it right. I had it right.
What I found too is that I think a lot of the reason I drank was because I was stuffing these like negative emotions or memories or whatever, right? As I've done more of the inner work to release these emotions, like I don't need to stuff them anymore, so I don't need the alcohol. And I think a lot of people use alcohol for that. Like, at least it seems to me.
That's a really good point. Yeah. And it doesn't have to be alcohol; it could be anything. But yes,
whatever.
Yeah, that's right. Yeah. Good point. Yeah.
Okay, cool. Well, glad to get your opinions. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
The markets are not efficient. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I have this question. A trader asked me something. He said, if the markets are efficient, then how is it possible to make money trading? Okay, so that's the question. Now, my answer to that is the markets are not efficient. In fact, they rarely are efficient. And this idea is very common in academia. You will have these professors who do not trade, do not make money trading, and frankly, don't understand the markets, come up with all these equations about why the markets are efficient and why it's impossible to make any money, and that the price is just a random walk and this and that, all these theories, right? And I this is my belief. And I learned this from my mentor. Or one of my mentors, right? My belief is that the markets are rarely efficient. And you know why? Because we have people who have gobs and gobs of money. So what that means is those people probably went down one of two paths. Either they had information that wasn't widely available to everyone else. I'm talking about you, Nancy Pelosi's husband. Or, right, you guys know the story about how like the senators have outperformed all the hedge fund managers and stuff like that. Yeah. And Nancy Pelosi's husband's made this amazing track record. Actually, there's an app now where you can copy the trades of like the senator.
Oh yeah,
I thought that was brilliant. That was the coolest thing I've ever seen. Coolest app I've seen since the one that tells you when to go and do a pee in the middle of a movie. Like that was a cool app too. But anyway, the idea is that if the markets were efficient, then you would always pay the right price, right? Mm-hmm. The price that you paid at that point would be the right price. There'd be you wouldn't get any value, you wouldn't get any discount, or like nothing. It's just the right price, okay? If that were the case, it would be like nobody would be able to accumulate big piles of money, but some people are. So either they have information that other people don't have, or they're crunching the available information in a certain way, which is what indicators do on our charts, right? They crunch the available information, high, low, close, open, not open, close, high, low, all that stuff, right? In a certain way, and they analyze it in a dispassionate, non-emotional way, so that they can buy when they should and sell when they should, right? Mm-hmm. And away from emotions, away from fear and greed, right? So that's basically it. I mean, that's the way I see it, is that the markets are not efficient. If they were efficient, we wouldn't see billionaires. Like, that would be nearly impossible to come up with, right? Mm-hmm, mm-hmm. Because, like, think about it. Like, if you think about it in a broad sense, even like people who come up with really cool inventions like Velcro or whatever, if the markets were efficient, there would be a lot of people, many, many people coming up with the idea of Velcro at the same time. Mm-hmm. You know what I mean? Mm-hmm. I'm not sure, but I think I heard that Velcro came from the U.S. Defense Department, whether it was the Air Force or something like that. So, like, someone in there created it. That's what I heard. I don't know if that's true, but that's the idea. The idea is that if you have information that the broad market doesn't have, then there's an inefficiency there, and there's an ability for you to make money, right? Mm-hmm. So that's where stock tips come in, and people talk about that. Or if there's a way that you can take that information and quantitatively crunch it so that you get an edge, an advantage. And really, that's what technical trading is in many ways, is when we look at patterns, when we look at MACDs, stochastics, moving averages, whatever, RSI, you're just taking the information, you're crunching it in a certain way and trying to come up with really good decisions based on, that information. So to me, the markets are not efficient. If they were efficient, I wouldn't be a trader. Trading wouldn't really exist as a career, because it'd be nearly impossible to do anything. You'd just always be getting fair value. Mm-hmm. And so the problem is people get in the way. The emotions get in the way. People get really fearful and they get really greedy. And so there's this gap, and there's gaps in information. Like, for example, you may have been in a situation where you sold something, right? And you couldn't believe that someone paid you as much as they did for that thing. Maybe it was something you were going to throw away, mm-hmm. right? So for you, your perceived value of that was really low, but the person who bought it, like an old rusty bike that you're going to just throw away or whatever, or give away or something, leave it outside and hope someone takes it. That's what they do here in Australia. They just put it outside. They just put it outside their house and hope someone takes it, right? Like, people do that, right? Yeah. So, but if it's really valuable to the other person, they overpay for it. So as in a specific sense, if you're a trader, you love those people, right? These are the beginner traders who overpay or underpay. They overpay for the euro, and then you go in and take the other side. So these are the people that you're taking their money from their accounts and you're transferring it into your account, because they don't understand, right? Mm-hmm. So you need those, and those people need to learn those lessons. Either they need to learn to get out of trading, or need to learn how to trade properly, right? So that's how I look at it. And I'd be curious to hear your thoughts on that, because this is a really, a lot of people have strong opinions about whether or not the markets are efficient, or whether they're giving us, the prices are the real true prices or not.
Yeah. So two thoughts came to my mind. Number one, don't trust anything anybody says. And if somebody says something, look for evidence of the opposite. So like what you're saying is that look for evidence that traders make money in an inefficient market. And that's obviously true, because Wall Street would not exist if traders could not make money. So obviously that hypothesis is not true. The second thing is when you look at markets on the surface, like you said, it should be logical, right? This is in your best interest, so let's do this. But people are emotional, and you have to factor that in. And if people, like you said, don't have certain information, or they're in a certain situation where they can't do a certain thing because of something underlying, for example, like houses, right? Like I used to buy and sell houses. So people always wonder, a buddy asked me, why would somebody sell the house to you for way less than what they bought it for? Well, maybe they need to move. Maybe they are having a tough divorce and they just need the money. Maybe they like you and they want to deal with you instead of somebody else, right? So there are all these factors that can come into play. And a lot of that is emotional baggage, emotional connections. So same thing with trading. Like people can get emotionally attached to a stock. People are dispassionate and they don't get emotionally attached. So that's why they do better. But, all these things can come into play. So I think that this idea that the market is totally efficient is, of course, ridiculous. And you should evaluate every single idea on those premises of, is there evidence to the opposite? And what are the other factors that are involved with this transaction?
Yeah, it's true. And I was just thinking about something when you're saying that. When I sold my car when I left my country to come to Australia, and I knew that the price I put it at was low enough that I would sell it in a day. Mm-hmm. You know what I mean? Yeah. Like I kind of used that. I knew that the market would pay more for the truck, but I sold the truck at that price because what I wanted to do was drive the truck as much as I could until the day I had to leave. So I literally wanted to sell the car the day I had to leave. Mm-hmm. And I did it. And so what happened was I put the ad in the paper or whatever, and all these people called me. Like I got all these calls because no one could believe that price, right? And so I had all these lined up. I said, okay, you can come at 12. All right, you come at 12:30. You come at 1. I had all these calls lined up because I knew someone. And then, what happened was a guy called me and I said, I've got all these things booked out, to see the car. Do you want to come at 5? You know what I mean? Like the other 10 slots are booked out. And he goes, what time are you going to be there? I go at 12 at the park. He goes, I'll be there at 11:30. And then he bought the car. You know what I mean? Like he was the first one to see it and he bought it. And I said, look, I'm going to give, here's the pink slip or whatever, in a week, I'm going to, we'll make the transaction. Right. But you know what I mean? Like, it was like that. It was so funny. And then all these people called me and they were really upset at me. They're like yelling at me on my messages, saying, whoa, you're so rude. I can't believe you did this to me and stuff like that. So, but that is a great example of, understanding the market and like using that to your advantage. So by just like you were saying, like if your buddy's selling the house really cheaply and people are like, why would you do that? You're leaving money on the table. There's always reasons why, you know what I mean? Mm-hmm, mm-hmm. Either you're stupid and you don't understand the market, or it could be like you just want to drop it really quickly. And we understand that intuitively when we're selling things like couches and stuff, right? Or cars and stuff. But when you think about trading the markets, it's the same thing. We just have to keep that in mind, I guess. You know what I mean? Like that's the same thing that's going on. And I love what you said about it, because if you're thinking about what other traders are doing on the opposite side of your trade, then you're in a really good spot as a trader. Because there's two reasons. One is you understand that, what you believe may not be right. Okay, you may be wrong, all right, for a number of reasons. And being early is the same as being wrong, right? And the other thing is you're questioning so you understand what other people are seeing and what they're thinking, and then you're questioning whether or not what you believe is correct. And so you're trying to coordinate your theory with evidence, right? And I feel like that's what trading always is. You're taking the theory, which is, oh, the price should go up. And then the evidence comes in, another candlestick prints, another candlestick prints. And each of these are pieces of evidence that now you have to decide, can I assimilate that into my theory? Or is it blowing my theory out of the water? What's going on here, right?
Or am I going to fight it to the end?
Yeah, exactly. Exactly. Which is such a beginner mistake, isn't it? We've all been there. Yeah. I'm going to fight it to the end. Yeah. I'm going to move my stop because it's not going to hit it, that sort of thing. Yeah. It's so true.
All right, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I think starting with day trading just increases your chances of blowing your account out way faster.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I thought we could talk about personality types and which personality types should avoid short-term trading or day trading or scalping or whatever you want to call it. What do you think?
Okay, first of all, everybody. No, I think we're all kind of, if you think about in a broad sense, we're all kind of built to not do well. Just trading the markets full stop. I mean, you'd have to be a weird individual to be built, I think, to trade well, like out of the gate, right? And that's just because of our cognitive biases and the way that we operate in the world. But for your question, it's a very good question. I think it's impulse control. So if you look at, you can take a personality test. There's several of them out there, like the Big Five, or there's the Gardner's one where he has like different domains, like there's like interpersonal intelligence, athletic intelligence, like body. There's like mathematical and verbal, and there's all these different ways of looking at intelligence. But the one, if you can find a test has impulsiveness, that's what I would go with. I know there's a lot of talk among the people. I think it's called the 16PF. It's either no, it's not the 16PF. 16PF will have impulsiveness in it. So that's one you can take. And we can put a link in the show notes, but you can just search online for 16PF free personality test. And I think the Myers-Briggs is the one where it has like the 4 letters. Is that right? I believe that's the one. And there's some talk like INTJ is meant to be the best for traders. So there's a lot of talk about that, right? But your question is who should avoid it? And I would say, if you take like a 16PF or any personality test that has an impulsive scale on it, or even just an impulsiveness scale, that would be good too. You could find that as well. If you're high in impulsiveness, then you're really, you really need to fight against that, because day trading, our friend Adam actually talks about this, I think, at the London conference. Like, he was talking about how, my argument has always been start with the higher time frames and then maybe lower, go down as you get more experience as a trader. And it happens in slow motion, right? That's one of the advantages of trading. Like right now, I've got like 15 or 16 trades on the daily charts. Okay, and so it really does happen in slow motion. Like one day you'll be down 50 pips, the next day you're up 100, and you know what I mean? And like the targets are so far away, there's no telling what's going to happen. Like literally last night I went to sleep when it was before the New York Open, right? And I'm testing some stuff on 2 different accounts, and one account was basically break even, slightly down, and the other one was way up, right? But the trades hadn't cashed out because they're daily targets, right? And then I come back this morning, and the one that was way up was up still, but about half what it was when I went to bed. And then the one that was break even is now down. You know what I mean? It's like, and this is the kind of thing you go through with daily charts, because it's always such a slow motion thing. Whereas when you're scalping, it happens really quick, And you get, like Adam says, the advantage of that is you get almost instant feedback, near instant feedback on your performance, right? On how well you did with that trade. The disadvantage of that is that you can go after like revenge trading, and you start thinking, oh, I've lost 2 trades now, I really got to go in hard on my 3rd trade, or and that's the impulsive mind, right? That's the kind of trader who would do poorly with near instant feedback on your trades. So that's what I would recommend. I would recommend finding out where you are on the impulsiveness scale, and if you're high on impulsiveness, I would either don't trade or really work on patience and putting yourself through certain hoops like back testing and a checklist on your trades, and probably even trading the higher time frames. That's my opinion. What do you think? What are your thoughts?
Yeah, I mean, in talking to traders and working with traders over the years, I mean, I think that's the best advice. You just start on the higher time frames. And I think actually a very, very small percentage of traders are actually built or could, mold themselves into a short-term trader. I think that's a very small percentage of people. And I think a lot of people will do much better on the, like you said, daily or the 4-hour or even longer time frames, it's like if you're like an investor or whatever. And I think that day trading really does get to that part of us that flips the switch on like revenge trading and over trading and trying to get back at the market. And I think very few people are able to get that under control. So yeah, I would agree. Just start on the higher time frames, and then those concepts will filter down if you want to do day trading. But I think starting with day trading just increases your chances of blowing your account out way faster.
Yeah. And it's an interesting point that you said about investing being, like you were saying, even a higher time frame, like if you think of investing. And that's actually a really interesting way to look at it. Like if you look at investing is almost like really high time frame trading, right?
Mm-hmm.
In that sense, I think that's a really good way to look at it. I mean, in that sense, what you're saying is that I am not married to this position doing well immediately, right?
Mm-hmm.
So it's kind of like the same on the daily time frame, but maybe on the monthly or something or whatever, right? So if you're investing, and I actually that's a good way to look at it. Like I've been recently, with the way that the markets are right now, I feel like I'm missing an opportunity, if I don't start looking at depressed assets right now, like ones that I think are going to do well in 10 years or long, like a higher, like a longer term goal. And so, yeah, so I'm it's kind of what I'm doing, isn't it? Like I'm looking at, and that's what you'd be doing as a long-term investor, is you'd be looking at this idea of, okay, what's really cheap now? What's sort of almost like too cheap?
Mm-hmm.
And is that going to last like 10 years out from now? Like 10 years from now, am I going to look back and go, wow, I really should have bought this, and you never really know for sure, because this kind of gets into funny mentals and stuff like that. And people can, everyone has an opinion when it comes to this sort of stuff. But I do think that what you're saying is true. Like if you think about, like if you're a daily chart trader, just stretch that out to like monthly or something. And that's kind of what investing is. Like, so for example, if I'm a daily chart trader, I want to give my trade, like say I take a trade today, and I want to give my trade at least 2 days before I can like reassess. So 2 more daily candles before I kind of reassess what's going on with with this trade, this individual trade. And if you think about like as an investor, you might be looking at 2 months, right? You might be taking the trade this month, and then 2 months from now you can come back and reassess and go, okay, how am I doing here? that sort of thing. I think it's and the other good thing about the longer term goals, which are inherent in investing, is there's less pressure. Think about trading the 1 minute chart. That's like max pressure versus investing. It's such low pressure. I mean, that's why like these guys like Warren Buffett and Charlie Munger, they can do this for so long because, I mean, really all they're trying to do is identify where the market's obviously wrong, right? Like they're wrong about this asset, so we're going to buy it, and then the market will later figure it out, and then at that stage we'll have some profits, right? Like that's really all they're doing in a broad sense, I would say. I mean, it's oversimplification, but that's really kind of what they're doing. I know they look at balance sheets and all that stuff, but it's really interesting that you say that, because I think that that's a really good way for traders to look at investing is sort of like higher time frame trading, you know? Yeah.
And that brings up a good point too, that some people are kind of just built to see the value on a certain time frame, right? Like, so I know this one guy, he's really good at scalping, but so he's really good at seeing that, okay, this is a good opportunity within the next 2 seconds or whatever. He takes it and then he's out. Whereas a person who has a longer term view would be able to see the value 10 years down the line. Oh, this company is going to do well 10 years down the line. And like in the last downturn, I bought like Citibank, right, at $1, but I didn't have that long term time frame. So I sold it quickly and I made, whatever, 300%. But had I kept it, I don't know what it's at right now, but it split several times along the way. And I didn't have that long-term view of it. And if I had that long-term view, I would have made way more money. So I think that it really is all about, number one, like check what time frame makes sense to you and where you can see value. And number two, can you expand that scope and maybe go longer, go shorter? And a lot of people won't be good at all of it, but maybe you have 1 or 2 timeframes that are good for you. So I think it really is about the perspective and like how you see time.
Yeah, definitely. I agree. I mean, you like our friend Colin, his best trade ever was when he took a trade at the beginning of the summer and he forgot about it. And then he came back. I'll never forget that story when he told me that. He's like, yeah, I had a pretty good summer, he's a but because he wasn't trading, right? So he's like he wasn't really looking at the charts. And then he came back like in September. He's like, oh, I forgot about that trade, and it was like massive profit. It's so funny. And I heard about this guy, or I think I saw a video of this guy talking about how he bought Netflix at $5, right? And I think it's I don't know what it is, $500 an hour or something like that, $400. And then he said like a couple of weeks later he sold it at 4 to book his tax loss. So he wanted a loss so he could write off his taxes, and he never bought back in. So now it's like at $400-$500, and he's like, well, got my tax loss, don't have any profit, So it's funny, but like it's just the patience is so useful, isn't it? I mean, and I mean that's what Buffett said, right? Warren Buffett said the markets are an instrument for removing money from the impatient and giving it to the patient, or something like that. So I'm paraphrasing, but yeah, it's so true though. It is so true, and on every time frame. Like you can be patient as a 1 minute trader or 1 minute chart trader. You can be patient. You can have you have a target, you get out, but you hold on to a percentage, like a half of that position, and you trail it, and you see that one 5 pip profit on the first half of the position, and then you have another 25 pip profit on the remaining part. That's by being patient and not taking profits in 3 minutes, but having to wait 35 minutes for it to unfold and for your trailing exit to kick you out at 25 pips. That's the kind of thing that we're talking about here. It doesn't really, it applies to all different types of trading, whether it's investing or 1 minute trading or whatever. Yeah, but it's so true.
Yeah, totally. All right, cool. Thanks, Walter.
Okay. See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Do you ever think you're going to get addicted to that? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you say to people who, I mean, you obviously don't have this problem that much anymore, but in the past, there may have been people who kind of trash talk trading and saying, oh, that doesn't work or whatever. So what would you tell them?
That's funny you say that. I was actually thinking about this earlier today. I was thinking about like how you can tell a lot about where someone's at by what they say, basically.
Yeah.
Like so for example, and I was thinking about like sometimes you'll see like people post nasty comments on YouTube or whatever, and I often think like where is this coming from? Like, where do you know what I mean? Like,
What's
it's kind of
yeah.
what's behind that? I mean, I think it's pretty obvious and easy to see. I don't like to get into those kinds of fights and things, but I think it's kind of interesting that because it's sort of the same thing. I almost feel like with what you're talking about, it's a little bit different. So if you're more of a public figure like you are in trading, like you can attract attention and detractors and things like that. Okay, and that's one thing. And I think everyone can kind of, with a little bit of thinking, figure out where that's coming from.
Yeah.
Pretty simple, whatever. If people want to spend energy on that, whatever. But what you're talking about is a little bit different, which is like people in your circle, I believe, like in your life, were basically saying, why are you doing this? This is a waste or whatever. And I'll never forget, I was, when I first moved to Australia, I sold everything in the US. I went to Australia, and I had one friend that I knew in Australia, and I convinced him to move from Melbourne to Sydney and basically become roommates, because I wasn't sure if I was going to be able to make rent. And his sister came up to visit him, right? And she was like, she saw me, and I was sitting in this, like they're called Adirondack chairs, and these chairs that are like made out of wood. And they're from the Adirondack Mountains, and they're really famous, but they have kind of like this, they're made out of wood, and they have this big armrests, and they have like kind of like arching footrest that you can put. Anyway, I had one of these set up, and I had my computer set up like in the kitchen or whatever. And she watched me, and it was like late at night. I was watching the London session, and she was like watching me at the computer, and she goes, do you ever think you're going to get addicted to that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And I was like, and I got really defensive, I was like, oh no, I never, no, this is investing and blah, 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 and all this stuff, I was like, all this, you know what I mean? And I was thinking, but she was right, you know what I mean? And that's what can happen when people kind of like try and drag you down and say, hey, like you've been doing this for 4 years, it's not working. Why do you keep doing this? Like, don't you want to just, try something else? Like, let's go flip some houses or whatever, like it's on TV, everyone's doing it, or whatever. Like, but I don't blame those people when they say that, because I actually think a lot of it comes from our programming. So we've been taught that there's certain things, that like you do this, you get a job, you save your money, you put in an investment, a retirement account, and that, stocks is a sure thing, that's like wild speculation, that currency trading stuff. And so I understand that, like why people say that. And I don't actually fault people when they try and detract and say that like tell you as a trader, like I don't know if you should be doing this. Because I think it comes from a good place. I just think that in their minds, they're trying to they're trying to help you. They want to pull you out of this, like that. Like my roommate's sister, who said, hey, do you think you ever get addicted to that? That was coming from a good place, you know what I mean? Like, she wanted to help me. And so, to me, that's okay. I think the issue though is that it affects you as a trader. So if your wife thinks that you aren't going to be able to pull it off, you get that. Even if she doesn't say it, she doesn't even have to say it. Like, you know what she thinks about it. You know what I mean? So that's kind of the tricky part. And so I think sometimes what you can do is you can leverage that. You can go, well, what if I understand what you're thinking and I understand where you're coming from. What if I showed you what I'm doing? And you know, we can, and basically you're like, your wife or whoever the person is, your significant person in your life is like the one who's concerned. Maybe you bring them in and show them your plan, right? That forces a couple of things. It forces you to be accountable, right? And to show that you're actually sticking to your system, kind of like a trading accountability partner. And two, it forces you to come up with a plan. Most people don't, most people don't have either. They don't have a plan, and they don't have anyone to be accountable to as a trader. And that's the issue. And so, and so if you can map it out, and when I say a plan, I don't mean like a 12-month plan. I mean like a 5-10 year plan, saying, okay, we're going to do this, and then when this happens, I'm going to do this, and then I'm going to do that. And you want to give, you know what I mean? And so you're kind of like, they're on your team now. And so they can cheer you on, and every week you can say, look, this is, you know what my strategy is. You see my back testing numbers. This is what happened this week. This is why I think, this is why, you know what I mean? So it's more about empowering that person, instead of what the natural instinct is to brush them off, like I did with that my friend's sister, who was like, are you going to get addicted to that? I just kind of immediately got defensive. So I think you can kind of flip it, and it's better for all parties in that way. But I don't know. I mean, that's the best thing I can come up with, because I know traders that have had that issue, that say, look, my wife doesn't think I'm going to, she's got no faith in me. What do I do? And so the best thing I can think of is to leverage it that way. I mean, I was really lucky because I was single when I was trying to figure out trading. So I didn't really have anyone to, you know what I mean? Like, I didn't really have anyone to just friends and stuff. And they were all, I had a friend who was actually really good at it. So that kind of gave me hope and stuff. So so I don't know. I mean, it's a tricky thing. I mean, have you run into that in the past?
No, I've been pretty lucky also. Like, I haven't had to deal with that so much. And if I did, it was like online stuff, right? So you can just kind of ignore them or whatever. But but I think it stings also a lot sometimes, because there's an ounce of truth in there, right? Like, this might be addictive. So, you might, so you think about it and you're like, oh, maybe I shouldn't be doing this. But then, I think you're right. At the end of the day, I came to that conclusion also. Either you bring them in, or you don't talk about it around them. And then just, because you're hanging out with that person for a reason. So go hang out with them for another reason, and just don't bring the trading into the relationship, right? So
yeah, that's a great point. It's, it's funny how people who are close to you feel like that, they have a license to give you advice. Like, it's one thing to ask, right? You can ask, but you can also, you can ask and say, I know people, and I'm not, people that have gone and sunk a lot of money into mortgages and done things that I thought, just looking at the charts, just looking at the housing charts is a bad idea. But I never ever say, hey man, are you sure you're not over leveraged on that? Or are you worried about the fact that money is free now and everyone's got a lot of money? Do you not think that there's an everything bubble going on here? So I don't say that. And if I'm asked, I will tell, but I don't want to be that guy. You know what I mean?
No, same here. Yeah. I used to do that a lot when I was younger. I'm like, and then when I got the other end of that, I'm like, okay, not so cool. So stop doing that. Right?
Yeah. I think that's safe. Yeah.
Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
Right now I have a bunch of trades on, right? And one of them doesn't look good. It looks like it's probably going to get stopped out. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter. So I'd be interested to find out what goes through your mind as soon as you lose a trade.
Well, that's a good question, right? Like, other than the usual, damn. I think my perspective's changed over the years, I suppose. Like, I read once a trader who wrote something that I respect this trader, but I totally disagree. And he said that every time you have a losing trade, I truly believe the markets are trying to tell you something. Like, there's a lesson there. I can see that angle. Like, I can see where you would say that, but I disagree.
Yeah.
I don't think so. I think, like, it's like, if you think about it, like genetics, like it's kind of like genetics. Like, some of your genetics, you're probably happy about, like the hand you were dealt with, the dice that came out in terms of your DNA. And then some of them you're probably not so happy with. And I think of the same with trading systems. So the number one thing I want to make sure of when I have a losing trade is that I did the right thing. By taking the signal. You know what I mean? And obviously, I don't have this problem anymore. I used to have the problem of moving my stops. So I ended up with a different trade. So I had a trade where I was risking 2%, for example. And then because it got so close to my stop, I'd move my stop. And then I ended up risking 3, 4, 5% on the trade because I wanted to be right. So I don't do that anymore. And then I kind of swung the other way where, as soon as the trade kind of went against me, like 50, 60, 70%, I would bail out of those. And I found out that my testing had shown that it's actually more profitable to let it ride. So that's kind of how I trade now, is I let it ride. But the number one thing I want to make sure of when I have a losing trade is that I didn't fail in the execution. That's really it. Because that still can happen, right? Like, you get in late, or you take a signal that's not really that good, or, those sorts of things. I'm sure you've had experience with those as well.
Yeah. I mean, that's the number one thing I look for. Like, I go to the journal it, take a look at the before and after screenshot. 9 times out of 10, it's going to either be like a 1, or, like it was a poor trade, a poor entry, or it's going to be a 4, like an excellent entry. So even if I have a losing week and I have like 2 or 3 1s there, I'm like, I'm okay, because those are just poor trades, so I can improve on something. But if I'm losing and they're all 4s, then there's something to look at, right?
That's right. I mean, I think you've nailed it. That's where I think the major gains are made in trading, is by just keeping your eye on the ball, which is execution. I really do believe that.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
The other thing I wanted to say was, like, for right now, I have a bunch of trades on, right? And one of them doesn't look good. It looks like it's probably going to get stopped out, okay? And I think I have 5 on right now. So I was looking at this morning, actually, thinking about, like, what did I... And, like, all the other ones look fine. It's just this one,
Yeah.
And people would probably call them correlated too. Like, people would say, why are you selling the Aussie Swiss and the New Zealand Swiss and the Aussie dollar and the Kiwi dollar? Well, actually, it's not, obviously, because one of them's probably going to get stopped out. Maybe it already has stopped out while we're sitting here. And the other ones don't look like they're really going to get stopped out. So, you know what I mean? Like, I always consider them to be independent. And so as long as my execution is right, I feel like I'm doing the right thing. And I don't necessarily think that, like, I missed out on a lesson. Like, I didn't see something that the market was trying to show me. I think that's the road to over optimization, and I think that's dangerous. So
yeah. When I first started, also, that's a good point. Like, I would think that every losing trade had a problem, so I would, like, beat myself up over the losing trades. And if I didn't really look at it closely, but if I went back to it, probably 50-60% of them were good trades, but I was just beating myself up over a loss. And it was, I wasn't there to learn anything. It's just a losing trade.
Yeah. And that's because when we first start out, I believe when we first start out, our self-esteem, like our trader self-esteem, comes from our win rate, right? And what I'm trying to say is I'm trying to shift that to execution. I want my self-esteem, my trader self-esteem, my confidence to come from how far am I straying from the optimal execution point, And so that's a different focus, right? And if you look at the free forums, like all the free factory forums, they're always like, it's almost always about win rate, and it's everything is about, this is a high win rate, this is a great system. It's like, they're not really, in my estimation, they're not really zooming in on the thing that's going to help them the most. I think if you stick with it long enough, you'll get it, but it's just a bit tricky in the beginning.
Yeah, for sure. Cool. All right, thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I don't really do any trading early in the morning. It's more about just babysitting the charts, making sure that, everything's going well. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I'd be interested to hear about your morning routine if you have one.
Sure, yeah. So what I like to do in the morning is first I will wake up and I will go and see if the kids are living. And they're not beating up on each other or anything like that. As we're recording this, we're in Australia, we're kind of like on lockdown or whatever, like most places in the world. Yeah, so just making sure that they're all right, that they're fed and they're happy and stuff. Then what I'll typically do is I'll go and look at my charts. So where I live in Australia, the daily candles, the 5 p.m. New York time daily candles, they kind of shift over in the morning. Depends on the time of year. Sometimes it's 9 a.m., like in the summers down here, which is the winters in the northern hemisphere. And right now, which we're going into winter, it's autumn now in Australia. So it's actually earlier at 7 a.m. So all I really want to do when I check the charts is I want to make sure that nothing crazy happened. So I'll check the charts, make sure that nothing crazy happened. So there's two ways to look at it. So in the morning, if I have a trade, I will check the trades, right?
Mm-hmm, yeah.
If I don't have a trade, I will scan the markets that are on my watch list, and I have like a method of highlighting those pairs, and I will see how they're looking, right? Mm-hmm. And that's basically it. And later on in the day, what I'll do is I listen to my hypnosis and I listen to my brainwave entrainment. And I will usually do that if I'm doing any sort of back testing or if I'm actually entering my orders. I usually enter my orders. So the Asian session, I'll be 9 a.m., 8 a.m., around there, London time. And again, that shifts depending on the time of year. But that's when I will kind of like do my, quote, trading routine where I put my brainwave entrainment on. Sometime during the day, I try to find 25 minutes to do my hypnosis. If I'm back testing, I definitely do brainwave entrainment before doing my back testing. So that's more of my routine for back testing. I feel like traders need to be really careful and vigilant with their back testing. So I try and treat it as much like a trade taking process as my normal. So I don't really do any trading early in the morning. It's more about just babysitting the charts, making sure that, everything's going well. Like if I have my trailing exits activated, just making sure that the virtual private server, the VPS, are actually like on, because sometimes they'll reset and you have to turn on your MetaTrader and all that all over again, like just to make sure that it's on. But that's basically it. I don't really do any trading early in the morning. I do more just checking, and then it's for me where I live, because I want my trades to get kicked in during London or New York. It's actually kind of later in the day where I do my major trade, which is basically when the kids are having dinner. So it's really, it works out well. I can kind of duck off and go and do my stuff. Yeah.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
What about you? What's your method?
For me, it's get up in the morning, take a shower. I do the cold shower thing. After that, do a little meditation, and then check the charts. For me, it's a little bit different because you're just coming out of New York in the morning for us. Yes, same thing. It's more like, do I move my stops to break even if something hit? Is the EA or the management working right? Stuff like that. And then kind of go along with my day. And then towards like at night, then look at trades and look for potential like setups and stuff like that. So
yeah. I often think like if I lived in the States, it's so hard. Like the West Coast is such a hard time zone because
I think it's the toughest one.
It really is. Like I can't get around it. Like I would almost want to live in the Virgin Islands or like the Eastern. I used to live close to the easternmost point, or I would get up early. See, the thing is, I really like getting kicked in during London, though. That's the thing. So really, you have a couple of choices if you live on the West Coast. If you live on the East Coast, you can just get up early, and you're probably going to be okay. Like get up at 5 a.m., 4:30, 5 a.m. Just kind of live on that kind of schedule, and you'll probably be fine. Yeah. But if on the West Coast, I almost think this is what I ended up doing when I lived on the West Coast of the U.S. is I would just kind of stay up late as I could to put my orders in around midnight, 1 a.m., and then go to sleep then. You know what I'm saying?
Yeah.
So that's how I do it. So if you're trading the daily charts, it's pretty, like, I just don't want to be triggered during Asia. That's the biggest thing I'm worried about.
Yeah.
So I try and wait as long as I can through Asia. But yeah, I mean, it's what you want. It depends on what you want to do, I guess.
Yeah, what you make of it, right? Yeah.
Exactly. Yeah. And your style too. Like, for example, look, if I were a reversion to the mean trader, I like to trade a lot of breakouts and trends. But if I was more of a reversion to the mean trader, I would actually probably just trade like, and so I was trading lower time frames. So I would probably just trade like New York Open, or I would trade like Asian session even, or Fridays, you know, when you get like a Friday retracement, which is pretty consistent. Like, that's what I would probably do. You know, that would be, in some ways, that would be easier. Like, if that was my bread and butter, you know, reversion of the mean, I could actually, because the good news about that is they happen so like predictable. Like, you know, a lot of times when New York comes in, it's going to revert, or when London comes in, it's going to revert, or when New York closes, it's going to revert. Like, there's this typical times where, you know, Fridays, you know, end of the week, it's going to revert. Like, it's really Asia, almost always, not always, but a lot of times it's going to kind of drift one way and revert, you know? So in some ways, that's kind of I wish I had that mindset where I wanted to trade that way, because it's kind of like it's good if you're time poor. Like, you can set aside certain blocks and go, okay, well, you know, this is when it should happen, right?
Yeah. That's true. Yeah, I do the same thing. I stay up till like 1 or 2 and then put the trades in. But even Hawaii was better.
Yeah, even Hawaii. Exactly. Even Hawaii is better. Yeah. I actually think if I had to choose, I would say the best time zone would be like Thailand, Indonesia over there, because what happens is there, London, it starts kind of in the afternoon there, like, you know, like 3 p.m. or 2 p.m. Like, that's pretty cool, because you can see London open, and then later on in the evening you can see New York open. It's just like, that would be the best. Yeah, that would be the best. Like, Thailand, Indonesia, right around there. You know, you could live in Bali, get a big fat house for like nothing.
Yeah, exactly.
Yeah.
All right, cool. Well, thanks for sharing.
Thanks.
All right. All information in this podcast is for educational and informational purposes only, and is not trading or investment advice. I recently stopped watching Netflix. I realized the programming was a lot of gloom and doom and, you know, end of the world kind of stuff.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, let's talk a little bit about the media and that effect it can have on your mindset.
So for me, the biggest thing about the media is that the guys that you listen to on those business channels who talk about the markets and stuff, at least half of them are wrong. And sometimes, and sometimes more than half. Like, you know, you have situations like, especially where there's a roaring bubble or something. It's really hard to find the dissenters. Like, they're very few, and sometimes they don't get any airplay. Peter Schiff comes to mind. So people who followed Peter Schiff would know, you know, he was one of the lone voices, you know, in 2006, 2007, saying that the housing market was going to crash in the US. And he was literally laughed off the TV. Like, all the other guests thought you were an idiot, like literally. And he ended up being right, of course. And so, you know, I think it's easy to read newspapers or like The Economist or, you know, whatever, Sky News or CNBC in the States or whatever it is in your country. Like, it's easy to kind of get locked into that. And I think that's a mistake. Even, I mean, FX Street is interesting because at least at FX Street, they have multiple points of view. Like, in other words, like fundamental points of view and technical points of view, which is I think really good. Usually when you're looking at the TV, you're only going to get the fundamental point of view. And that's why when I talk to people about trading that don't know anything about it, they often go, wow, how do you keep on track of all the world events and stuff like that? Like, they always talk about that because they assume that's what it is.
Yeah.
And that isn't really necessarily the case for a lot of retail traders who are technical, like I am and you are, you know? So, so I think the problem with that is the social proof. Like you get into following that cognitive bias called social proof, and you guys can look that up. But essentially, you know, following what everyone else does.
Yeah.
And I think that's the issue with the media. For me, like that's the biggest one, is that you can kind of get sucked into that mindset. Well, you know, if everyone says the euro is going up on TV, it's going up, right? Like there's all these reasons why, or yeah, it has to go up, or you know, oil has to go up. You know, it's almost at zero or whatever. Yeah. So.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. I mean, I guess I can't fault a lot of traders for doing that, because when you're starting out, you kind of need that frame of reference, right? It's something to look at. But yeah, definitely can affect. And you never know what the agendas are behind some of those tips or whatever, right? So
yeah, that's a good point. Like in Australia, the number one advertiser in Australia in all the papers, all the newspapers and stuff, it's the real estate market. So the local newspapers, they're reticent to talk about anything in terms of like a bubble or anything like that, because that's their livelihood, right? They literally make their money. Like if it weren't for real estate agents advertising, I don't see how they would exist. Like it's just crazy. So these newspapers, you have to keep that in mind. Like where are they getting their money from? And you know, the same thing. Like every time you see someone on CNBC or whatever on those business channels, you know, a lot of times they're fund managers, right? And that's why I think they're supposed to disclose, right? They're supposed to disclose like, oh, I don't hold any positions of United Airlines or you know, or whatever. Yeah, because you know they know that they can kind of sway opinion. Which is crazy when you think about it. Like these they can sway opinion just by a 15-minute presentation on TV and a quick little 5-question interview, and like all of a sudden that changes, you know, the demand for a stock or something like that. So it's
that is crazy.
It's pretty crazy, really. Yeah.
Maybe we can take it one step further. Also, like I recently stopped watching Netflix. I realized the programming was a lot of gloom and doom and, you know, end of the world kind of stuff. So what do you think about that? Like just the overall general media?
Yeah, it's so funny you say that. You know, I have a friend from high school, and she's like an exec at Netflix, and she posted something on her Facebook, and I'm like, dude, what is that? Like what? And she's like, oh, she was at Nickelodeon, and then she jumped ship to Netflix, and she's like, oh, that's like a show on Nickelodeon. I'm like, oh, like it was the character, like a cartoon character or something. I'm like, but someone drew it on the ground or something, or like in concrete or something, like wet concrete or something. I'm like, dude, what is that? It looks like a dead horse or something. And she's like, no, that's like a cartoon that I worked on at Nickelodeon before I went to Netflix. And it's interesting because I think if you follow the money and see where, like who owns what, it's really interesting to see. Like there's some really good books on this. Maybe we can post them in the show notes. But some really good book. Yeah, they're really, really good books on which corporations own which. It's a kind of a giant shell game, and you can kind of see like what the agenda is. Like what would happen if you become fearful of a certain thing? What are people likely to do? What are they likely to buy? What are they likely to seek? You know, all those sorts of things. And we know, for example, like if you blast a headline on the internet or on a newspaper that says something really great, you know, like, oh, amazing, you know, girl who lost legs can walk again with bionic legs, right? You put that on there versus, you know, girl dies in a tragic car accident last night and her family's so sad. Like, you know what I mean? They know which one is going to get more eyeballs on it. They know that it's the gloom and doom, right? And it's so interesting. Like the people that I know who don't spend a lot of time, and I don't watch TV. I would say though that it's hard, even when you're on the internet a lot, it's hard to kind of switch off that news sometimes because it kind of comes into your face. Like they make it really easy. So yeah, that's difficult. But the people I know who don't spend a lot of time watching TV, like they seem happier. You know what I mean? Like it's obvious.
I noticed that too. Like I stopped watching for a week and then I watched for a week and then I was noticeably like a little bit not depressed, but just like not as happy.
Yeah, it's so weird. It's like they need it. They need that fear to make you pay attention. Like fear makes you pay attention more than and I mean I think that's kind of how we're wired. I don't fault them because that they do that, because if you think about it, like, when do you really want to get healthy? Well, when you have a health scare, right? Like, people don't walk around going, oh, I don't want to get fat. I don't want to get fat. I don't want to get fat. Or I don't want to get heart disease. I don't want to get heart disease. I don't want to get heart disease. What happens is they get a scare and the doctor says, dude, you got to lose 20 pounds or something happens to your heart or whatever. And then you're like, holy crap, I need to get healthy. Like, it's always you know what I mean? Like, your doctor gets paid when you're sick, right? Doctor doesn't get paid when you're healthy, sort of thing. So yeah, I think that's kind of how we're wired. We just think that things are going to keep going the way they are until something scares us. And that kind of shocks us out of our sleep. And we go, whoa, what's going on here? We have to pay attention to that. And I think it's kind of inbuilt the way the way we're wired.
Yeah, that's true. And that's what sells. So, that's what keeps them in business or whatever. So I get that too. Yeah. All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Holy crap, this guy made $7,000 yesterday, before he ate breakfast. and the reason why he did that is because it's all demo. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, today we could talk about performance envy.